many CEOs in Davos who were talking about how they're using some of these closed source advanced frontier models like an OpenAI, like the stuff from Anthropic, playing around with it, and then going and trying to replicate as much as they can using Llama, which is created by Meta. But by the way, Meta's not making money doing this because that's an open source model. And so long term, if it becomes an open source business, there's some economic issues there. But the second piece, which is even bigger, I think, is the idea that DeepSeek works on this laptop right here. The processing isn't in the cloud the way you're talking about. It could be, but it doesn't have to be. And that is a fundamental change. The amount of processing power required to actually operate these things may not require necessarily, you will still need, I'm not saying you're not going to need any data centers at all, but the sense that you're going to necessarily need massive data centers the way we've been talking about could actually get upended, no?
No.
Well, I mean, so maybe you don't go to 10,000 data centers here in the United States, although I still believe that to be the case by 2030. So let's cut that number in half. You still need them, number one. Number two, we don't even know about the security aspect for DeepSeek, right? And open source models in general. So that's a big thing. And I just don't think you're going to see big Fortune 500 companies going to use DeepSeek because of what I just mentioned, the security piece of it all. So let's come back to the other piece is the hyperscalers are going to spend $270 billion this year, up 41% on AI. Okay, let's scale that back as well, but it's not going to go to zero. And I would totally believe what the CEO of Microsoft said in terms of, okay, if it becomes a commodity, then we don't spend as much, okay, but the demand will still be there. The demand may well offset the price decline. So, I mean, I still think there's just so many questions.
Right. Stephanie, here's the thing.
You don't have to jump it today.
Right. I agree on a lot of what you're saying. I just want to say on the security piece, what's so interesting about it is, unlike a TikTok, which is a closed model, obviously with its own algo controlled by a company that's based in China, when you're an open sourced product, you can actually see the entire science of it, and you can run it locally, as I said, on your laptop, literally. And so when people say, well, there's going to be security concerns, they almost are ameliorated very quickly insofar as because it's open source, you can see everything that's going on. It doesn't have to be operated in the cloud sitting in Beijing somewhere. So, and even if you decide that the world isn't going to use DeepSeek for whatever reason, to not believe that others are not going to be able to replicate DeepSeek now that we understand it and it's open source, within months from now, I think is a big miss. I think we are at a moment where clearly, whether it's DeepSeek or somebody creating a new version of DeepSeek in an open source model, I think it raises profound questions about the whole situation.
Well, I mean, you make very good points, Andrew, and it's hard to argue in terms of the replication of it, the speed of which, I mean, the fact that DeepSeek took them such a short period of time to build it is really pretty remarkable. So I definitely give you that, and the competition and those that, again, will replicate it. I think it will take time. In the meantime, I don't think the hyperscalers are just going to sit back and let this happen and not figure out their own competitive sources as well. So I just think that there are a lot of moving parts at this point in time. I don't necessarily think this is all of a sudden going to go from a $250, $350 billion total addressable market today to zero, which I don't believe that at all. But that's not to say, from a stock point of view, from an investment point of view, that you run in and jump in today and buy these stocks. I think you pick your spots and you pick where you can have a diversified revenue stream, not necessarily a pure play in terms of AI.
Stephanie, it's a big morning. There's a lot of questions, and it's going to take us a while to sort out what the real answers are. Thank you. Appreciate it.
Thanks.
You bet. Meantime, it is just about 7 a.m. What are we at? 7:05 a.m. On the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross-Sorkin, along with Becky Quick. Joe is off today, but boy, do we have a lot going on, as we mentioned. And Martin Brennan's here. So that's great news for us, because an activist investor is now going after U.S. steel, and that is very, very dangerous. What's happening?
Yeah, so this is all happening right now in real time. More drama with it, more questions about the future of U.S. Steel. Shareholder and activist investor Ancora releasing a 12-page letter to the board announcing it has nominated a majority slate of 9 candidates and is calling for the ouster of U.S. Steel CEO David Burritt. Now, Ancora is putting forward for CEO Alan Kestenbaum, who most recently was the CEO of Stelco, which was sold to Cleveland Cliffs last year. In the letter, Ancora calling on the steelmaker to abandon its deal with Nippon Steel, collect the $565 million breakup fee. This is a deal that, as we know, was blocked by President Biden, is now going through the court process. The investor asserts Burritt, quote, prioritized deal advocacy at the expense of financial and operational performance, since he collectively stood to gain $100 million from that sale going through. And Ancora says its slate's, quote, foremost priority is pursuing a public market turnaround of U.S. Steel, not trying to solicit alternative bids and sell the company. That statement may be what's actually sending shares of U.S. Steel lower, down about 1% right now in pre-market on this news. Now, U.S. Steel already out with a response saying, among other things, that, quote, we remain confident that our partnership with Nippon Steel is the best deal for American steel, American jobs, American communities, and American supply chains. Breaking down the details of the deal, U.S. Steel's partnership, quote unquote, with Nippon Steel is the only path that enables the necessary know-how, technology, and investments to secure the future of U.S. Steel. Now, the company is also claiming Ancora's interests are not aligned with shareholders, that U.S. Steel is, quote, also concerned about the motivations behind these nominations, given Ancora's and Kestenbaum's recent dealings with failed bidder Cleveland Cliffs. It's a small industry, right? Cleveland Cliffs has not been shy about its interest in U.S. Steel. CNBC reported just earlier this month that it may partner with Nucor for a bid. As for Ancora, $10 billion firm, it's known for campaigns in Norfolk Southern, RB Global, and Berry Global, among others. U.S. Steel disclosing that Ancora has a less than 0.2% stake in the company. Ancora already batting that down, saying, hey, you gave us a tight deadline for a nominee, and we're amassing a meaningful stake as we speak. So let's let the drama unfold here.
You have seen activist investors with very small percentages that have been successful, rarely in the past, but against ExxonMobil, there was the case where that situation played out, and they were successful in going through with it. There are so many accusations about how every side is compromised in this, from the management side to the activist investors. And what are they saying? That they were involved with Cleveland Cliffs people?
Yes, so, and let me just also say that later today we are going to have Alan Kestenbaum, who is the CEO nominee by Ancora on Closing Bell Overtime exclusively. So we're going to dig into all of this further with him. But Kestenbaum actually took over the Stelco assets, which are former U.S. Steel assets up in Canada, turned that company around, and then sold it last year to Cleveland Cliffs.
Okay. But they are saying up front that they're not looking to renew a bid with Cleveland Cliffs or with anybody else.
They were very clear. They're like, it's front and center, first page of this letter. This is about them being about a turnaround and keeping U.S. Steel as a public company.
The biggest issue with U.S. Steel and with the deal from Nippon has been that they're kind of appealing to President Trump, the incoming administration, saying, we know that he campaigned against it on the campaign trail, but we think he's a business. I mean, the CEO of U.S. Steel has said that he thinks he's a businessman and he can appeal to him with the logic for the deal. So that's kind of a long shot anyway.
It's a long shot. You got basically a 6-month extension by CFIUS to not enforce an executive order that was put in place by Biden, so this can all go through the court process. Also worth noting, in addition to suing the U.S. government, Nippon and U.S. Steel, they are suing Cleveland Cliffs and the union, the head of the union as well, because to your point, all of the back and forth and sort of allegations of conflicts of interest and drama that this deal has elicited. Obviously, Japan, key strategic ally of the U.S., the fact that that the question was raised and the deal was blocked by the former president on national security grounds has raised questions, which is why I think this is even going through the court process, not to mention the fact that with the structure of the deal, it would have stayed a wholly owned U.S. subsidiary, and U.S. Steel, bottom line, end of the day, is in need of some sort of turnaround. It is in need of an injection of cash to update its processes for making steel. And that, I think, is why all of this has become such a big battleground. Because you're talking about, right, a very famous, quintessential, 124-year-old American company that has assets that need to be invested in and looked at perhaps a little bit differently, and everybody wants a piece at it. everybody's looking to do it a little bit differently. But this is all going to play out here over coming weeks and coming months. So we're not anywhere near the end of this. We may not be near the end of this until summertime.
So there's a lot of rancor that's involved with this, which is almost a jumble for Ancora with an extra A. We'll be looking forward to this interview that's coming up later today. Morgan, thank you.
Thank you.
All right, let's get a check on the futures this morning. You are seeing a pretty broad sell-off that's really focused in the technology sector. We're off our worst levels of the morning, though. The NASDAQ was indicated off by about 1,000 points earlier. Now it's indicated down by 850. Dow's off by 427 points. And the S&P 500 is indicated down by about 142. Let's get over to Dom Chu. He's got a look at this morning's pre-market movers, and there are a lot to the downside, Dom.
Yeah, and it's mostly technology focused, mostly AI focused. So let's start with those major tech stocks moving lower as Chinese AI startup DeepSeek releases a new open source language model that claims to beat out even OpenAI, and DeepSeek's AI system is currently running on less money, older NVIDIA chips, challenging maybe perhaps US AI dominance in general. All of this especially as big, expensive investments in that space, CapEx, continue to pour in. DeepSeek concerns sending all of the Mag 7 tech names lower, especially NVIDIA, which is right now down about 11.5% in the pre-market trade. It would be the worst performance we've seen going all the way back to 2020. Microsoft, Meta, Alphabet, Amazon, all down about 3 to 6%, so keep an eye on that. Now, the chip stocks are taking an absolute beating this morning as those DeepSeek concerns spell a big sell-off for the U.S. semiconductor stocks. All China AI robotics ETFs, things like that, iShares semiconductor ETFs, Global X Robotics, Global X China Robotics, all of these names moving to the downside as well as China's chip giant semi-manufacturing is also moving lower on DeepSeek concerns. So keep an eye on all of those. And then for an earnings story, let's talk about AT&T, which shares are up just about 0.75%. The telecom giants posting better than expected results, profits and revenue both beating expectations as 5G wireless and fiber demand continue to bolster revenue. So AT&T story positive in a sea of red. Now, of course, we will be talking to AT&T CEO John Stankey later on this morning with you guys for Squawk Box, a must-watch interview there. So Becky, a lot of red, but one speck of green out there. I'll send things back over to you guys.
Okay, Dom, thank you very
Sure.
much. We will see you in just a little bit.
Okay, we're going to have a lot more on this morning's tech sell-off in just a moment. But up next, former Dallas Fed President Robert Kaplan is going to join us to discuss the Fed's rate path ahead of this week's meeting. Really, maybe all this stuff will be deflationary in the end, depending on what happens with AI. We'll be right back after this.
Damn. What the hell? market sells off. Jimmy likes the knives. I'm gonna make a lot of money today. I'm gonna go out and buy me a pair of Jordans after today.
What comes Scott's Federal Reserve meeting this weekend is likely to hold interest rates steady this time around, despite President Trump's calls for rates to drop immediately. Joining us right now is Robert Kaplan, Goldman Sachs' Vice Chairman and former Dallas Fed President. Good morning to you. Let's just start right there. Is it the right call to stay steady at this point, and then we'll get into the Trump of it all?
Yes, it's the right call to stay steady. Inflation progress is maybe not stalled, but it's going sideways, and you've got 4 or 5 big structural changes underway and about to unfold, and so the right thing to do is to do nothing in this moment.
Okay, we can get into some detail about what you just said there, which is you said there's about 4 or 5 things that are about to unfold. What's on that list for you?
So, first of all, you've got potential government spending cuts or an ability to bend the curve of government, so-called DOGE.
So-called.
Shift away from government-directed spending. I think people know that's coming, but I don't think they realize that's likely to be disinflationary, and we're going to have to see what they're able to do and how that unfolds. You're going to have the beginning of a regulatory review, economy-wide, in every industry that is intended to improve productivity growth. You're going to have an effort to improve the efficiency of the whole energy sector, not only encourage more drilling, but pipelines, processing, etc. But on the other hand, all those 3 things could be disinflationary. The 2 that we got to watch, one, we're deporting illegal immigrants, some fraction.
Finally got it right.
Just don't know
Illegal.
How far that's going to go, and is it going to go so far as to make costs in the labor force, particularly service sector costs, sticky? Are we going to actually shrink the workforce? Are we going to just limit the growth on the margin? And we don't know the answer to that yet. And then on tariffs, is it a negotiating tool? Are we going to do them across the board? And the big question for me on tariffs, if you're going to do tariffs on certain countries, I think it's essential that we leave.
Am I going to hire somebody that can't speak English, you dick?
Mexico and the U.S., because many U.S. companies use Mexico, for example, for intermediate goods that allow them to domicile here. But the point is, we don't know what the decisions on that are going to be, and so we've just got to wait and see how it unfolds.
Robert, I agree with virtually everything you just said, though
Oh,
I'm
you do?
surprised that you're raising these issues, in part because one of the things that Jay Powell and I think so many members of the Fed board like to say, at least, is
I disagree with what he just said. Because everything he said almost I believe in, but everything he says I hardly ever take with a grain of salt.
we need to watch and wait, in which case you will invariably be 2 or 3 months late on just about anything because you need to sort of watch and wait to see the numbers come through.
Yeah, so, and they're right. So privately, I would be in my former seat and in my current seat, I'd be talking about all these structural changes actively with my team. And as I'm doing right now with clients.
They're just a little nervous
here at Goldman Sachs. However, in terms of policy, I want to wait.
I'm not sure how much unfunded liabilities we went under in the last 4 years, but I know how much they've spent. $14 trillion over budget. Now, unfunded, you could do 5x maybe. of that 14 trillion, that's probably what will be added to the unfunded liabilities. That's just a guess.
Specifically was talking about trying to bring the price down of groceries, specifically spoke about trying to bring the price of oil down, arguing effectively that if you can get the price of oil down, therefore the cost of shipping and delivery and everything else goes down. Do you think that's going to happen? How quickly is that going to happen? How should folks in the market be thinking about that?
I think they're absolutely going to try, and so they're going to ease permitting for refineries. They're going to ease regulation for refineries, which process gasoline. They're going to make transmission, if they can, easier, through pipelines. They're going to encourage not only the industry here, but Saudi Arabia to drill more. The tension there is going to be.
.com, I don't know what that is.
Is happy to drill in the 80s or high 70s.
What's .com? Was you trading or messing with the market in .com? Yes. Yes. Yep. I was just learning, just starting to watch it. I remember the bubble that we got in. Wahoo was up there like $600. There was a bunch of them. A bunch of internet companies that came out, and only 3 or 4 of them made it. Oh, it did? I was just starting to watch it. I didn't have money, but only money I had was in Walmart. But I was learning, and I remember the pullback. And we're in a bubble now with this AI too. Don't take. But I don't think it'll be as. It's a different market now than what it was back then. Back then, these guys had control of it. These fat cats had control. I mean, you couldn't. There was no retail traders really to be thought of. They were just starting to come to the scene. But I think it's a little harder for them now. I'm being very careful. I'm not swinging nothing. I haven't swung anything for almost a year now. We make good enough money just scalping these stocks anymore in these dips. Like today, I mean, this is a gift. NVIDIA did go below my support by about $8. I called out 132.72. AVGO, we could fall more. Well, I don't know. I'm not going to use that trend line. Let me look at the weekly. We could hit the 21. Right now, I got 218. And we're at 214. So, that's probably on the daily. I called some pullbacks on this in my last video. Yeah. So, we could hit 206. Tesla I got 389. I have 361 and 387. So I'm pretty close on Tesla. Yeah, we hit 387. That was my low support. I called 392 and 387 and 360. Sound hit my 1357, which I think can go lower. AMD's at support. AMD hit the inverse head and shoulders today. We got Amazon. Amazon, I got 217.30. Called that in the video too. So I'm called a real good pullbacks on these. MU's at my pivot point. Bounced up off my pivot point. Now Nile can probably break below 3. It ain't doing much. Google, a little overbought. It's at my 180. I mean, I'm nailing these to the penny almost. 189.64 I did in the video. Oracle I had 165. Now Meta went below my support. 621. I could have probably done the head and shoulders down here. Yeah, right at 606. Perfect. We got Mara at 16 something. It didn't pull back much. Not compared to what Bitcoin did. QSI 186. IWM the 200. Now Dell. I don't trade this one hardly at all. Dell could drop down to 75 bucks. 76.69. We're getting to some real good spots to day trade. Baidu's one I like. I got 58.74 for Uber. I like to see AMC just get so demolished. I don't like these punks pumping this thing. Why would you want to invest in a company that's billions and billions of dollars in debt? Oh, because Rory Kitty mentioned it? Fuck that. I don't think that kid knows how to chart. Walmart's up. That's a recession stock. And you got Boeing pump. Count me out on that one. Starbucks is going to probably come down. The CEO is making $96 million in a year. I mean, that's ridiculous. And the guy's nothing. I could run that company for $1 million a year. And it'd be running. And there's only one thing I'd have to do. Close a few stores down, get rid of wokeism, hire on integrity and good-looking chicks, make it topless. Can you imagine Starbucks, a topless coffee shop? And you'd have so much business you wouldn't know what to do with. NVIDIA is the one that's got hit the most. I think it's overdone. I might swing NVIDIA. I'd say NVIDIA is probably the best bet. Or ITM. Well. I think no, I'd better take that back. I made some real good chicken vegetable soup, but I added something new to my recipe, and that's red pepper flakes. I don't think I'll do that again. It's not real hot, but you can definitely feel the heat. Anybody likes a little bit of heat but not much? Well, that's good. I use turmeric for the seasoning. But I still got a good taste for it. I think it's going to be delicious once it sits a little bit.
The American consumer is showing some signs of stress. Credit card delinquencies are near a 5-year high, and higher earners are under more pressure. Sharon Epperson joins us right now with the CNBC exclusive report. And Sharon, this is kind of counter to what we've heard from most of the big banks recently.
Absolutely. You know, borrowers are having a lot of trouble increasingly paying their bills on time, and delinquencies are near their highest level in 5 years as consumers have fallen behind on auto loan, credit card, mortgage, and personal loan payments last year. That's according to...
So I truly believe that this economy is not in the best of shape. We've been, totally misled by this here CNBC. The top 1%, people like us that can be on top of things, are doing very good, but inflation is just killing us around here. Nothing's going to go down. I'm not going to be able to see my trash bags down to $10 no more. All my cleaners and stuff, they're up 30%, and they never have budged. If I get out of business, I definitely wouldn't be griping as much.
It was actually down about a full percentage point to about 51.6% credit utilization.
But it costs me $1,100 more a month to run my business, and that's half my profit, more than half
They actually have
that I had.
available credit. They just chose not to use it.
And that, Tavares says, is a positive sign that consumers are exercising self-control and are more credit cautious as we start the year. You know, despite last year's strong stock market gains, concerns about inflation and unexpected prices remain. He says that's especially high among high-income consumers. And Becky, there are other reports out, Bain and Company and others, pointing to upper-income consumers.
Signs of stress on
that
high
their
earners.
intention
That's
to
bullshit.
spend is less going into the start of the year. A lot of them kind of perhaps spooked by the pullback in the market at the end of last year. This is a significant headwind, though, perhaps for the year ahead, because if the upper income consumers are spending less and discretionary spending is down, that could have impact more broadly.
It's just that it's counter to what we've heard from a lot of the big banks that have reported.
No shit,
in the
honey.
Last week or so, they say that Americans are still kind of very strong, especially what we heard in the fourth quarter as we headed into the holiday season.
It's 'cause the interest rates are so high.
Strong for some of those things. I guess there are hidden costs like the
Interest rates. Trump's right. You bring down interest rates, this economy will boom, and they'll have more money in their pocket
The other thing, some other cautionary
to spend.
that people should be paying attention to is now credit reporting agencies are getting the information about federal student loan payments that have not been paid.
Right.
And so
Well, because they expect a free lunch. I don't really care about student loans. I don't give a crap about them. I paid mine off. I worked 2 jobs to do it. So I'm you know, that's one of my sore subjects right here. I want my refund. I want $12,000. I want it back now.
President Trump expected to speak tonight at a GOP retreat in Miami. House Majority Whip Tom Emmer is at the retreat. He's going to join us next. And then AT&T CEO John Stankey is going to join us to talk quarterly results and so much more. We're coming right back.
And I didn't get a degree in basket weaving. Or I'm not, well, probably because I'm not a member of ATIFA. If I was a member of ATIFA, I would have probably got a refund. All right, well, I'm going to go get one of my jobs done. And I'll be back. Today's going to be a good day. I can smell it. And if we don't hold this here 591.96 today, we could probably see 588. $80. 588.80. And resistance today will be the breaking the 200 SMA on the 1 hour time frame. Maybe the 9, if we can break and build above the 9, but that still is under the 200, so I'd say the 200. And that's right around 597.94. About $3.30 from here to the upside. But I'd be cautious. We got FOMAC, and we got a lot of earnings this week, important earnings. We got Meta. If you get a chance, go back and watch that video. You can get my opinion. Not yet.
inside wealth.
Welcome back to Squawk Box. Republicans heading to Trump National Doral in Miami today for the Florida retreat. Meetings expected to start later this afternoon and go until Wednesday. Items on the top of the agenda, of course, include reconciliation and tax policy, tariffs, and so much more. House Majority Whip Congressman Tom Emmer joins us now from Miami. Good morning to you. I want to talk about crypto, all of the EOs that have been going on. But I do want to talk about what just took place over the weekend on two fronts, both the Hegseth confirmation, which was so very close, and then also this back and forth with Colombia on the illegal immigrants being sent back, and what turned out to be a potential debate over tariffs, and whether you think this is just the beginning of what we're going to be seeing in terms of debates with other countries.
Well, good morning and Happy New Year. Great to be with you for the first time this year. First, when you talk about Colombia and the little back and forth that we had over the last day or two, it actually proves Donald Trump's point. I mean, initially they said we're not taking these illegals back, which the question is why? What's wrong with them? And then Donald Trump did what Donald Trump does, the master negotiator. They have now agreed to not only take back the illegals, but to come up with their own transportation and deliver them back. And to your question, I don't think it's going to be like this every time. I think it only takes a couple of times for people to be reminded that Donald Trump is a very serious leader. And if you're going to work with the United States, you're going to have to work with the United States under his terms.
Talk about his terms. One big question that's emerged, even over the last, call it 72 hours, has been this issue of firing some of these inspector generals. And there's no question he has the very right
Fire them all.
to do that.
If they don't believe in America, get rid of them.
There's this 30-day period with which he is supposed to provide according to the law, and whether someone like you agrees with this approach of effectively bypassing that.
Well, I'm not going to say the executive doesn't have the authority. I'll let the courts decide that. Clearly, you started off by acknowledging these are executive agency positions. Who's in charge of executive agencies? The executive. These attorneys general served at the discretion of the president.
Right.
This president has come in and said, you are no longer going to be employed by this administration. Yeah, there's some pushback, but Congress's job is oversight. That's what it is. It's oversight and budgetary, and frankly, Congress has to get back to doing its job. The president clearly is doing his.
But what about this 30-day period? So that's what I'm saying. It may very well be that he has the absolute right to do it. The question is, he's supposed to, according to the law, provide a 30-day sort of notification period. And if you don't do that and you're not following the law, what does someone like you think of that?
Well, I'm going to tell you, one, I haven't read the law, so I'm not going to, like I said, I'll let the courts tell us how they interpret whatever it is that they're relying on. But I'm going to say this to you. It's not going to change a thing. This is a bunch of ado about nothing. The President of the United States has the complete and absolute right to determine whether these people are going to stay on with the administration or not, regardless of these details that you're talking about, 30 days here. It won't change a thing. So President Trump exercised his authority, and I respect that.
Talking about his authority, I do want to also talk about TikTok for half a moment, if you'd indulge me, which is clearly Congress, on a bipartisan basis, decided that TikTok was a national security threat. The Supreme Court upheld the law.
Because they couldn't win the election.
It appears that there's now a real debate about what's happening, which is to say that the president has said that he's trying to figure out a way to sell it and thinks that he has this 90-day or 75-day period. By the way, Apple and Google clearly don't agree insofar as they've decided that they're not going to be hosting this app on their platform because they look at the law, and folks like Tom Cotton who say, we have a law, it's in place, you can't do this.
Well, for me, I respect my colleagues who had the top secret briefings and came out. It was the House Energy and Commerce Committee, which has two ends of the political spectrum amongst their 54 members. I mean, it goes all the way from the far left to the strident right. They came out after a top secret briefing and voted 54-0 for the law that we're talking about. So I side with that. I believe that the Communist Party of China should not be allowed to collect data. World War II, we wouldn't have sold the New York Times to the Germans, right? It's the same thing when our adversary is collecting all of this data, detailed data on American citizens. Now, on the other side of that, when you talk about President Trump, if there's anyone that can get this done, if there's anyone that can convince the Chinese to get out of this and allow the platform to continue as a free and open platform, not as a surveillance device, it's Donald J. Trump. He's going to do whatever he can to make sure that happens.
The question that I would ask you, though, is what should American companies that currently would otherwise be hosting this service do? Meaning the president said, go ahead, I'm granting you the option to effectively continue to host this. Not even the option, he's saying go do it. And companies like Oracle and Akamai are doing that on the assumption that the president is somehow going to protect them. Meantime, Apple and Google are not, because they're saying the law is the law of the land.
I think Apple and Google are sending a message to the Chinese Communist Party, which is, look, we believe that you're going to be out of business in the United States with Donald J. Trump in the White House, and we're going to choose not to play either side of this. We're just going to stick with the law the way it is and send you a strong message that if TikTok is going to survive as an open and free platform in this country, it's going to be without the surveillance side of it from the Chinese Communist Party. Others that choose to run it based on the idea that you've got a 60, 75, 90-day window, that's entirely their business decision. So I don't see this as a conflict. I think it's more the business, the market is sending a message to the Chinese Communist Party.
Congressman, I don't know if you followed it, but over the weekend and really even starting last week, there's been a whole new emergence around AI.
As you can tell, I don't put a lot of, I don't trust CNBC. Because I watched them when they were fair and balanced, and they're not that fair and balanced anymore. And I enjoy Schwab a lot better because I can get 3 or 4 different good opinions and a chart and realistic. I mean, you know, this could pull back to here, but these guys, it's pump, 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 pump. You don't ever hear them talk about pullbacks. And you'll get caught. You'll get caught. Listen to these people. But I use them because, you know, I'm a devil's advocate and I can't believe 95% of the shit they say. The law. You know, I get sick of listening to that. If anybody breaks the law more than anybody, it's this channel right here.
This is the greatest sci-fi story that we read 30, 40 years ago. So every day, people tend to be afraid of what they don't understand. I think it's
totally for censorship, and then, you know, they get on this kick with TikTok because they couldn't use it well during the campaign, and they lost a huge election because of it. And Trump gained so many followers off TikTok. And that really boosted his campaign big time. And their politicians couldn't get away with it because, you know, they've been caught in so many lies in the past 10 years. So they're worried about TikTok telling the truth is what they're worried about. And we got, you know, so we were censored, and we're, you know, Elon had to buy Twitter so we could not be censored. And then Facebook now, I can say about anything I want on Facebook and not be censored anymore. I was thrown in jail at least 5 or 6 times, maybe more than that. And just mentioning the truth, which has already been published and reiterated over and over again. So I thought our country would never be censored, but, you know.
Have disagreements about what happens when you make Trump tax cuts permanent, when you extend the TCJA that was signed into law in December of 17. But the whole thing is, again, I think, this is not as the whip, as a member, it's much ado about nothing. We are continuing current policy going forward, and that shouldn't be a cost.
Oh boy.
I want to thank you for joining us. I hope we have an opportunity to continue this discussion as things progress, and hopefully we get to talk to you on the other side of this meeting. Thanks.
Thank you.
Up next, AT&T CEO John Stankey joins us. That company reporting results earlier
If the
this morning.
pre-administration would have done the immigrant thing legally and not had millions of people crossing the border every month, hundreds of thousands, in lines, of 10 to 20,000 at a time, I think things could have been a lot better with this migration thing, but we didn't vet, we didn't do shit. And then people don't have to go to court years later to go through the process, and it was just a big mess. I'm totally for immigration. As long as you're not a gang member and you can speak English at least. That just shows some kind of, dedication of learning. But say, I just think it could have been done a lot better. A lot better. But no, we just had to. I got a friend from India. He went through here on a student program and got a master's and got a citizenship. And he feels the same way I do. He can't stand the fact that people just go ahead and walk across the border and then get a free lunch, and he had to work for it. I'd like the government to put me up into a hotel that costs $1,000 a day for a month. I'd really appreciate that. The Trump Tower, well, I'd enjoy that for about a month in New York. Or have some kind of work program, and you apply over there, and then if you're accepted, you come over and you can. For a couple years.
All right, welcome back, everybody.
Until you get your
AT&T out with quarterly results earlier
eligibility.
This morning. The company came in with numbers that were better than the street was expecting, and that stock right now is up by just over 2.4%. Joining us right now exclusively is the company's CEO, John Stankey. And John, welcome. It's great to see you this morning.
Good morning, Becky. It's good to be with you.
Let's talk a little bit about what you're seeing. The numbers came in better than expected on every metric that I'm looking through here. Earnings per share, revenue, free cash flow, postpaid phone net adds, and the full year number was better than the guidance that you had just given the street in December at an analyst meeting.
You're about to get my business, AT&T.
Well, I think you kind of touched on the important thing is we set out some guidance for the year, and across the board we consistently met or exceeded it, and that's exactly what we set out to do, which is to simplify the business and get ourselves into a position where we're executing more consistently and have the confidence that we can deliver on these things. And that's one reason why at the analyst day that you referred to, we laid out some 3-year objectives of what we think we can do. And I think effectively what you saw in the fourth quarter is that the business continues just to perform extremely well. We're very disciplined, and when you're in that position, sometimes you get a little bit more momentum, and that's what you saw in the numbers.
So demand for 5G and demand for fiber looks strong. Verizon had stronger numbers last week too. What would you say about the overall operating environment right now?
I think what you're seeing is that, you know, the products and the services that we put out to the market are really critical and important, and it's a combination of the value that consumers get out of them, the utility that they're able to use them for, and then we have kind of a secular dynamic going on here
Hopefully I don't get fired up today.
connectivity and networking is becoming more and more
I won't be
important.
listening to these guys,
Things
that's
like
for sure.
upstream bandwidth because of what's happening with user-generated content, workloads that are going up into the cloud are becoming more important. That all plays into our strength, and so, you know, we feel pretty good about the dynamics of what's happening overall and how the economy is structured, how technology is moving, and that helps a business like ours.
Does that continue into the first several weeks of January too?
Well, it's, you know, obviously I don't want to announce something that isn't public, but, you know, we continue to see customers want to use the product in a strong way. There's always, when you come out of the Christmas holiday season and the sales that go on, there's always a couple of choppy weeks that occur right after that as everything settles back in. And we're seeing that same dynamic go on in the market right now, but typically we have a pretty good handle on how these quarters play out once they run their full cycle, and I don't expect anything different here.
John, your stock is up by better than 2.5% this morning in a down market overall. There's a whole lot of questions about what to make of this new AI competitor that's on the scene from China, and people are trying to figure out what this means for U.S., what kind of CapEx spending we're going to continue to see in these areas, if there's a way to do it more efficiently, more effectively. This is not something that impacts you
That's really
directly.
throwing for a loop.
You play in the data centers, you know what's going on in the tech business. What's your thoughts on what we've seen so far?
Last week I talked about how I love Asians and how I think they're smarter than Americans in a lot of ways, like seeing a doctor, or I think these people were a little bit off last week when they keep saying that we don't want China to learn our stuff. China's smart. There's some smart people over there.
The latter part of the game as we move through it, especially
Asians.
early innings.
I mean, there's probably dumb Asians, but I haven't met too many of them.
Up one morning and somebody has a better mousetrap or does something a little bit different, and we should expect that, because certainly the internet, the business models on the internet today don't look the same that they looked at like in 2000. So
AVGO's down
just
$28.
dynamic, and the pace at which this occurs is probably going to be a bit accelerated over historical levels.
This could be a good play today.
Do you adjust accordingly?
I'd watch AVGO. If it breaks 218, if we can break 218, I think we'll go up higher.
Going to need as you get away from some of the copper lines on some of these things, and you sold that off, and I think you get a continuation.
Today's going to be a fun
It's
day.
little
I love
different
these
than what
knives.
Verizon is doing. I think they're trying to turn those into data centers that can use for AI. Why don't you talk about your strategy and what you're doing?
Yeah, it might be a stretch to call some of those properties data centers. In many instances, they were central offices with pretty old telecommunications equipment in it. And I think what we're attempting to do, and what we will do, is we're very cognizant of where we need to keep traffic aggregated in the network so that we're able to manage latencies over time. Those critical properties where we think they have needs over the long haul, we want to make sure we're investing in them to be able to take advantage of the round trip times that we can deliver on our network. We'll do something different with those, but in this case we had what I felt were some underutilized assets. You know, we've got thousands and thousands of these things. Many of them are out in hamlets all over the United States, and we think we can probably do some things better with them. And more importantly, the arrangement doesn't cause us to leave those facilities. They allow us to use them in a different way so that we can still operate our business from them.
Hey, John, I have a question about the regulatory climate and mergers and acquisitions over the next 4 years, which is to say, in a post-Lena Khan world, do you believe that some of the big cable providers, for example, that will compete in some way with you,
will be allowed to merge. Would you be able to do deals that you wouldn't otherwise be able to do? And in the emergence of a Starlink and potentially a Kuiper, which is going to be the next development coming from Amazon into space, does that change the dynamic with which we think about what the landscape looks like in terms of connectivity, because all of a sudden there's more players in it than there used to be?
Sure, it does, Andrew, and good to see you. I would tell you that I sit here today and believe the policies that have driven investment in our industry have been the right policies, and what you've seen as a result of that is consumers have choice for different ways to get on the internet now, whether it's through fixed wireless technology that they can buy, or is it satellite, or what they can get with fiber, with record investments in fiber this past year. So the policies that have been pro-investment have been really critical. Does that afford the opportunity for asset reconstruction in the industry as a result of that? My guess is probably yes. I wouldn't be surprised if we see some players that we compete with making some decisions that say that they need to bolster the strength of what they can do from the broadband side and the kind of infrastructure they have, and the importance of marrying mobile with fixed technologies. In our case, we feel really good about where we are. We have a set of plays we started running 4 years ago. We got a great nationwide wireless network. We've got the leading fiber network in the U.S. We're investing at a clip where we can organically grow. I'm anxious to continue doing that and kind of continue running the plays that we're running, but I do expect there are going to be others in the industry that step back and say they need to maybe change their hand a little bit and restructure things.
John, let me ask you just about the debt position. I know you reduced leverage in the year, reduced the debt by about $9 billion to close to $120 billion. You're under 2.7% times leverage, 2.7 times leverage at this point. I think you're on a path, according to Pascal Desroches, to be at about 2.5 times leverage at the middle of the year. What kind of progress are you making on that? What do you want to tell the street about?
We're absolutely delighted. The team's worked really hard. To your point, we're under 2.7 right now, which is great, and we do expect we're going to, by the midpoint of the year, we'll be around 2.5 times adjusted net debt to EBITDA, and as a result of that, that's going to drive a change in our capital allocation profile that we communicated in our December Analyst Day. We feel real comfortable at that level, especially given the remaining portions of the balance sheet, which are structured at very long maturities and very low interest. So that's kind of a competitive advantage if you think about what we've got in debt structure right now that we're using to invest in key long-term assets like fiber. That's a healthy combination for leverage over the long term. And as a result of that, be able to take more of that cash now and return it to shareholders, continuing with our strong dividend, and then adding to that a share buyback where, we'll probably do about $20 billion over the next 3 years. So it's a really important point, really a lot of work by the AT&T team to get here, and couldn't be more pleased with what we accomplished in 24 to make that happen.
And John, I see you've got the AT&T Pebble Beach Pro-Am logo on your shirt. I take it you're headed out there directly, and what is it? You've got Scotty Scheffler and Jordan Spieth both making their debuts for the season out at this event.
Yeah, it's my 1 week a year wardrobe that I get to wear it, so I've broken it out, and unfortunately I got a few things to do before I can get out there this week, but I will eventually make my way out there, and we're excited about the tournament. I talked to Jordan last night. He's ready to go. He feels really strong about where he's at. We're excited to see him return and compete, and maybe I'll be able to realize my dream and hand him a trophy at the end.
Well, we look forward to seeing all of that coverage over this week and this weekend. And John, thank you very much for joining us today.
Thanks for having me on.
All right, let's get a check on the markets right now. Stock futures are the big story this morning as that low-cost Chinese DeepSeek AI model throws fear into what's going to happen with some of the AI American tech giants. A lot of questions around that. We have seen improvement over the course of the morning. The NASDAQ was indicated down by over 1,000 points earlier. It's now off by about 820 points. Dow futures are down by 336. The S&P 500 off by about 133. We'll continue to tell you which of the stocks are getting the hardest hit this morning. It's the chip stocks in particular that are taking this hit. Let's also take a look at what's been happening with the Treasury market. We do have an FOMC meeting this week, that Fed decision coming later in the week, and ahead of that, you're seeing a little bit of pressure on Treasury yields. The 10-year right now at 4.51. The 2-year is sitting at 4.18.
Coming up, we got much more on this morning's big stock slide. Mike Santoli is going to join us at the New York Stock Exchange this morning. We'll take a look at what investors need to be watching, given what does seem like carnage when it comes to the world of tech and AI. And then later, filmmaker and anti-DEI activist Robbie Starbuck responding to JP Chase's CEO Jamie Dimon's Bring It On challenge regarding policies at his company, and making some news over the weekend that he's going to be targeting Costco and other companies as well. This is the guy that corporate America shakes in their boots about. You don't want to miss it. Robbie Starbuck will join us in just a little bit. Squawk Box returns after this.
About Zepbound.
On the markets and all the carnage around us when it gets straight over to Mike Santoli at the New York Stock Exchange, as a lot of investors rethinking the whole tech thesis, the whole AI thesis, the whole energy thesis, sir.
Yeah, all of it. Kind of gradually, then suddenly, you know, a lot of this stuff has been in the air for a little while, but it definitely is now coming to bear on an S&P 500 that last week did finally pop to its first new record high of 2025 after getting 57 of them last year. And we're going to have a test of that breakout. This is the ETF that tracks the S&P 500, the SPY. It got above 610, that's 6,100 on the index. And this area right here, 5950, has been sort of where we held for a while, bottom of this recent range, and it also is sort of lined up not too far above 5850 or so, which was the pre-election highs. Now, AI and all of the earnings associated with it, they're not the only reason this bull market has existed for 2+ years, but it was the main accelerant, and it also allowed the S&P 500 to hold a premium valuation and get 2 straight 20% up years at a time when the majority of companies were not producing very much earnings growth. So that's why you have this bit of a rethink. The question is, can the market separate out potential winners from losers here? We've already been trying to do that. Take a look at the bank index relative to the big three of the S&P, also the big three of the NASDAQ. That would be Apple, Nvidia, and Microsoft against the BKS. This is a 3-month chart. Shows you those three stocks on a net basis are down. In fact, or at least Nvidia is deeply negative, and Apple as well. And what we've also got to recognize is those three stocks are equivalent to about 20% of the market cap of the S&P 500. So sure, you can have a broadening out of the market, and you have the majority of stocks do well because earnings are now going up. But it's very tough for the index as a whole to make a lot of headway if these stocks are not participating, and that's why a broader market is not always a stable or more strong or safer market. It can be, but it just is a higher bar. The math gets pretty tough if these stocks don't work. I would say we are just testing some of those ranges. We were up 3.7% on the S&P year to date coming into this week. We're not going to be down but 2% at the open based on that. Now, the 10-year Treasury has a bid right now down near 450, and what's interesting here is that's kind of where this little uptrend would take it to since we got to those lows in yields late last year. So interesting to see if we get a little bit of help from the bond market. When yields have come down, it's enabled the majority of stocks to go up, even if the big caps don't do so. So here's a dynamic to watch today, guys.
Mike, I'll give you an interesting stock, and I don't know if we can put it up on the screen. Take a look at Apple, though, this morning. So
yes,
everybody's getting crushed, Apple not getting crushed. In part, I imagine, because they never fully invested in AI the way some people, frankly, had wanted them to. Maybe they made the right decision ultimately, because if, in fact, they can use an open source model longer term that's more efficient, and that they don't have to necessarily rely on themselves to figure this all out, boy, does that change the dynamic.
That is absolutely true. They were perhaps getting penalized for not having that direct leverage and that credit for being a big spender in AI. Also, the idea of the device is going to be the way consumers get whatever AI comes to be and how it gets there. And so Apple can be a little bit flexible in terms of how it delivers that. I think the other piece of it is also a defensive stock. It has had this really tough run in the last few weeks, so it looks like a little bit of a it's going to get a benefit of a little bit of a migration.
I don't know. I'm just thinking. I was telling Becky, I was playing with DeepSeek all weekend. You know, you can basically run it on a Mac Mini or on your laptop. I mean, and that changes, I would imagine, everything when it comes to data storage, data centers, energy, the whole thing. Obviously, this big NVIDIA question with the chips, I think, still remains probably question number one, which is, was this actually created with some of the highest end NVIDIA chips that they weren't supposed to have access to, but actually did?
And was it a much bigger budget than anybody's letting off?
Or is it something else?
$5.5 million, or was this all secretly funded and they've been working on it a lot longer?
But what we don't think, though, is that there was $250 billion behind it. And that's how much the platform companies are slated to spend this year before Stargate was announced on data centers and related CapEx. So obviously, there's somewhere in between. This idea that cheaper models maybe are good enough for a lot of people, and this idea of supply constraint from NVIDIA and everybody dumping as much as they can into NVIDIA, and we capitalize those earnings at a high rate, that's been the game for a while. We have to question some of that.
And Mike, we're going to get killed, but for me asking this because I want us to go. Bitcoin falling under 100,000, is that just in tandem with, because everybody who owns Bitcoin also owns tech?
It continues to look like kind of leveraged big tech as opposed to anything else at this point.
Okay. Mike Santelli, great to see you, sir. Thank you. When we come back, a lot more on Squawk Box this morning. Former House Financial Services Committee Chair Patrick McHenry is going to join us on President Trump's first week back in Washington, a week filled with headlines. We'll talk about them all after this. Welcome back to Squawk Box. Our next guest, fresh from the halls of Congress after a 2-decade career there. He joins us on President Trump's first week in office. Confirmation fights completed now. Still a number ahead. I want to welcome former U.S. Congressman Patrick McHenry of North Carolina. He most recently served as chairman of the House Financial Services Committee, and he's still wearing his bow tie, and we are very pleased to see you, sir.
Well, thank you.
Before we get into anything, just because it is the topic du jour this morning, the markets are selling off on the back of it. There's DeepSeek news, China AI model that now seems to have upended at least a lot of our ideas around whether there should be open source, closed source, whether you need the chips, whether you need the energy to do it all. What do you make of this, just from a, I don't know, a national security perspective, a technology, U.S. being ahead or behind?
Is this our
perspective?
Sputnik moment or no?
Well, Mark Andreessen said this,
Yeah,
but we don't know. We're living in this moment where we don't know if this is real, whether or not this is effectively screen scraping, right, which is taking the best of our open source and their intelligence community using access to our closed source. Is that a component of this build out? We don't yet know. We also don't yet understand fully the data transfer that's happening with this new app. What we do know, though, and the fundamentals here matter.
Data transferring meaning are people's information at risk with going back to the Chinese government?
Is this a more sophisticated
Forget about
TikTok?
Right.
Yeah.
Is this a much more
Do you
sophisticated,
believe this could be a
deeper, more
mousetrap?
meaningful?
So most of the people that are online don't necessarily, because it's open source, they think they can see inside it, they can see the programming, they can see, now I don't know, maybe that there's some clever little mousetrap in there that nobody's spotted yet.
We don't know. But what is devastating, though, is if you have a new model that requires less compute, less chips, means less power, less infrastructure, this has a massive ripple effect where faster, better, and cheaper still wins, no matter if it comes from a communist state or from an open society.
Look, it's probably good news over the long haul, devastating perhaps for the companies that have built up so much on this expectation.
Right, and if you're a company like Microsoft or Apple, where you want to build the best widget and you have capacity to distribute it to your current customer base, this may be a fantastic thing for them. But stepping back, though, this is so complicated. We're an open society with a rule of law, competing against a closed society with no rule of law in China. And so I think the fundamentals of an open society and rule of law make us so much better to adapt and change. What they have just done with a closed society is bring something that's open source, open society. It is such a different outcome than anyone expected 6 months ago, 2 years ago, 5 years ago from China.
I mean, to be fair, you can't criticize Xi Jinping or ask this AI to do it. You can't ask them about Tiananmen Square. It's not authorized to do any of those things.
No, but that's what every American national who does business in China says, that that's the entry price. You can't criticize the regime. There are all these limitations on civil liberties and civil rights. Human rights abuses, obviously.
Deep sense won't.
DeepSeek.
But DeepSeek.
Won't do it.
But what I mean is, anything China is this.
Yeah.
But let's step back. There are two additional pieces here. One is U.S. capacity to ban things that they don't like, out of regimes they don't like. The president has broad authorities, not just on tariffs, but on export controls. They're meaningful, powerful, and are the death penalty for firms.
So would you block this?
Well, let's see. Let's see what is actually happening here. It could be blocked. But getting back to the fundamentals, that doesn't bring the globe to our regime, our rule of law, speech rights regime, open society regime. It actually leads the rest of the world to go a different direction for us. But that's one point. And so the president's capacity to take action here is massive against an app or an adversary that he doesn't like. We see this in tariffs. We're seeing this in tariffs moment to moment, hour to hour, and that will continue. But when it comes to export controls, the authorities of this administration, like the last one, are very broad, very deep, and quite meaningful.
I want to just ask you about sort of rule of law, because I think there's a fundamental question as it relates to TikTok right now. When we were actually talking earlier to Congressman Emmer about this, which is there was a bipartisan rule put in place, a law put in place, the Supreme Court upheld it around TikTok. There is now this sort of period of time, we don't know what this period of time is, where the president effectively says the law is not the law and we're not going to worry about it. And if you're Oracle or you're Akamai, you're saying, sure, I'll host TikTok based on the assumption that the president is going to effectively overrule the law or somehow change the law or do something.
and the Apples and Googles of the world are listening to the Tom Cottons who said, this is the law, folks, and you can't do anything, so don't do anything. What should be happening here?
The courts still matter. The rule of law still matters. The president's opinion is powerful and meaningful in our regime for a period of time, but the courts and the law will persist and will remain, and I think that's the case here. Congress acted in a bipartisan way after a lot of contemplation on TikTok and trying to understand much more deeply about the data transfer and the risks associated with TikTok being in our society. Not just the social media is cancer risk, but the fundamental risk of the data transfers. So the law's a law. It's unlikely to change. Right. And all that's happening right now is TikTok buying for time via the president's opinion.
Put your former financial services hat on. I'm very curious what you think of the president believing publicly to Brian Moynihan's face and others that banks like Bank of America, and he name-checked Jamie as well, Jamie Dimon, JP Morgan, are debanking conservatives, whether you think that is something that is meaningful, persistent, in a systematic way. And when the president says, quote, as he did on Friday, I'm going to do a number on the banks, right? We're doing numbers on the banks. What do you think that means?
Those are two separate issues.
Okay.
I hear them as two separate issues. And if I were still in Congress, I would see them as two separate issues.
Okay.
There's the issue of debanking, which is real, it is persistent. Look at Operation Choke Point and Choke Point 2.0. 2.0 was focused on crypto, and that is in fact the case. You had crypto firms and those that have major crypto assets get debanked.
Oh, I don't disagree, but the reason they were getting debanked, I think, at least was under the auspices that these were bad credits, meaning because of crypto, because of AML rules, that's anti-money laundering and other things, that the banks felt that they were going to be on the hook if these clients were part of their firm and something went wrong.
Okay, we have
and they would argue it wasn't about the politics per se, it just happened to be that actually crypto, folks who love crypto, there happened to be a more sort of libertarian conservative group, I think.
Yes, but also in Choke Point 1.0, it was a set of disfavored industries across America that were actively targeted by the Obama administration. The Biden administration picked up where the Obama administration picked up with a different group.
Is this the administration forcing the banks to do this through the regulatory?
Well, yes, because you have the banks being pressured by their regulators under the current rule of law on AML BSA, and now a new beneficial ownership.
What is BSA?
regime. Bank Secrecy Act,
Okay, sorry.
which is a misnomer because it gives the government access to your bank account and major distributions from your bank account, either incomes or distributions. So there is the rule of law issues that have to be fixed on AML BSA and the beneficial ownership regime. That is a legitimate policy set that the president is speaking of around debanking. And the complicated nature of technology interacting with banks.
Right.
That is a legitimate policy concern. The other policy concern the president has is the populist one. Elizabeth Warren has talked about this, the president talked about it on the campaign trail, which is a rate cap that I, as a free market conservative, am against. I think competition should bring down the interest rate, and a competitive marketplace should lead consumers and small business to have more options. The president looks at this.
Rate caps on credit cards.
Rate caps.
You said the same thing.
Sorry. Okay, that was Freudian.
I started. Sorry.
But that is a populist bent. This is the reason why Rohit Chopra, the head of the CFPB, appointed by Joe Biden, confirmed without Republican votes, still remains as the head of the CFPB.
So you think he's going to stick around for a while?
I'm not sure. I don't know that Director Chopra is super excited about having Donald Trump as his boss.
He was on Friday and sounded fairly enthusiastic about the idea that there are areas that they...
Well, there are... this is where the populist right and the progressive left meet. And it is a complicated place. And for banks to think this is a pure win with the Trump administration, dream on.
Okay, you got to come on back, in part because you have to teach us about how to do a bow tie. There's a lot to talk about there, but this was fabulous, and we can continue this.
Well, if everybody wore bow ties, it might impact your viewership, so I don't want you to risk too much.
I might start wearing them. We'll see. I don't know what to do.
It's more of a threat, huh?
Thank you. It's good to see you.
He's impinging on your territory. Look out. All right, when we come back with DeepSeek sparking market fears this morning, we're going to hear about one VC fund that is diving headfirst into AI technology. You might recognize the founder's last name. We've got that story next when Squawk Box comes right back. Thrive Capital has emerged as one of the most prolific venture capital firms of the past decade. It's thriving in the AI era. Kate Rooney has more on the fund's latest investments and its founder, Josh Kushner. Hey, Kate.
Hi, Becky. Good morning. So Thrive has been at the center of the biggest AI deals lately. Think of OpenAI and Databricks, for example, highlighting founder Josh Kushner's influence right now in tech circles. I've been talking to people close to Kushner. They tell me he is really the secret to some of that deal flow, really all of that deal flow. It's a small New York-based team, but Kushner has a vast network that includes NBA players. He's a part owner of a team, and celebrities like Kim Kardashian. I'm told he's also a close friend and advisor of OpenAI's Sam Altman, the CEO there. Thrive led OpenAI's $6.6 billion round back in October. It was also in Databricks, as I mentioned. Robotics company Physical Intelligence, Sierra, run by Brett Taylor, and then the film company A24. There's also Scale AI Plus. They were early investors in Stripe, Spotify, Instagram, Skims, Robinhood, and Anduril. For a $23 billion fund, that's how many assets they have under management. Thrive really does not actually do that many deals. Most venture firms live by something called the power law, meaning most of these bets are going to fail, but the big winners will make up for those. People familiar with Thrive's strategy say that it tends to do fewer, much more concentrated deals with larger checks. One major smudge, though, on Kushner's investing track record so far is Oscar Health, a startup he co-founded. It struggled, ended up needing to leave some major healthcare markets, and that failure did come up a couple of times in conversations, but not in the way you might think. It's actually a core reason that founders tend to relate to Kushner. He ended up seeing that company through those losses. One founder, it's backed by Kushner, told me gets it, and that he's one of us. So Kushner keeps a low profile in politics despite his brother Jared Kushner's seat in Trump's inner circle. He has publicly supported Democrats, but I'm told largely staying out of politics.
He's a smart guy and an interesting guy. Kate, thank you very much. When we come back, prominent anti-diversity, equity, and inclusion activist Ravi Starbuck will join us on the wave of companies rolling back DEI efforts. Stay tuned, you're watching Squawk Box, and this is CNBC.
Welcome back to Squawk Box. The National Association for Business Economics out with its latest survey. Steve Leisman joins us now with the results. Steve.
Good morning, Andrew. Yeah, respondents to the latest NABE survey grew more confident in the economy over the next year and indicated less pricing pressure for now, though more expect to be hiking prices in the next 3 months. A warning sign, perhaps, for inflation. The first quarter survey from the National Association for Business Economics shows a significant drop in the recession outlook. 82% of respondents putting the probability of recession at less than 25%. Last quarter, just 56% were that optimistic, and just 15% see the odds as greater than 1 in 4. Now, over the past 3 months, the net percent raising prices came in at 22, down 11 points, but 35% saying they would be raising prices in the next 3 months. Got to watch that one. The net percent with higher material costs rising 5 points, but there's less wage pressure you can see there, and also less net hiring going on. Layoff intentions, however, were muted. Capital spending rising 7 points to 19. That's a good sign. When it comes to the new administration, 69% say they have not adjusted their hiring or capital spending plans as a result of the election. Just 27% have, and that could be because of policy uncertainty. 61% saying fiscal policy uncertainty is one of their top downside economic risks, followed by recession, global instability, higher interest rates, and tighter credit conditions. So while firms are optimistic there won't be a downturn, they're not yet confident, it would appear, enough in future policy to make changes to their investment or hiring plans. That is until, guys, there's more clarity on policy from Washington. Becky?
Okay, Steve, thank you very much. Let's get back to this morning's pre-market sell-off. We've been watching this morning with the Dow off by about 328 points. S&P futures are down by close to 130. The NASDAQ now down by about 760 points. Joining us to talk more about this, what to expect from the Fed this week, is Bob Michael. He is the Chief Investment Officer and head of the Global Fixed Income, Currency, and Commodities Group at JP Morgan Asset Management. Bob, let's start with the FOMC meeting because I don't know how closely you're following the tech moves that are here today.
Oh, I'm watching them pretty closely.
So what do you do?
I'm sure the FOMC is glad to see there's other news in the market that's not just them. This meeting should have been easy for them. Go in, point to the soft landing, playing out exactly as they had hoped. You have unemployment just above 4%. They meet their objective of full employment. You look at inflation. We look at the 3 and 6 month annualized run rate of core personal consumption expenditures. They're 2.3%. That looks pretty good. That's close enough to the 2% target. And then you also look at perhaps the real Fed funds rate is a little bit higher than they'd like to see it, but inflation is not quite at their target. That looks okay. And then you have all this policy noise coming out of Washington, and that's the big issue for them. How do you deal with that? How will they weigh that in their decision-making process?
Well, do you think they will bow to that? I mean, the market is kind of anticipating that they will, and I think you think this is the case too, that they will pause and this will be an extended pause.
Yeah, they'll pause. They've made no indication we'll do anything but pause, and they should. Wait out the next couple quarters, see how the data plays out, and be comfortable where they are. For them to cut rates further from here, they'd have to see material weakness in the labor market, and that doesn't look like it's coming.
If they did cut rates this go around, what would you think, given the political pressure to do so?
I'd be really surprised. I'd wonder how committed they are to their inflation target of 2%, and how could they ignore the policies that are being talked about in Washington?
Ignoring the policies, I wouldn't anticipate that they would ignore policies, but it's kind of hard to make policy decisions based on policies that haven't really been formalized at this point.
And yet cutting rates is making a policy decision.
Okay,
doing
so doing
nothing to me is the obvious thing for them to do. The economy is in great shape right now. They probably would have stood pat anyway, regardless of the noise coming from DC.
Okay, as you mentioned, it's not just noise from DC, it's also noise coming from the markets this morning when you see not just tech stocks that are down double digits, but also energy stocks as well. Everybody reassessing what it means to have DeepSeek out there.
Yeah, and it's also good to be a bond investor when there are yields back in the market again, because they can serve as the anchor in the storm. That's what we've seen this morning. There was a flight to quality, the safe haven, the Treasury dropped 12, 13 basis points to 450. It's hard to do that when it's 1%.
So you're feeling pretty good just because it's making your wheelhouse look like a better place to be?
Yeah, it's making our clients' lives a lot easier. They've underallocated to fixed income over the last couple of years for very good reason. They were getting good yield in cash, equities were doing well. Why put money into a fixed income market which had low yields and where yields were rising? Now they see higher yields. They could put money in the aggregate bond market at 5%, they could put it in high yield at over 7%. You can go into bank loans at 9%. That helps them achieve their objectives.
Because technology may not be the generator that we've seen in stocks over the last year plus?
Well, from a fixed income standpoint, it could also be disinflationary, and maybe that's what we're seeing from DeepSeek, that there are cheaper ways to do things. Bond markets will like that.
Yeah, I guess you look to what happens longer term with this too, what it's going to mean for productivity.
It should be really good. The Fed targets wage gains of 3.5% to 4%. We're kind of in that sweet spot now. They think 2% of that 3.5% to 4% is inflation. The balance of 1.5% to 2% they like to see from productivity gains. It looks like we're going to continue to see those.
Okay. So happy days for you?
Feels like it, certainly today.
Bob Michael, thank you for being here today. We appreciate it.
Happy to be here.
Okay. Coming up next, an interview you do not want to miss. If you're the CEO of a company in America or somebody who invests in one, here we come. DEI activist Robbie Starbuck on what JP Morgan CEO Jamie Dimon told us last week in Davos. Stay tuned. We're coming right back after this.
Your slip-ins.
There's been a vibe shift. We talked about it a lot here in Davos. A rebuke of ESG, a rebuke of DEI. Robbie Starbuck is out there going after companies. You now have a couple of activists going after your company.
Really?
Are you aware of this?
Bring them on. I'm not aware of it.
So that's what I was going to ask you, in terms of what you think your approach to DEI should be, given that we've seen a whole number of companies effectively end these programs, in large part under pressure.
But we're very proud of what we've done. And what we've done is lift up cities, schools, states, hospitals, countries, companies, and we're going to do more of the same.
So you're going to tell these activists to go pound sand, it sounds like.
I don't know what you're talking about. If they've got something that we're doing wrong, I'd listen to what they have to say.
That was JP Morgan CEO Jamie Dimon with us in Davos last week. Following that interview, activist, investor, DEI activist, I should say, Robbie Starbuck, releasing a video of his own angling for a debate with Dimon.
You can defend what you guys have done, and then we'll let the American public decide if DEI at JP Morgan Chase has been done in a way that is fair, compliant with the law, and certainly just all above board.
Right now, I want to bring in the man behind that video. I don't know if we're going to get a full-on debate, but we're going to try here. Activist DEI Robbie Starbuck. Robbie, it's good to see you. We got to talk a lot about some of the work that you've been doing last week in Davos, just given the number of companies that have ended a lot of the DEI programs. I'm curious, I was looking at what JP Morgan's done, and I think there's lots of different definitions of DEI. I think there's quotas on one end, and affirmative action, which I think a lot of people think maybe have gone too far.
There's some of the things in terms of supporting transgender and other kinds of activities that are for employees or other things that I know you've argued against. But then I was looking at this. J.P. Morgan put out a release, this is a couple of years ago, said J.P. Morgan Chase commits $350 million to grow Black, Latinx, and women-owned small businesses. And I sort of looked at that and I thought, you know, maybe that's a different version of DEI that you would support insofar as perhaps, and maybe it's good faith, I would hope it's in good faith that J.P. Morgan thinks that by investing in those markets, they can grow those markets and therefore grow their market. And how you think about that?
Well, first of all, using the term Latinx is something that's wildly offensive to most Latinos and Hispanics. And I think that the election kind of showed everybody the evidence that Latinos are moving away from a party that continues to use that kind of terminology. So if I were Jamie, I'd be embarrassed for using that. But beyond that, I would say, you know, anything you do as a company should not be considering race or ethnicity. And I think that's sort of the basis of the civil rights movement, right? So if you want to be sort of compliant and believe in these things that we always talked about, like equality and fairness, then we should be doing things fairly above board and not singling out people by race.
Well, but here's a question for you, and I ask it in good faith. I was talking to some CEOs actually last week in Davos who were talking about how one of the things that's happened in the last 4 years is they've expanded where they look for new employees. A lot of them have expanded after George Floyd's murder, in truth, to look at some of the HBCs, I'm thinking of Morehouse and other places like that. They say because they want to expand and find more talent. Do you look at that and say that that's an affirmative action program, or do you think that that could be done in good faith?
I look at this and say this is an affirmative action program. This is a JP Morgan program called Black Pathways Fellowship, and they have one for Latinos as well. And the actual result of that is that 67% of their interns are minorities, okay? We live in a country that's vast majority white still. That obviously tells you that these programs are having a, you know, preferential treatment basis for these other groups of people. And I'm not saying that people of all races shouldn't be represented. They should, but I think proportional to society, you would expect it to be if it was occurring naturally. It's not occurring naturally. This is something very clearly where they're putting their finger on the scales. And if you look at sort of the laws on the books, that's something that should be, I think, by any reasonable person seen as illegal.
Well, let me ask you this. So Ken Fraser used to be the CEO of Merck, African-American, one of the most prominent African-American CEOs in the country at the time. And he talked on this broadcast about getting an opportunity, getting a chance that he said he thought would have otherwise been unavailable to him had someone not sort of said, you know what, I'm going to take a chance on this guy because he did not look like everybody else. And I think there's also an argument to be made that once he got that job, he created an opportunity for lots of other people who looked at him, African Americans who looked at him as a role model. And I'm just, again, in a good faith way, curious, again, because I'm trying to wrap my head around what the right answer is here, whether that should happen, because if it doesn't happen, it'll never happen, right? It becomes a self-perpetuating thing.
I would say this. I think people need perspective. My family came from Cuba. My mom was a penniless refugee. She came here not speaking English, and they lost everything to communism, everything they ever worked for. And so for me as a kid, I grew up in America knowing that I was incredibly lucky to be an American because we had actual opportunity here, that wasn't going to happen to me. I wasn't going to have the state come down, steal everything I ever worked for, and I wouldn't be able to advance. So I believed in the promise and opportunity of America, and I never needed a leg up. I never used some special program to get somewhere in life. I believe that with opportunity, if you put your mind to anything, you can achieve it in this country. That is a blessing to all of us. So anybody who wants to pretend that we have it so bad in America, or if you're a minority, you can't make it, it's the types of excuses that perpetuate victimhood that keep people down. So embrace the opportunity we have here in America. Make the most of it. Anybody can achieve what they want to achieve if they put their mind to it in America. There's not this artificial barrier that people would like to believe there is.
Well, let me ask you a different one. And I spent a lot of time, I think like you do, because we've communicated on X. And there was an interesting, I don't know if it was a meme or just a whole bunch of threads going around J.D. Vance, who obviously is a very smart, very, very smart guy who got into Yale Law School. And there was an argument being advanced, frankly, by some conservatives, it appeared, that he was a beneficiary of DEI, not in the classic sense that you might think, but because of his background and where he came from, that if you were at Yale Law School and you were looking to have a, quote, diverse group of people, not necessarily by race,
but by geography, for example, and by background and history, that he was a beneficiary to some degree of that. We'll never know. What do you think of that?
I think it's ludicrous. I've never seen this argument advanced. I think it's honestly kind of funny. J.D. Vance is an American success story. I think he is the American dream. He embodies it. And to go from where he went in America and lift himself up to the vice presidency is a testament to exactly what I said, that anybody can do anything in this country, to be born in the conditions he was born into. And you'd have this group of people within DEI tell you that somebody like J.D. has white privilege. It was no privilege for him to grow up around a drug-addicted mom, to grow up in an abusive environment, and to lift himself up out of it. There are a ton of minorities born into much better positions in this country who make, nowhere near that of themselves. And then there's other minorities who have the most terrible conditions they're born into and make an incredible life for themselves. It's
I don't disagree with you.
Seizing opportunity.
By the way, Robbie, you and I think, agree largely on a lot of things. That the issue, I think, is, I remember someone telling me when I was in high school, your family should move to Montana, because if your family moved to Montana, you'd have a better chance of getting into an Ivy League school. I remember this. I remember the conversation. And why would that be? Because I was in New York, where a lot of people, on the East Coast go to these schools, and the view was that if you were in a state where that a lot of these kids didn't come from, that unto itself would be considered diversity. I ask because I think there's a question about what DEI is, whether we're talking about quotas and affirmative action, whether we're talking about something else. And as CEOs are thinking about how to restructure these programs, in large part, not just under pressure from you, but because of, I think, the sort of natural pressures that are happening in the country, politically and otherwise, what the right answer is. And is there a way to do some of this, if it's in good faith, to try to find the right next new generation of people working at their firms with not doing the things that may take it too far? Meaning, is there a middle ground?
I think there is a middle ground called fairness. The situation you just described is one that today is playing out very differently. That's a time long ago, not to say you're old or anything, but we're getting a little older, right? And that time is not the reality we're living in now. The reality now, if we're being very honest, is one where my kids can check a box that says Latino, or they can check one that says white because their mom's Scottish, right? And we're very aware if they check the Latino box going into college or going into the workplace, they have a much better chance of getting into school or getting that job. Now, what does that tell you? That tells you that it is patently unfair to other people. This is racism in a different form by a different name. And as long as it is that, it's wrong. Because at the core of what we believe in, it's that we should all be treated fairly. It's that our color shouldn't matter, ethnicity shouldn't matter. And if you look at what these companies have become, I think it's really a shell of what they can be. Because if they embrace the American dream that really was the envy of the world for so long, we can be, again, the most dominant, the greatest, without question, country on the face of this earth. It's this stuff we've gotten into, like training with the genderbread man. This is something J.P. Morgan does, by the way. This is an actual training. Genderbread man. Are we serious? We're adults here, right? We have a $30 billion commitment to racial equity. This is racism in another form, $30 billion. And Dylan Mulvaney started the big Bud Light fiasco, right? Mm-hmm. Guess who sponsored a Dylan Mulvaney event for children? J.P. Morgan. That was recently, okay? These programs have gone wildly out of control. They are a Trojan horse for left-wing policy. If we're being completely honest, that is what they have become. So if we want to talk about how we get back to fairness in this country, it's embracing the idea of the American dream. Stop looking at each other by their skin color. Stop looking at them as a certain sex. Stop asking what their sexual proclivities are at work. And just get back to fairness and judging people on merit.
Robbie Starbuck, thank you for joining us. A lot of people focused on your words, and we appreciate you joining us this morning very, very much.
Thank you. Appreciate it.
Thank you. You bet. Talk to you soon. When we come back, Squawk Box has a lot more to talk AI and more after this.
let's take another look at the futures markets this morning. The Dow is indicated off by just over 340 points. The S&P futures down by 127. The NASDAQ down by close to 750. We are off the worst levels of the morning. The NASDAQ was down by over 1,000 points when we started the show 3 hours ago. It's off right now by about 3.4%. The decline for the Dow, just 0.75%. S&P is indicated down by about 2%. And of course, this all comes as people try and figure out what to make from this Chinese entrant into the AI world. One that looks as if it is more energy efficient, more efficient and effective in terms of using chips. And that's got a lot of people asking questions this morning. We still don't know a whole lot about it. It is open source. We will have many people who are looking at this, but you're looking at some of the losers there this morning. NVIDIA is down by close to 11%. Marvell Technology off by close to 12%. Broadcom down by 10.3%. We've also seen treasuries pick up a bid, and those yields come down as a result of all this too. 453 for the 10-year. That does it for us today, but we will be right back here with you tomorrow. Right now it's time for Squawk on the Street.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. The DeepSeek freakout is in full display as China's free open source model throws into question the entire AI build-out. NVIDIA briefly was set for its biggest one-day drop in 5 years. A ton of earnings and macro definitely on deck for the week. Our roadmap will begin with NVIDIA, Broadcom, and the chips in general plunging as the broader market also is lower ahead of the open on news that this Chinese company has built a lower cost and possibly competitive AI model.
Plus, we also have the Fed on deck. Despite rate cut demands from President Trump, the Fed is expected to remain on hold this week. And we're keeping an eye on shares of AT&T. They're rallying in the pre-market. Fourth quarter profit was up sharply. The company's bundled 5G fiber plans boosting holiday quarter subscriptions. But it's all about one thing this morning, Carl.
That is for sure. This morning's sell-off sparked by this Chinese AI startup called DeepSeek. If you haven't heard about it by now, it has surged to #1 on Apple's App Store. It has surpassed ChatGPT. Its success with a less expensive model has taken a toll on shares of NVIDIA and other chip makers, Jim. Andreessen calls it the AI Sputnik moment.
Right. Look, I think you can certainly make any claim you want. I think that what matters to me is, in the end, is numbers. Do you pause your NVIDIA orders? Do you just say, you know what, I've spent a lot on NVIDIA, now I can hold back? Or is this some sort of prisoner's dilemma where if you hold back, then maybe Ellison goes and buys? I think that NVIDIA's really the target here because it's cost so much money and it just doesn't seem to be able to command that kind of money if this is that good. But David, I'm going to leave you with something I think is really important.
Please.
What?
Please leave me with something that's really important.
Well, I mean, this is a Chinese product.
It is.
Okay, so what I put into my very helpful DeepSeek is what famous picture has a man with grocery bags in front of a tank? And it initially says the famous picture you're referring to are Tank Man, Unknown Rebel, June 5, 1989. Within, I'd say, maybe about as fast as Saquon got that first touchdown, it says, it takes that back and says, sorry, I can't help you with that. And then secondarily, it says, sorry, that's beyond my current scope. Let's talk about something else. So against the idea that you're spending too much on NVIDIA is a censorship that I don't really think that American companies can trust.
By the way, a warning to everybody who's downloading it as well. Read the terms of service. Just read them carefully. I believe they may have access to all of your Gmail and be able to crawl all over it. Well, you may want to get rid of it. That's got to be an issue. As we, of course, continue to talk about and debate TikTok as a national security threat. Just keep in mind. Now, that said, when it comes to DeepSeek, listen, it was December 30th when we first heard about the performance of this Chinese AI model. Deirdre Bose has done great reporting on it since then as well. It was the 20th. It was the inauguration day when we got these latest numbers. So even though we heard this was on the 20th and sort of built as that last week went along, you had the Stargate announcement of 100 billion, maybe as much as 500 billion. You had Zuckerberg on Friday say 60 to 65 billion in CapEx. You had Nadella reiterate 80 billion for Azure. So the numbers, to the extent that these leaders in technology were at least somewhat aware of this, did not get impacted. And You've got a lot of panic this morning, and over last night. First I heard about Jevons paradox was last night, I have to say, and now
Good luck escaping it
in
today.
the 12 hours since then, I've heard about it 17 times. I was like, who? Last night I'm like, who's Jevon? Come on, man. And it's like, well, it's this economist back in 1865 in Great Britain talked about the coal industry and said, hey, listen, if you haven't improved the efficiency with a natural resource,
it's Occam's razor.
You actually get a lot more usage. That is being used by the bulls this morning as a reason why nothing will really change. Yes,
I know, isn't it funny?
The performance of DeepSeek is real. The efficiency is real. How they got there, less clear.
But we don't know how many chips they really use.
We don't.
But you know,
We don't.
not exactly.
When Andrew had on the guy from Scale of AI.
Anthropic?
No, on Friday. Scale AI, he said 50,000 GPUs from NVIDIA, H100s. We don't know.
And not the powerful ones.
Thank you, Alexander Wang. But we do know that their model training involves reinforcement learning, lighter weight techniques called group level policy optimization versus proximal policy optimization. They skip supervised fine tuning. They use other techniques such as multi-head latent attention, mixture of experts enhancements, and multi-token prediction. And, by the way, they also distilled down from using OpenAI because a lot of people have done searches where it thinks it's ChatGPT.
All right, so let me come right back to you and say, do you think that those people you mentioned at the beginning, do you think of Mark Zuckerberg, Larry Ellison, were they unaware and therefore didn't need to make a commitment of spend? Or does this just show you they were totally aware and they're dismissing it?
I don't know the answer to that.
I don't either. That's
I
where
don't
I came
really
out
know
this
the
weekend.
answer to
I
that,
don't know
Jim.
either.
I can't say with any...
I know, and that's what's killing me today.
You know...
can't determine it.
But from a stock market perspective, I mean, take a look today. It's obviously, it's going to be power. It's going to be the data center companies. Vertiv is getting crushed.
Yeah, the so-called build out.
Right, because there is this question as to whether you can do a lot more with less, and therefore you need fewer chips and less power, or is Jevons paradox going to be proved correct yet again?
Well, exactly. I was wondering that myself when I was looking at GE Vernova and Constellation Energy Group. Look, Carl, I think that in the end, again, it always comes back to, can NVIDIA make its numbers? And I think it's harder. You know, I like NVIDIA, but I think it's harder. We haven't heard from them, but it's a quiet period. Who are the winners? I mean, Mark Benioff has gone out multiple times saying he's the winner. He's going back and forth with Mark this weekend. And what Mark is saying to me is, don't you see the value is in the data? The value is not in the hardware. So if you sell down Salesforce, that's like a second-day rally. What are the second day's rally? It's very interesting. Apple not going down. Qualcomm not going down makes no sense whatsoever, but their adherence of Qualcomm. What I find most interesting is that the fellow travelers to these are the nuclear stocks that have been up a lot, are the Palantirs, are the memes, are the crypto. So it looks like they're all one stock, and that is not good.
Right.
That's not good because that says you have hype and froth in here that has to come out no matter what.
Where correlation spikes.
Yes,
We're familiar with those types of those periods of fear.
Yes.
Where there's less differentiation. There is, you mentioned Apple kind of trades defensively on days like this.
Yes, it does. It trades, although it's got very high, plus 30 multiple.
They're not in that. They're not spending the money.
Right.
They're that free rider we talk about in terms of they don't care where it comes from. They're just going to use it for their customers in terms of whatever the advances are in AI.
Then there's a fellow travelers, Broadcom. Marvell, Melius recommends...
Well, that's all data center, though,
that's
right?
That's all data center. Broadcom, of course, we know has far more than data center, but today no one cares that it's...
But the move up in Broadcom over the last year...
Extraordinary move up, because there have been so many reasons to buy the stock, but Marvell's had, in the Melius piece today, talks about just huge numbers, but all these could be pushed back. Look, there is no doubt, and I sent a note to people this weekend from the club. Look, this is the seminal thing, but I think what really... I know this could have sounded like the old days, but what do you do when you have these situations? You buy Bristol Myers.
Right.
And that's what people are going to do.
Stacy Raskin, an analyst I turn to a number of times when it comes to, he's very good on the chips. I mean, again, nobody's questioning the performance of the actual model.
No.
It's real.
Yes, but not for for science, but not for anything. I mean, I tried to do a couple of I tried to get it to give me Netflix's performance from 2010.
Right.
And it says I can't do that.
Okay.
Well, I mean, honestly,
but those
I
who
could
measure
do
these
that.
things believe and are
No, I know.
recognizing the efficiencies that have been gained. Again, we don't know how much money they've really spent. It's
And we
hard
don't
to
know how many. We don't know how much NVIDIA they really
But
have.
I mean, here's Razgan talking about. Listen, our reaction is not panic at all. We acknowledge DeepSeek may have reduced costs of achieving equivalent model performance by, let's say, 10x. But we also note that current trajectories, model cost trajectories, are increasing by about that much every year anyway. So it can't continue forever.
Well, you know, remember Blackwell, which is the current iteration. Blackwell is about video, okay? It's just about video. And video is incredibly important because video is the ability to make it so that robots work. Robots do not work on the current one. And I think robots are the next frontier, so I don't think necessarily that, well, I mean, he's talking a lot in Germany now, that Elon Musk may be focused on many different things, that Elon Musk says, I don't want to buy NVIDIA's chips.
Interestingly, I think we're going to get a progress report on Grok, which is the AI model from Elon Musk related to XAI, but also part of X itself, the X platform.
I know.
Remember, we talked about the supercluster in Memphis. That's the biggest in the world, as far as I'm aware. 100,000 going up to 200,000.
And they need video.
H100. So, but I think we're going to get an update on that this week at some point. I know we have Tesla earnings. It's not the same thing. But let's see what they have to say, and I'll be curious to hear what Musk has to say as well.
Well,
obviously.
I want to hear what Jensen said. Now, how many of us have said we need different Jensen?
What has Jensen said? Have you had any?
Well, I went to Jensen's people. I did not go directly to Jensen. You're like my wife. I'm at the middle of the game.
I am.
She goes,
I am your
hey,
wife.
don't you think it's time to text Jensen? I said, do you mind if I watch to see whether we win the game first?
I'm your TV wife.
Let's just see if we can get this covered.
You're
TV
fretting about
Did
Jensen.
you call Jensen?
No,
Why didn't you call
in the middle of the game, you're more worried about Jensen. He said, you go to see Josh Harris, you're worried about Jensen. How about the game?
Game was over, 10 minutes left in the fourth quarter. Why didn't you call Jensen?
She said on the way home, I should call Jensen.
Well,
I said, I don't have that kind of relationship.
We are going to get to ask Meta and Apple, at least, and Microsoft this week on earnings.
There's a lot of people we can ask.
It's going to permeate the calls.
It's going to permeate the calls, without a doubt. Everybody's going to be asking. Right now, though, so what do you take a shot here and buy NVIDIA down 10%, or Broadcom down 10%, or Vertex down 14%?
I do not have the knowledge to be able to make that decision. It's better to own that.
I know.
Look, before I came up here, we sat and we said, can we just make a determination, or is the determination that we don't want to let anybody down, so we can't make that? And I feel like whatever you do, maybe, betwixt or between at the opening. But sometimes you have to admit, like if you were at the hedge fund, you just say, I'm not sure what to do. And it's not a cop-out. I'm not sure what to do.
Speaking of hedge funds, I mean, this thing came from a hedge fund. Yes. Which I know we're going to hear more about, I'm sure, from you.
I sure wish I did. I said in my note this weekend, I said, I'm very concerned. I don't know what's worth.
It's like the guys at Jane Street decided to create an LLM instead of investing money.
Well, when in doubt, do you go against Zuckerberg, do you go against Ellison? And I come back and say, I don't know. Sometimes it's better to say, I don't know.
It is an important gut check at the moment. Speaking of Eunice Yoon, let's turn to her in Beijing, who can help us understand some of the personalities behind this model, Eunice, and maybe shed some light on the theory that this is some kind of psychological operation.
Well, a lot of people here are feeling very good about this company now. The state media has been describing this as a major win for China, not only on a technological front, but also over Washington. The state media commentary has been very interesting, saying that China is a dark horse in AI, and Xinhua, the state news agency, has said that China AI now thwarts the U.S. technological curves. Now, in terms of personality, a lot of the focus here has been on the founder of DeepSeek. His name is Liang Wenfeng, and he's a co-founder of a hedge fund called High Flyer, and a lot of the description has been about his rise from a small town, a rural city in the manufacturing belt of Guangdong, and then studying IT. His father was a primary education teacher, and then eventually rising to running this hedge fund and then backing this highly successful AI company. Among the Chinese entrepreneurs, he was among several Chinese entrepreneurs who met with the premier Li Qiang last week. One other interesting description of DeepSeek here is that it's being described as the PDD of AI. And of course, you guys are very familiar with Pinot Noir, PDD, and one of the ways in which PDD was able to really make a name for itself is that it was able to cut prices so much and really bring costs down among the retailers, such as Alibaba as well as JD. So people are really talking about here how this company, DeepSeek, has been able to do something similar for AI. Guys?
Yeah, I mean, Eunice, one of the big conversation points around here has been so much for the not sending the highest end chips to China, it hasn't mattered. They've been able to figure it out somehow. Is that part of the conversation as well that you're hearing?
Yeah, no, definitely. That's why I was, in the state media, a lot of it is we've been able to achieve something that wasn't really expected by thwarting the U.S. curbs. So you don't necessarily need, like as much technology as maybe people had expected.
Well, Eunice, look, I want to believe that there is the United States is still ahead. I know that that's really one focus, not really our focus, with the Chinese pass us the Sputnik moment. But are we even sure? And do we know whether these people have 500,000 GPUs or 5,000 GPUs? Why should we trust the stories we're getting?
Well, that's a good question. I think a lot of people here are also wondering about kind of the details of this company because it's come onto the scene quite quickly. People are wondering where the money is from. There have been some questions about whether or not some of it was government. Then, if you look at the research, it looks as though it's a very private company owned by the founder himself as well as two other friends. So there are a lot of different questions about exactly how this company has been able to do this. But, still, we're just going to have to wait and see.
Eunice, appreciate it. On another day, we might be talking about the manufacturing PMI there, which fell to a 5-month low. But this is the story of the day for sure. Eunice soon in Beijing. Take a look at the pre-market. Everything we've just been discussing is getting reflected in the futures, which are off the session lows, turning into a bit of a macro event as well, with the 10-year down below 4.5 for a moment. That will be your year-to-date low. Squawk on the Street continues in a minute. take a look at some of the laggards in the firing line of the DeepSeek theme this morning. Constellation Energy, Marvell, NVIDIA, Broadcom. It extends to GE Vernova and Vistra, and even Dell and Palantir and Bitcoin. We'll get to all of that, what it means for the broader market, and Kramer's Mad Dash and the opening bell in just a few minutes.
NBC.
All right, a little less than 8 minutes before we get to a very tumultuous opening bell.
Right.
I think it's fair to say.
Even though I would like to have a Shake Shack burger right now.
Well, I think we'll have one during lunch. They're going to do the honors ringing the bell in about 7.5 minutes. But let's get to something away from DeepSeek and the implosion going on among some of the hyperscaler spending plans potentially. Talk SoFi.
Right, now SoFi is Anthony Noto. He's made a major turn. The stock used to be much lower. The shorts were all over it. He just delivered consistent. He's flipped the model to be a little more financial service and a little less banking. He does report this morning. Now, people are going to say, wait a second, it must have been a miss. No, the actual quarter was good. It must be the forecast. Only one line, the EBITDA was light. People were looking for 905 million, and they came at 845. My problem here, David, is why would I sell it over a forecast and not the fact that it's doing quite well? And the answer is DeepSeek. In other words,
it's just getting caught up in that.
Because
it's not because it's had such a great year and a great move, obviously.
It's the kind of the secondary of like, well, wait a second, have we overstayed our welcome in a red hot stock? And I think, David, the red hot stocks today are trading as a unit. And SoFi's being caught up in that. Now, do I want to buy SoFi? It's just had such a big move. That's the problem. We've had stocks that have such big moves. Why do we just come in today and say, you know what? I'm going to buy it down 10 without any particular answer. And so what people are going to say is, I want to see what happens during the day. I feel that way myself about a lot of these, like a GE Vernova, which I've really liked for a long time. But do I want to step in right here with the GE Vernova and say, this is it? I don't feel capable to be able to say, this is it. SoFi, GE Vernova, none of these.
You can see what we're looking for in terms of an open that's a little less than 6 minutes away. By the way, you can catch us anytime and anywhere by listening to and following the Squawk on the Street Opening Bell podcast. We're back in just a minute.
What's more dangerous is they have the best open source model, and all the American developers are building on that. That's more dangerous because then they get to own the mind share, the ecosystem. If the entire American AI ecosystem, look, in general, it's known that once open source is caught up or improved over closed source software, all developers migrate to that.
That's the CEO of Perplexity with our Deirdre Bosa earlier this month on the dangers of DeepSeek and the open source model for the AI ecosystem, Jim. It sounds like that's the bigger debate this morning, is what it means for open source.
Yeah, I know that, again, that's I don't want to front run Mark Zuckerberg, but what he's saying, I would say that we do have tremendous chip allocation problems here, and I know that, David, if you have open source, would you think that you do not need as many chips?
Not necessarily,
right?
But
not necessarily.
I mean, again, we don't fully know. I would say Meta's Jan LeCun, who is one of the great AI scientists, did laud this accomplishment at DeepSeek, and obviously also said it's an endorsement and a victory for open source.
Right.
They used open source. They certainly seem to, though, have also piggybanked to a certain extent on the back of OpenAI. They did use a lot of creative ways to go about creating the weights and the and the different aspects of it in terms of how they sort of reinforced it. A lot of questions, not a lot of answers, and a lot of selling that's going to take place this morning, Jim, as a result.
What do you think about the idea that Mark Benioff's right, and that there's going to be a move from hardware to software? That software is more valuable, the data is more valuable, the hardware is therefore commoditized by the open source. Commoditized.
To the extent that everything gets cheaper, you're going to be able to do more.
That's my point. It's going to be a switch. Now, I mean, Mark's talking his own book, but I would point out that, I mean, you watch ServiceNow to make a judgment too, that Mark Benioff is a huge believer that hardware is way too important versus what it should be. And he's not an enemy of NVIDIA at all.
Let's get the opening bell here at the big board at Shake Shack, celebrating 10 years. Listing Danny Meyer from the podium this morning at the NASDAQ Extreme Spark, an American Bitcoin miner, as we start to look for some signs of Jim, and how the market will view everything XMAG 7 today.
I mean, it is interesting, by the way, that Rob Lynch moved over to Shake Shack, and he's done a great job. But I will say that, obviously, not the right day to ring the opening bell in the sense of it's not in focus, but a good sense that he's brought the company to a growth pattern that's far in excess of what people thought it was going to have. Papa John's, turnaround night. And, you know, David, it's not such a bad idea to look away from one moment and go back, say, to healthcare, where the rotation was so powerful last week.
You talked about it towards the end of the week, and you said it was healthy. I'm not sure you had a sense what was coming on
I said
Monday
healthcare
morning,
was healthy.
but you did point to the potential
look at
broadening,
Abbott
so to
Labs.
speak. Wow, look at GV Vernova.
I know. Well, look at Abbott Labs then.
Just
Oh
to
my God, are you
reset it
serious?
For a moment, because of course the question becomes:
was there that much hot money
if
in
you can
that?
do so much more efficiently, do you then need as many data centers? Do you need to spend? The gating issue on all data centers, and really for this technology's advancement, is power. It's power, and that's why Constellation, GE Vernova, which has run up so much, are getting hit today. It's, you know, it's a example of just saying, all right, let's just get out for now. The multiples have moved up because, of course, the growth rates were assumed to have moved up.
Well, look, a bunch of the utilities behind the scenes, and by the way, NVIDIA at the low here.
All right.
A bunch of utilities behind the scenes have been telling me we would like to spend, but what happens if something comes out, Carl, that doesn't burn as hot? Then we would have spent a fortune.
Exactly.
And we don't want to go ratepayer versus data center. They didn't want to make that trade.
Yes, this makes earnings.
So we're at the 200. That's got to be the resistance to break on the SPY. Good morning, retail traders. That screaming on CNBC driving me nuts. We got NVIDIA with a good pullback. SPY 28th, the 600 strike. See if it pulls back to 600 strike. I get it right around 140. Good morning, retail traders. NVIDIA, AVGO, I kind of have my eye on. Tesla Tesla hit my support of 387 and bounced up to 406. SPY's down $10. SPX is down 110. Oh, perfect. Right off the 200. That's a good solid support right there. Okay, here we're coming down on my SPY. I don't know which one to do first. I'm going to do SPY first. I'm looking at the 600. That's the one I'm looking at. If I can get this thing to 130, 140. Without it breaking the 200. Everybody hear me fine? What the heck? The way that CNBC's been pumping this AI, I'm kind of laughing in their face right now. Ooh. There's a 20-cent bounce on the 600 strike just now. We got to break the 200 for it to elevate. That's on the 1 hour. We got an expansion pattern on the day, on the minute. /DX. Market sell off, markets drop as tech drags indices down. So we got a supported level here on, we got a head and shoulders development on the Nvidia. I don't know if I'm really ready for that yet. I'm using the body of the candle to elevate this a higher low. So 124.67 would be a strong buy. They could start taking off on the SPX here. We could have a real big day if this market decides to go ahead and blow it off. I think they're a little overreaction myself. We've established the first support at 597.22. Apple's heck yeah, Apple had a pop. We've got earnings coming out on Apple this week. I crashed the markets because I wanted to have a better buy. Okay, we're retesting now. This is going to be the Randy, watch Apple right here. I mean, not Apple, but SPX. Apple's running up. I mean, SPY. Shit. 600 strike. January 28th. And we got the VWAP right around 595.89. That'd be a good way to look at it. NVIDIA's pulled back to support. The first one, the head and shoulders. Now we could break out, come back up, and then retest it, or we come down and hit this other trend line for a buy. I'm going to look at NVIDIA. I'm not really sold on it yet. I wish I still had Apple. The 31st. The 130 strike. There's definitely people stuck in NVIDIA. There's no doubt in my mind. These are the 325. Give the date a little bit more time if you're still a little nervous. Woo! Magnificent gets an A+. It's more of a win for Apple that doesn't have AI than all at this point. And if this thing don't pop here in a second, I'm getting out of it. NVIDIA. There's the double top right there. If we don't break here, I'm going to sell it. I should get out right now at 355. I'm going to take off my shoes and my apron. That's a good call. Do you have a resistance? I have a resistance. $228.85 and then $233.67. We just hit the 200 right here on the 1 hour right now. They're going to put a stop on this trade if I don't. TWLO popped a little bit. Tesla's up. Tesla joins court, challenges the EU tariffs on Chinese EVs. What, Biden put tariffs on China? Yeah, he did, didn't he? No wonder they hate him. SPX is rubbing up against the 9 and squeezing between the 21. Yeah, I think I'm going to get out of this trade. We'll find out here in a second. That or I had 3 more. Now give me 6. Can't find DX/DX. Huh. Back to even on NVIDIA. $227.75 is my resistance to break on Apple. Anybody get in that trade? The 235s, if it breaks, I'm going to put a little price line on that 227.75 area. Resistance to break. There it is right there, damn it. I was right on it. It's hard for me to do that. Got it. $227.75, we go higher. I said it. Now SPY pulled, oh, that's the Apple. I'm going to take off my shoes. I always feel better wearing my shoe without my shoes. But we'll try my new. Today I got a new shoe this weekend. I'll be posting them in a second. We have the Polo house slipper. Retail $125. Nice comfortable fit. A lot better than the ones that I bought at Walmart for $20, and I got them for $65. That's the Polo house slipper. Okay, we're coming back to support here on Apple. We'll see if this holds. Now the contracts are at 202 right now, the 235s. I'll get a small portion of them. This is for the weekly. Right about now. We're at 191. I'll get 5 of them. With a tight stop. Warriors come out to play. Meta came back and bounced off the 200 this morning. Okay, we're back to 192. Been being very careful here. We're back at 191 again. Like, if it doesn't hold the 63 and the 50, I got to get out of it and wait for the 200. Three black crows. Damn it. Good alert set for the double bottom on the SPY. So I'd almost assume that, like what Magnificent said, stay away from the AI trades. All but me. I'm gonna go get my water going for my coffee. I really got a thirst for that right now. My coffee was on sale. Okay, I'm going to give this another shot, I think. NVIDIA. Amazon's looking good. Still in Apple. Mr. Coin. Mara. They all look the same. All the okay, Apple's at 207 now. And NVIDIA. SPX bounced off the 63. Well, the SPY did. Hit that double bottom, but it didn't trigger my alert. Just probably a penny off. Pot stocks. Hillary's down to 113. I mean, that's cheap. TLRY. Your low last week, or a 90-day, 190-day low on the hour. We've got a resistance level to break on a triple top on Apple at 598.77. I went and bought my coffee this morning. I got a little shook up, so it was on sale. Should have got a couple of them. Meta's breaking out. So far, I'm up for the day, but not much. I may say not much, I mean not much. I stopped out of NVIDIA at 325 where my even price was. Now we're down here at 216, kind of hovering around. And back to even. Now I'm even. Well, Meta's breaking out. JSPX and the SPY. Snow looking good. Tesla's earnings after hours on Wednesday. Thank you, Mannequin. Well, Apple didn't hold. Damn it. You can drop more now. Can't believe I ain't got no. I better not jinx myself. Okay. Got a double top on Meta at 649.87. Go away. Go away. Ghost riders in the sky. Back to green on my apple. We're about to hit that bottom support channel there. We're going to find out if this baby wants to hold and run back up for a scalp. You can do it, Jim. You need to make a big buck today. The market probably going to digest this deep state or whatever you want to call it. Deep, what do you call it? Deep seek? Could be a Chinese scam wanting to take the markets. Hey, Nancy, once you get up and get your ass out of the wheelchair, send me a glass of vodka and a Valium. We are now, I am up $50 on my Apple. If I was to buy these, they would be the 60/20s. And I'm going to get ready to buy them here in a second. The SPX, the 60/20s. But Jim, don't do it. Come on, you idiot. What do you think about that, gentlemen? Uh-oh. Uh-oh. I'm already up a couple $100 on these. Don't be telling Vegas. My apples are up at 211. Keep going, baby. We have a resistance level inside the channel at 6015.37. And the video is going to pop. Right now, my apple's up. $20 a contract. It's going to pop. It's going to pop like a zit. Thought you said puts. Oh, look at Apple. 219. And the video's got a double bottom, high or low. Ladies and gentlemen, this could be your spot. Magnificent, you're getting good. Did you have a vitamin this weekend? $227 on my Apple. I'm going to make a business decision. Jimmy just now sold his Apple. I hope you don't have a problem with it. Man, I finally got them bastards to call me. Out at 228. What do you think about that, Bob? We're at 229 again. And my SPX is at 680. I do believe we're going to see 6015.37. We are not having technical difficulties. We are not having technical difficulties. What was that called again? Deep State or Deep Seek? Can anybody in the room type that real fast? Deep Seek. I have a very short attention span. Now, ladies, we're at 9:20 on my calls here on the SPX. And I will make a vacation, an exit. I hope we don't disagree with that. At 9:30, I'm out. Now we have two of these three white soldiers. So as I look at this chart, I got to try to find me a resistance level and a support level. So I see scraps of a megaphone pattern, one being the upper resistance being right there, right at my resistance line, so I got a double confirmation. And then we've got another one right here for a mega. Means we can pull back again to that support level for the third time if we don't break here. And then you got to look for a pivot point. So the pivot point is this high and this low. And we're going to draw a trend line for support right there to right there. So this thing could bounce off the pivot point and still be bullish. And I'm going to create an alert just in case so I can go make me another cup of coffee and warm up my soupy. I want to see how the soup tastes. I used pepper flakes, and I should have not done that. That's a perfect support right there at $6,001.48. Now I've made a good $600 today, so I could call it a day. But I'm not going to, because I'm here to train minions. Minions. We're going to make millions. I have to give a good grade out to Magnificent for using his noggin. Today's trader of the day is Magnificent, because he thought about something I didn't think about. That's the only reason. For that, you get an A+ with a capital A. I know it's not sought after very much by me. I don't like giving A+ with a capital A, but in this case, you deserve it. For Apple, for calling out Apple, saying that we're at 250 right now, I could have held it. Made another $230. For calling out Apple, saying that it wouldn't be affected as much with this DeepSeek crap, which I think is a stupid name. Damn. My SPX has just now hit 1040. I'm having technical difficulties. And Apple, I sat there. So I left almost $400 on the table. I did leave $500 on the table. Sometimes, what? After I gave you an A+? Did anybody else take the Apple or the SPX, Randy? The question was asked. God. What you want is not what you get. Not after that last statement. You're lucky to get an A+ from me. Now you're asking for more? That's what I thought. You're just not into trading this shit show. You gotta deep seek it, man, baby. Deep seek. As the brothers would say back in the 60s. I remember the brothers back in the 60s and 70s, they all walked with a stride. They don't do that no more. They walk with guns. It's weird. You see, pointing their guns out, you know. And they used to say, with their high heel shoes, we used to walk with struts. Now it's guns. Jim, you're being racist again. Woo! So as I go into the kitchen and think about my trade here, kind of pissed off because I didn't hold that. It's at 264. This is almost left $400 right in one more second. If we get, I did leave $400 on here. We're at 268 on Apple. 270. It's going to hit my 228.85, and I did call it. I had a 1, 2 bits, 3B, 1, 2, 3, and another expansion pattern. Jesus, why didn't I see that earlier? Gonna fly like an eagle. Do you see what I see? An expansion pattern. Dadgum. He's got down to 135. They didn't get down that far, but they got down to 185, I thought. Ooh, what do we got here? Liquid water, where? Is this Mars? Boom again on what? Oh, don't make me sick. We're having technical difficulties. I do believe we're going to pull back to this here pivot point area. So I'm going to ask you to prepare ye in the name of the Lord. As you know, I went to church Sunday. It's the first time I've been to church in over 8, 9, 10, 12 years. And I really liked it. But I felt there wasn't enough pretty women in there. I was on a mission to look for a wife. So I sit down in the aisle. The guy turns around, his name Bill, and he looks at me and introduced himself together. And I heard the ladies talking behind him that he just got married. So I shook his hands and I said, well, he said he was, I asked him, somehow it come up that he was a widow. His wife died. And he pointed to the girl next to him. He said, yeah, I found her in Virginia. I said, damn. He's an old shriveled up old man. He had been at least 10 years older than me. So I'm the only guy sitting in church with a tie and a suit on. Everybody else. I'm going to keep wearing my suit. I don't care. We're at the top of the megaphone pattern. If I had any sense right now, I'd buy a put. But I'm going to make a business decision and go in there and get something to eat. So I'm going to show you guys a picture of me here on YouTube, how I looked Sunday when I went to church. So I sent this picture to a girl that I know. Oh, wrong picture. Woo! Wrong picture. That didn't go like that. Look at her. So I sent this picture to a girl that I know, and she sent it back to me, and she said, "Ew, stains on your jacket." I said, "Honey, that ain't stains on the jacket. It's on the mirror." And you said, "You wore that?" I said, "Yeah." Jimmy said he'd buy puts here, but I'm going to go in the kitchen and get my chicken soup warmed up, make another batch of coffee, and I'll be back to trade again. I'm happy with what I've done so far, but I expect to make a lot more. It'd be nice if this thing broke out of here and run all the way up to that 200. So I got an alert set. If I hear the ding go off, I'm going to run right back in here and buy this call. Same one. Apple's pulling back.
Point near those highs, 252 or so. Based on the close, though, it was more like 250. So we made our way all the way back up. Similar situation.
AVGO
is that we couldn't quite squeak out a higher close beyond even our previous close. There, it was not as good. A retreat back below our shorter term floor. 219 was another floor, so to speak, there, but the ultimate one was near 211, and we're hanging on there so far here. RSI has taken a big hit, green trend line broken below the 50 midline now. So now if we look at some key volume and standard deviation channel areas here, we can see that we have our 63-day EMA and our blue linear regression line, our line of best fit, just below where we are now, near about 207. So that could be a key point to watch. Then our repeated ceiling near 185 would be quite a painful fall, but that's the next area of note. To the upside, right here, +1 standard deviation channel, and that's where the heavier volume is at these elevated levels before we get to our highs near 250.
All right. Broadcom, I mean, look, you can see why they're trying to buy the dip on this thing. I mean, I don't know, it's down 13%. Are they? Are they not? It's a tough one because it looks like a place where if you believe in the stock, you kind of gotta buy this dip. Like if they don't buy this, then what use are the technicals, right? Because this should be recent support after carving out this range. You got the high end of the up channel. You got the moving average. I mean, tons there that seems set up for a clear buying opportunity. But I don't know, the candle's not that impressive.
We'll see. It's a tough one. It's a weird day. A lot of strange things can happen when there's a big price shock type of this. So when the dust settles, it might be like CrowdStrike. Remember that? It was like nothing ever happened.
Yeah. Kind of impressive by the bears to keep it down here below 215 and 211. Same deal with NVIDIA, by the way, which is down now 12.7%. So
I have to admit, it's a double bottom.
Vistra crushed right now.
Okay, so there's no more clear area of the market that's being crushed right now than those AI nuclear plays, because I think for a long time, I still have some skepticism around what actually DeepSeek means for the energy consumption, but right now nuclear has been tapped for a lot of the answers to these data centers' appetite for power, has been hugely positive for Vistra as well as Constellation Energy, Bloom Energy, so many of these companies like GE Vernova as well. So many of these complex challenges that have risen from the AI revolution, now DeepSeek is being maybe perhaps read as a sign of more things to come. if these models are as efficient
Prepare ye in the name of the Lord, Randy.
consume as much power, which then would obviously spell trouble for those
$6,001.48.
So I think that it's so early to say that one company from one country that operates in one type of AI is going to disrupt the way we've needed to consume energy. But that's what's being read today, is that maybe the mass energy consumption it was not this the true narrative.
It was also that hadn't even really kicked in yet. Think about the contracts that for example, we're talking Microsoft and Celgene. Constellation. Yeah. The fact that that's still baking years of demand. So when you start, that's how discounted cash flows work. When you start pricing things out way in advance, anything changes on the margin, it's going to have a pretty negative impact. All right, so look, there's incredible 52 weeks for the stock, Rick, and still we're tons up.
Nothing goes up forever. The steeper a trend is, the more difficult it is to sustain. And like you said, this has been a very remarkable mover for something that you might expect to be a little bit more sleepy, this kind of energy utility type company here. Nevertheless, upward type channel here. We had a rather steep rally with our blue trend line there. We capped out just shy of 200, and then the big give back today. Once again, though, for the fourth time, I guess, during this segment, we were treated back to a fairly predictable area. The bottom of our channel here, our trend line here, we're pretty close to the orange 63-day EMA as well, near about 149. So the day's still pretty early. We could see a pullback above that moving average there. Not saying it's a guarantee or anything. It's just, it wouldn't be a shocking situation for it to recover a bit to that level here. RSI, we did have a bit of a fake out though, a breakout above our channel, a breakout into the overbought area, and then the rug pull here. Now we've broken our trend line and we're below the 50 midline in terms of momentum. So if we were to try to assess this now, we've got our green line here that marks the start of our gap up. And our volume node there, near about 127. That's the next point of interest to the downside. To the upside, volume node is right about here, our 21-day EMA just above, and then we had this high point there as well. So between maybe 165 to 170 is an upside point to keep an eye on.
Another chart, again, that kind of seems like it's begging for dip buyers who believe in the trend, because, you're right at the bottom of the trend. If you go back to that RSI real fast, because you said something there that kind of made me chuckle, which was the rug pull. This is the technical definition of a rug pull. When you go from overbought to not quite oversold, but back below 50. So
no matter how many times it happens to you, it never gets easier.
Yes, it never is pleasant. Thanks, Rick, for the charts. Thank Jenny for the look at the earnings. Coming up, we've got a little chat, a little meetup. As markets rallied back, they are now coming back under some pressure a bit, with Russell lower by 0.25% now. Meta and Netflix did flip higher. Apple's just grinding away, but not a lot of buyers for Nvidia, not a lot of buyers for Broadcom, so we're still in the thick of it.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading. Downtown Light, uncovered news. Catch me on Fast Market, weekdays at noon on the Schwab.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
This is what I'm having for lunch. This is chicken, barley, vegetable, turmeric soup. And this is good. Very good. Celery and carrots, and bag of mixed vegetables, and chicken boobies.
standpoint too, whether it's GDP, whether it's PCE, and then you got a Fed meeting locked right in the middle of the week. There's a ton for investors to digest this week.
Yeah, and right now they're having to digest pretty uncomfortable selling, and some of those giants. To Joe's point about the equal weight outperforming, the heaviest names really are heavy today. Caroline, no buyers for Nvidia right now. Broadcom also.
I bought it.
I mean, just very little interest.
Yeah, I mean, Broadcom down more than 13% right now, and where we've seen some of the other names, we were talking about weakness in Meta this morning. Meta's actually turned positive after, the concerns around, rival AI LLMs, and clearly, not seeing the same for some of the chip makers. I do see Intel and onsemi higher today, so a few bucking the downtrend, Texas Instruments as well, but otherwise some pretty broad selling across the board for chip makers. And Mag 7 for the most part, aside from Apple and Meta getting hit pretty hard. And then, of course, I know you already talked about it with Jenny, but really seeing the weakness, the worst performers on the S&P 500 in the AI power play. You mentioned Vistra, Constellation Energy, GE Vernova, Vertiv, all down at least almost 20% or more. So there's clearly some
buying opportunity.
There are more efficient models in the pipeline. Maybe they won't require as much energy, which could impact some of those high flyers. I am seeing some other points of strength outside of Apple and Meta, though. If you take a look, a lot of the names that are reporting earnings this week are all in the green. Boeing, Starbucks, Visa, MasterCard, JetBlue, GM, UPS, Exxon, and Chevron, despite the fact that oil is lower. So I think that there's still some optimism ahead of earnings, and that's notable, but overall I think it's really big tech that's weighing on the major averages and offsetting some of the strength that we're actually seeing. And then healthcare and staples actually higher in the S&P 500, but not high enough to offset the weakness that we're seeing in technology and utilities.
Yeah, not enough lift there from some of those defensives, but at least they're helping even things out. Discretionary did flip, which is kind of nice. New home sales helped home builders take a bit of a bounce. The trade I was looking at this morning, Joe, was dollar mostly, because it seems like the stuff ahead of us this week errs more on the side generally of dollar positivity, yield positivity, than what we're getting this morning.
You would think. I mean, if you look at the expectations for central banks for all the other major economies cutting, and we're holding firm. I mean, I would translate that into dollar strength, and it's not what we're seeing right now. So that's interesting. There's something going on there. And then if you look even at our 10-year yield today, it's down to 4.55. So those are a couple of, I don't want to say anomalies, but something to keep your eye on, because usually the currency traders are pretty astute, right? Especially when it comes to expectations for different Fed policy changes throughout the world, different central bank policy changes. And like I said, if you're looking at the rest of the central banks and cutting
AVGO looks good here.
Firm, trying to figure out kind of what's going on there, and even some of the concerns that we heard over the weekend for what could be more tariffs, back and forth. You would think that would lead dollar strength. So just keep an eye on that. I think that might be a good indicator to watch.
Yeah, good stuff. Thanks, guys. Appreciate the thoughts. Caroline Woods, Joe Mazzola.
You give a crap
Thank you for tuning in the morning.
about Colombia.
Thanks for being with me.
They've killed so many people of ours
trying to reclaim some
with their shitty cocaine.
Still pretty ugly out there with some big selling in Nvidia, Broadcom, and many others. The nukes too. Nicole Pedalides coming up next from New York City.
Okay, SPX baby, here we go.
Join me, Oliver Rennick, alongside Schwab Network's options experts.
620.
The second derivative, Gamma On, is a brand new limited series
I'm in it.
to take your trading skills
To
to
win
the
it.
next level. Subscribe to Schwab Network's YouTube channel now.
Do 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 do.
Schwab Bank Investor Checking. the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward.
Find the next trend.
Come on now.
Click to every tip.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Ameritrade is now.
It can drop.
Bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim.
Look at that trend line.
Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network. Good Monday morning. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange, where we witnessed a huge sell-off in tech stocks in particular. We'll be covering that throughout this show, all on the heels of China's DeepSeek. Coming up, 360 Spotlight is AI. Technology stocks that are selling off 10, 20% today on this news of China's startup DeepSeek and the new large language model that we will cover. The disruptor today is Twilio, and that's moving higher after receiving an upgrade to a buy over
I love you.
Saks. Our panel takes a look at Verizon and AT&T after the telecom companies have both reported earnings
Ooh.
over the last couple of trading days. In the meantime, here's a look at stocks.
I'm getting ready to add on here.
Last week, but pulling back here right now, the Nasdaq is down nearly, look, it's 2.7%. Big move today, folks. Okay, it's down 580 points. Had been down 1,000 in the futures. So obviously coming up off the lows. The S&P is at 6,002, down 1.6%. The Dow's down 0.1%, and the Russell down 1/3%. Oil and gold both with down arrows, and gold is down $35 a troy ounce, and oil is at $73.52 the barrel, down $1.14. So we've seen that trend to the downside. The VIX definitely moves higher. It's up at a level of 18. The 10-year bond yield pulls back. It's at 4.55. And Bitcoin trade 101,200, down 3.5% roughly. Jenny Horn is with us, markets correspondent here on the
$5.
Network. We're taking a look at SoFi after its earnings report and lower guidance for profits. Let's hear a little about this story.
Yeah, Nicole, it's difficult, frankly, to find exactly what the street was really honing in on because, frankly, I think this is right now being tied more to the overall sell-off
480,
a lot of
460.
tech names, which SoFi, well, not necessarily an AI winner by any means, it's also been caught up in a lot of this momentum to the upside over the last several months. I mean, this has been one of the best performing names in fintech. So now, with these revenue and earnings figures that did come in ahead of estimates, they did say that they had their best year ever. So all this is good news. I mean, they saw shares tumble as much as almost 10%. We pulled back actually a bit from session lows here, but they did say financial guide from the company seemed to overshadow the really strong fiscal year and quarter. For the first quarter, they're forecasting net revenue between 725 and 745 million, and earnings of around 3 cents a share. Compare that to the 5 cents per share expected and the roughly 688 million expected. Again, I would say that the earnings were the big miss there because revenues actually came in a higher bar than had been expected. Now for fiscal 2025, they are expecting adjusted net revenue to fall between 3.2 and 3.275 billion. Earnings between around 25 to 27 cents a share. Again, those figures slightly beneath the mark as far as earnings, but actually revenue was better than expected in terms of guide. So the financial outlook for the first quarter, sure, definitely showing some signs of maybe some tempered growth, but I think all things considered, this was a really strong report. They saw total deposits grow to 26 billion, saw added around 785,000 new customers during the quarter, and did highlight the fact that they saw their financial services and tech platform make up a record 49% of their adjusted net revenue, up 40% from a quarter ago. I think that today's move right now is dictated by the overall market. Don't let it necessarily
Yeah, and
warrant
pepper's
your
a
overall
little bit too
financial
much.
outlook. So far,
It's
it's
still
a lot
good.
like here, frankly, Nicole.
All right, big moves today all over the place. This is a huge day on Wall Street ahead of a huge earnings week. To Jenny Horn, markets correspondent. Thank you so much. Good to see you. Let's get some insights from the news shaping the markets. For that, we welcome in William Lee, chief economist, Milken Institute. We have a lot to talk about. Want to talk about the Fed and want to talk about Trump. But can you talk about what's going on here with this news from China and this sell-off? What do you think? What do you make of it?
Hey, Nicole, this just reminds everybody that technological leads are really the hardest to maintain. Remember when the atomic bomb...
The hardest to maintain.
We had a monopoly of nuclear scientists. Well, right now in this AI revolution, which is even bigger than the development of the Manhattan Project, we don't have a monopoly on all the great programmers and different approaches to AI. And this is a reminder that the world so needs AI because it's the key to technological change, for higher productivity, higher wages, lower inflation. And China's shot across the bow telling everybody, hey, it may be a cheaper way of doing this, and we've got a handle on it. In some ways, this is a pat in the back for Chairman Xi, who said 10 years ago, AI and quantum computing and all these new technologies is the place where China's going to make its stake in the ground.
You know, if it's all real, if it's exactly what it seems like on paper, right? I mean, I think there's a lot of questions as you're hearing, right? All that glitters is gold. Is this really exactly what?
I don't think I did the right thing here.
About that, that's what I'm hearing. Tell me a little bit about this weekend.
What's Apple doing?
You know, obviously we'll have a lot of earnings, and then the Fed too is coming up. So tell me a little bit.
Apple's at 420.
Oh, absolutely, and in fact, the Fed is also sitting on an edge because they are truly now entering the Trump regime where uncertainty is still rampant. We got some clues as to what's going to come on because the inflation numbers that we have up till now for the last 6 months show that core inflation, even excluding housing, the service sector still remains a hotspot. Inflation isn't coming down the way the Fed had hoped as quickly.
Could have grabbed one there.
Insurance prices and car repairs and a lot of key service prices still showing high single-digit or double-digit gains. So the Fed, I think, is going to sit on its hands this meeting and say, where is the trend for inflation? Has it really turned the corner and really resumed an upward march, or is it just pausing at this high level? And that's something where the Fed's going to have to require more data.
I'm still in my calls.
The thing is that the California disasters, as well as the hurricane disasters in North Carolina and across the East Coast, are reminding everybody that there's a lot of construction to be done over the next few months and few years. And because of the severity of these huge shocks to the supply chain of construction that's forthcoming, the Fed normally overlooks this kind of stuff and says, okay, these are one-shot price increases. but the size and severity of all these disasters rolled together is I think putting some warning into the Fed's forecast about whether or not the raw materials and building supply prices will be coming down, or at least maybe even spike up and add to the inflationary pressure. So with that kind of uncertainty ahead of us, I think the Fed's going to be sitting on its hands for a while and saying, hey, let's check out where inflation really is, and whether or not actually on the other side, technological progress coming from AI might actually be accelerated, because if open AI, open source models or large language models is one way of getting a lot of the AI benefits.
I didn't get the 1030 memo.
Sooner than we think. So there's some positive aspects of this news, but that kind of uncertainty where there are too many forces acting at once definitely puts the Fed on hold for now.
Yeah, understood. You know, I'm also thinking about the Trump policies that are going in place, and so with the Fed sitting on their hands, at least
We got a megaphone.
to see what happens. I mean, what do you?
I'll load the boat. I ain't not scared.
Davos, of course, a lot coming out of there. Some of your thoughts on the Trump policies that can make the most difference to whether it's our economy or our stocks?
I think the speech that Trump made at Davos really made it clear to everybody around the world the U.S. is not only a willing partner to engage with everybody in the world, but Trump explicitly said it's better to deal with us as a partner than as a competitor. If you deal with us as a partner, I will give you the benefits of all of our producers of lower tax rates and less regulation. But if you insist on producing stuff abroad and importing to the United States, I'm going to make you pay for the privilege of accessing this large U.S. market. I'm going to show you how valuable it is by putting on tariffs and making it more difficult for you to produce abroad and import to the United States. That, I think, is a big stake in the ground. And I think the world leaders at Davos really got that message clearly, and everyone now is trying to...
Who's this Chinaman?
Allowing more capital to come into the United States and produce...
Who is this Chinaman?
Which I think is exactly what the Make America Great agenda is calling for: higher paying jobs, more domestic workers. And Trump really made it very clear and planted the flag very, very solidly, saying, be our friend and not our competitor.
You know, we got manufacturing. There are some concerns. I mean, about we keep getting mixed, stories, because sometimes we feel like the economy is taking off, and then sometimes
it's not, baby.
Slow down. You know, which one is it?
Well, I've come on the show many times warning about the dual Americas, right? How so many households are still paycheck to paycheck and having a very difficult time making ends meet, and the wages are not high enough. At the same time, you have all the strong GDP numbers. I mean, Atlanta GDP is still about around 3% growth for the coming quarter, and so you have this duality in the United States. The way of cutting through all this is, again, through productivity.
Break it.
You have to make every job pay more. The only way to do that is to make every worker more productive. Rearrange production in a way that people work more efficiently, give them tools at their workplace, possibly backed by AI, that will make each worker more productive. And so I think the duality of the United States is something that has plagued us for decades now, and it's just gotten worse. But I think right now there are glimmers of hope, both on the AI side, as I said. If these open source large language models is a way to get cheaper AI developments more forthcoming sooner, that is really the key to unlocking all of these positive gains.
All right, William Lee, Milken Institute, great to see you always. Thank you for a setup for an important week, really, thank you. Plenty more to come here on Trading 360. Up next is the Big Three stocks, 3 charts, 3 trades. Rick Ducat will take us through the technicals. Scott Power, Prosper Trading Academy, standing by. And he has trades for Vista. He's taking a look at these names, and some of these names are moving big time. Alibaba and Cameco. We'll be right back.
Alibaba. Do 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 do. Spy is at the VWAP, just above the 200 SMA. There we go. Break it. Oh, break it. Doot, 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 doot. How dare you? Vegas wouldn't talk to me for a week if I burped on our channel. I told her one day, I said, baby, I'd rather burp and taste it than fart and waste it. If we break above the pivot point, we will be in game. If not, we'll pull back to the Hall of Shame. And I will go multiple contracts down here. I guarantee it. Right now I'm down $300. I'd rather burp and taste it than fart and waste it. So as I wait for this thing to break out,
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Jenny, what are you dressed up as today?
Welcome back to Trading 360. I'm Nicole Petalides. It's time for the Big Three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Scott Bauer, CEO of Prosper Trading Academy. Thank you both for being here. Scott, I knew when we were talking about this show, it's down 26%. I mean, we wake up this morning, you see S&P and everything to the downside, the NASDAQ in particular, right, 1,000 points at one point. Tell me a little bit about this story. Do you see opportunities, or do you get nervous, or what?
I mean, this is a very major pullback. Over the last several weeks, Nicole, there has been a lot of upside buying in the VIX. Even though VIX hasn't moved a lot, there's been a lot of upside call buying. So that was, maybe a little bit of a precursor, but I'm not overly concerned. And here's the reason why. Because you look at the VIX today, and the spot VIX is up significantly. But if you look at the futures curve, if you look at, going out even just several weeks to a month to 3 months out, the VIX has not moved a lot. So this is telling me that this is, at least for right now, something that the market is very concerned about in the very short term, not necessarily down the road a little bit.
Yes, not even above 20, right? I mean, that would be sort of a telltale. Very interesting how we're digesting this. Tell me a little bit about this, Joe, which is down 26% today.
Sure. So, this has been one of the charmed stocks recently in the nuclear sector here. And this, along with Oklo, some of the other stocks, just getting absolutely annihilated today. Now, I liked this a little bit earlier today. Maybe I got in a little bit too early, right around the 50-day moving average, which was right around 150 or so. The 140 area where it's trading right now, that is really the deep target pullback. So I absolutely think that there is a lot of potential, a lot of upside right here. I think we could see 180, 190 actually, if the market just kind of digests the news that's out there and things kind of get back to a little bit of a normal trading pattern, at least
I don't know, man.
seen over the last several weeks. I think the reward
I don't think so.
on this specifically is really, really large.
I don't think so.
Yeah, they talk about the deep-seek jitters, right? Wiping out over $1 trillion in market value. I mean, unless you're actually selling and losing this today, it's all on paper at the moment. And that's why traders look at opportunities for trading. Let's take a look at the charts here. Rick Ducat.
Well, nothing goes up forever, and unfortunately, if you were bullish in this name today, could be rather painful. And kind of like Scott said too, we looked at this chart maybe
It's not cheap as they claim.
or so ago on Morning Trade Live, and the situation has worsened a little bit here. So for the most part, we were traveling within the
I think so too, Christopher.
channel type shape between our two white dashed lines there. We had a bit of an upside push, but for the most part, closing prices stayed within this range. We had a big breakout to the upside that stopped just shy of 200. Then, as I said earlier, the rug pull came. We fell below our trend line. We fell back below all these important areas. RSI collapsed from the overbought area all the way to below the 50 midline, near about 39 or so. And when we talked about this stock earlier today, we were hanging on near this trend line. Now we are pushing through to the downside through that trend line after falling below our orange 63-day exponential moving average, as well as that 50-day simple moving average that Scott mentioned. So now if we were to look at our volume areas and our standard deviation channel study, well, you can see right around here, the area that we fell through. We didn't even really trade in it because of the gap down. 160 is a notable upside area to keep an eye on now. That's where some heavy trading is. There also is heavy trading around that 140 area, like Scott mentioned, but there's a notable spike right here near 127 that matches up with the high point that we had before that gap up. That might be another downside area to watch, Nicole.
Okay, look, you know, the fact that it's worsening and people aren't stepping in and biting and saying, wow, great opportunity, right? I mean, this is also a stock that went from $40 to nearly $200 over the last year. It's been a big mover. Final thoughts on this, John? Scott.
Everything Rick pointed out here, absolutely I agree with. And yes, the rug pull is in. Am I looking to, you know, to catch the falling knife? No, but I'm looking at these levels here, and I think the opportunity here with a limited risk type of position, like I always put on, which I'm putting on a butterfly spread, a broken wing butterfly spread. I know what my max loss could possibly be here. I think there's tremendous upside.
Okay, next up we look at Alibaba, and some of these Chinese stocks are actually higher on the heels of the news on DeepSeek. So this name is up over 1.5% right now as we speak. Take a look here at Alibaba, which is at $90 and change.
Yeah, and like you said, some of these Chinese stocks are seeing some positive reaction here, and even started moving higher ahead of this, you know, over the last several weeks. If I look at, you know, like a K-Web and some of the ETFs, those have started moving higher as well. So this one seems to be in breakout mode ever since opening above the 50-day simple moving average here. And I see a breakout to 94, and it could reach that gap fill up around 100 or so. So I bought a call spread earlier this morning. I think it's a little bit higher right now. The February expiration, 90.95. The stock has moved, you know, away from there a little bit. But I really like the upside here. And this was something I liked even before today's news. If you had, you know, just been watching a lot of these Chinese stocks over the last several weeks.
Yeah, and look, Alibaba Alibaba Cloud revealed some new AI tools just recently on the 22nd of January, I believe, and so that certainly grabbed people's attention. AI tools and language models to empower global developers. So it's always nice to hear some headlines like that if you're a bull out there. Let's take a look at the charts, please, Rick.
Yeah, this one is an interesting situation as well here, because we had this very extended rally here that took us up to 117. Then we had our downward sloping trend line. You could have drawn it along this point here, just kind of the general trajectory here. It was competing with a very modestly sloping upward trend line there. So now we kind of push beyond those two areas. We've broken above all three of our moving averages in very rapid succession. Yellow 21-day, orange 63-day, purple 252-day EMAs. Notice that they're all clustered together, basically almost on top of each other, which suggests there's no clear trend directionality right now. However, the faster moving averages are starting to turn up. They're crossing above the slower moving averages right here, like our yellow crossing above our purple, 21.
Spies at the 200 here.
So the trend is starting to improve. We also broke out of this falling wedge.
Spies at the 200. The QQQ's at the 200. Where's my earning watch list? There it is. So let's go over my earnings. We got Sophie down 154. We got AT&T up today, firming a flag. Then we have Apple, brilliant. Oh, look at that, almost within 2 cents of my resistance level. Intel's got earnings this week. We did hit my low support of 1998 that I called in the video, right to the penny. Bounced up off of it. Tesla's at 400. It can pull back more. Microsoft down $17. It was down a lot more than that earlier. I'm going to go for a little walk here in a second on the treadmill. I got to circulate my blood a little bit more. SPX is going to hit the bottom of that megaphone. We're almost to the bottom of my support channel right now. Let's see here. Some kind of math I can do to get out of this thing. 5.26. Divided by 2. So I'd have to get them at 263. SPX is down at the bottom of my support channel.
Boosted AI. Josh, thank you for being with us. It's amazing how last week we were so excited about the 100 billion and then 500 billion to come to follow up on AI here at home, only to hear some stories, you know, I don't know that anybody's proven them to be true just yet, with DeepSeek in China, that they're just doing it in a big way for cheaper. What'd you make of it this morning?
Yeah, a bunch of different thoughts. I mean, at a high level, it definitely is a cheaper model. Whether or not they trained it at a cheaper cost or not, the cost of inference, the cost of actually running it, is impressively low, given the capabilities that it has. So there's definitely, in my opinion, some major tech breakthrough that has happened there and has big implications. I think the flip side is the market reaction to me almost seems opposite of how we're thinking about it. At a high level, if you can train models for cheaper, then that means that you can train more advanced capabilities for cheaper, which means there's more applications. If there's more applications, then there's more things you can automate. If there's more things you can automate, then I actually think that drives greater adoption of AI. I think in a world where China is catching up or close to us, I actually think ultimately we're going to increase investment over here. And then, you know, in terms of it actually affecting adoption of OpenAI or Anthropic, I think it has almost no effect on them, because at the end of the day, to be able to really use this in a commercial setting, you need to be able to trust the underlying technology. And I think one of the big problems with DeepSeek R1 is it has some very clear political biases. If you start asking it about things like China, you know, for our use cases, if you wanted to try to understand, like, what is my portfolio risk to China, you can't really use it for things like that. Because it'll either refuse to answer or give very biased answers. And so, you know, at a high level, I think it drives acceleration, but I don't think it actually has very many negative impacts.
So, I mean, we're maybe looking at this all wrong, right?
That
if
would
you had
be...
100 billion, that's what you're saying. Like, if you had $100 billion invested in AI in your company, that now that's going to go a much longer way than you thought, and we should say hooray. You know, and meantime, the Nasdaq down 3%. So do you think that these are buying opportunities on names like NVIDIA and Broadcom and Marvell and Vistra and so on and so forth, or even just the triple Qs or something?
Yeah, I mean, just focusing on, you know, NVIDIA in particular, the reaction there seems very odd to me. DeepSeek R1 was trained on NVIDIA chips, and it runs on NVIDIA chips. And yes, it was a cheaper model of chips, but at the end of the day, if that is the new path that everything is going to drive for adoption, again, you're going to expect wider adoption of AI systems. You would expect that would also drive pretty big demand. And, you know, do we think that we're going to start accelerating less because China cuts up to us? Probably not. Probably there's going to be more acceleration. So yeah, I think there's some great buying opportunities today.
Look, I mean, you know, a lot of people may not realize that it runs on the NVIDIA chips, and it was trained by the NVIDIA chips. So NVIDIA may have a very big story here going forward. So, you know, at Boosted AI, using AI for our investment portfolios, AI can pick the stocks better or no?
The way we think about it is more around workflow optimization. So, you know, let's say you wanted to track something like how this might affect your portfolio. In a traditional world, when something like R1 comes out, you might look at a few sell-side reports, do a few expert calls. With technology like ours, you could look at 3,000 companies' earnings calls, or sell-side data on 3,000 companies, and just get a much deeper understanding of the kind of issue you're trying to do. So we think of it as more sort of accelerating processes that are still primarily driven by humans in most cases, and less about sort of doing a better job, more just finding areas that machine can do, can sort of accelerate.
You know, the thing is that the VIX here at 1920, and it is creeping higher, but, you know, folks were saying, why isn't the VIX higher? I mean, we've seen the run to safety in treasuries, and that's why yields are coming down. But tomorrow, are we going to have all green, and we may even forget this knee-jerk reaction?
Well, I won't comment on exactly how the market's going to react from day to day.
You won't.
I'll say from our seat, we have seen some pretty massive acceleration of adoption. You know, Q4 last year was as big as the other 3 quarters all put together, just for my company in particular. I think most AI CEOs are seeing the same kind of thing. So short-term reactions aside, I think there's a widespread adoption, and that'll probably continue to accelerate in 2025.
Tell me about Stargate. I mean, we had a lot of excitement last week when we were talking about OpenAI and the others. We said 100 billion, and then it'll be 500 billion total. We're still on track for that. Do you think that's still an exciting prospect?
Yeah, I mean, I think what's interesting there, right, is the market seems to be reacting, assuming that there's somehow going to be less investment here. But if in fact this really is a Sputnik moment, if this is really like the space race kicking off, then again, I would actually expect to see more.
NVIDIA new lows.
If China's really this close to us, then we're not going to take this sitting down. We're going to accelerate our efforts here. So yeah, I can't speak to exactly what politicians are saying, et cetera, but I would expect you would continue to see increased investment, and that again will just be positive. This thing will just accelerate across the board.
Yeah. All right, let's leave it right there. Josh Pantany, thank you so much, CEO at Boosted AI. Great to see you. Appreciate it. A big day here for AI. Thank you. Coming up next is a tough serve, and Kevin Green is standing by. I'll take a look at Twilio, fresh off last week's
Cat, I have 388.
positive guidance. Now, Goldman Sachs upgrading the shares this morning. Kevin will have the details. He will have an example trade for you. We'll be right back.
Do 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 do. Oracle down. It was getting pumped big last week. Look at that. Off earnings. There's a slap in the face to some of them. Need SPX to reverse. I added on more. A lot more. Break it.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Google down $5. Google hit my low support.
I'm Nicole Pedalides. We are live at the New York Stock Exchange. We've seen the Nasdaq down 3%. The Dow is behaving
This morning.
down to 34 points, but that's not so tech heavy. We have a lot of names to watch here. And in this case, we actually have a bit of good news in developing stories. Caroline Woods is with us, senior markets correspondent, taking a look at Take-Two with an upgrade over at UBS.
Yes, the S&P 500 down almost 2%, but there are quite a few winners today, and Take-Two is one of them after this bullish upgrade from UBS. Shares up more than 1% right now after UBS said it's turning bullish. Upgraded shares to buy from neutral with a price target of 230, up from 175. So Take-Two currently trading around 188 right now. So quite a bit of upside from current levels. UBS analyst says with increased conviction in Grand Theft Auto 6 demand and a robust lineup of other titles, we expect bookings, profits, and free cash flow to inflect over the next 2 years, lowering leverage and freeing capital for accretive investments. Said its recent global gaming survey actually pointed to significant purchase intent and pricing power for Grand Theft Auto. Grand Theft Auto 6, I should say, and they're forecasting $8 billion in fiscal.
I'll be right back. I'm going to let my eyes rest for a second.
In fiscal 26, and then $9 in fiscal 27. So turning bullish, upping their price target. I will say that obviously their last price target is below where it's currently trading, so playing a little bit of catch up as well. Meanwhile, Arete Research also hiked its price target on Take-Two to $200 a share.
I'll be right back.
90, maintained a buy rating. This all happened ahead of earnings, which are next week on the 6th. And I should note, though, that UBS now in the buy camp, joining
You grabbing another one?
86% of analysts now rate Take-Two as a buy heading into earnings. The median price target is $204.50. So shares up more than 1% right now, only about 2% away from 52-week highs. And competitor Electronic Arts actually also higher today, and that's despite getting a downgrade from BNP Paribas and price cuts from Goldman Sachs and Arete as well.
Okay, Carolyn, with a good look there at Take-Two. Grand Theft Auto 6, huge. I mean, I know everybody was waiting forever and a day to get more and more details on that. Okay, thank you, Caroline. Good luck there. How about we take a look also at Twilio? Now, this name had a huge move, and joining me for this, Kevin Green, senior markets correspondent, taking a look at this. A huge move, a 24% move. They had buybacks, guidance. You'll give us some of the details, but what a gap up that was. Now what? With an upgrade, right?
Yeah, we're seeing an upgrade from Goldman Sachs. They're upgrading the stock to a buy from neutral with a new price target of $185, and that's up from $77. They do believe that the company is at an inflection point to the positive side here after a couple of years of compressed growth overall here. Now, they do believe that the ongoing cost-cutting initiatives are going to expand margins here over time, as well as the efficiency measures of the business. And they believe that they are also going to be able to obviously expand their market share just across the board here, Nicole. And this has been a stock that has been completely overlooked over the last 2 years or so, as it did have a lot of issues when it came to top line growth. But they cut a lot of staff, as well as a lot of some of the other business segments that were not profitable. And now it does appear like they have the right side of the ship here. Actually, on Thursday of last week, the reason why we saw that pop to the upside, they did update their guidance moving forward with the revenue projections now for 2025 expected to grow around 7 to 8% on a year-over-year basis, as well as the expanding total addressable market. By 2028, they believe that their addressable market is going to be around $158 billion, which is huge. So AI is definitely a theme for them, but this is a really good turnaround story. That's why you're seeing a lot of optimism, not only when it comes to analysts, but also from investors that continue to try to bid up the stock here.
Okay, so let's hear about the example trade now, because this has been a big mover, and this is a big story when Goldman Sachs gives you an upgrade like that.
It has been, yep. This is a little bit more of a contrarian trade just because it has moved up so far so fast. I mean, it's up around 27% year to date. So if you do believe that there could be a little bit of a pullback, this is a trade example to try to capitalize on that. Looking at the January 31st, so expiring this Friday, the 137, 130 puts. Buying the 137, selling the 130s, doing this for a debit of $2.15. The goal for this strategy is that the stock could go to the downside here. So the max loss is going to be the debit paid on the trade, $215. Max profit, $485 with a break-even point of $134.85. Once again, this is just to try to capitalize on a potential retracement in the stock, especially if the market, as far as the broader equity market, continues to see a little bit of pressure, but also gives you the ability to try to adjust the trade or maybe remove the trade if it goes against you, Nicole.
All right, Kevin Green, great to see you. Thank you so much. A good look there at Twilio, one of the names with an up arrow that people can focus on. Amazing. We just had two names that got upgrades that have up arrows. So not everything is down. It's really tech that's getting hit. And then we're going to talk about telecom in a moment. So that's coming up next in our 360 round. We'll discuss AT&T, Verizon. These telecom companies have reported some earnings, and even subscribers were growing, and that was a good piece of news there. Let's hear more about it. We'll be right back.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk Our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. It's time for our 360 round. We take a look at both AT&T and Verizon. And there are some real bright spots in these telecom names, but a name like Verizon, for example, has a really choppy chart. Jeff Kagan's with us, wireless and telecom industry analyst, columnist with RCR Wireless, and Frances Newton-Stacy, economic strategist, chairwoman, Global Digital Finance Committee. Thank you both for being with us. Frances Newton-Stacy, let's start with you. Some of your thoughts on some of the numbers that we're seeing from these two companies. And do you put them in the same basket or very different?
Well, it's very interesting because generally speaking, from a sector perspective, they're in the same basket, but the differentiation, of course, is Verizon has a slightly higher dividend. Verizon finally beat on revenue where the previous 3 quarters that had missed, but AT&T's got this bundling package with its fiber, so that's a unique product situation that Verizon isn't able to offer. As far as, the AT&T stock is a little bit cheaper. They both have a very similar chart pattern. I would look for Verizon to hold 39.06. I'd look for AT&T to hold 21.88 on the downside. Just look at those technicals. But pretty exciting compared to what's happening with NVIDIA today.
Yeah, I mean, they are different. It's true because the AT&T does have some news about beating and the subscriber growth, and they're saying there were some real positive signals there, particularly for smartphone upgrades and things like that. Jeff, what did you make of all the news that we've heard?
Oh, good morning, Nicole. Generally speaking, the wireless industry is a very strong industry. It's needed. It's been with us for 50 years, and it's going to continue with us forever. There's always ups and downs in the marketplace, and the industry has gone through a terrible decade of lack of growth in all these new areas. But in the last few years, we're seeing recovery from AT&T and from Verizon. So I'm very pleased with the performance that they've been showing recently. T-Mobile came up from nothing from 10 years ago, and they're still in the wireless business. AT&T and Verizon are in the multiple businesses, and you've got the wireless side and you've got the wireline side for both broadband and data services. But you also have to look into the future. The wireless industry is not going to stay the same. Tomorrow, it's going to look very different. We have all these new technologies that you were talking about, but just before this, you know, with AI and with quantum and with IoT and with wireless broadband and with private wireless. There's all sorts of new services, new growth areas. And the question is, who is going to understand this new marketplace? Who's going to understand all this new technology better and be able to profit from it a year from now, 5 years from now, 10 years from now? Because the marketplace will look very different a few short years from now.
Yeah, and look, you've talked about that. I mean, you've been saying this for some time because there was so much focus on 5G, and you're saying, look, it's not just 5G, it's not just the 5G sliced bread anymore. There's so much more to it. Francis and Stacy, some of your thoughts.
No, I mean, I think that those are all very good points, and you're certainly looking more deeply into the wireless space than I have. But from another perspective, you know, just globally, like, you know, the top-down approach, what's going to be happening with some of the economic outlook, with, you know, some of the market uncertainty around tariffs and trade and liquidity issues that are coming. You need a lot of liquidity to do a lot of refinancing globally this year, and I think liquidity is going to be a big driver of markets in general. And I think wireless, like anything else, is going to be sensitive to that. And then I just think it's very interesting. Of course, next week we've got the Fed meeting. You know, we've got 2 rate cuts priced in for this year. I don't know that either of these 2 stocks are particularly sensitive to that. You know, any surprises? We had Trump before the election saying that, you know, he was going to have a say in rate cuts. He was going to do an executive order. We haven't seen anything on that yet. Made some comments to some reporters recently that he thinks Jay Powell is going to listen to him, and he's demanded that interest rates come down. So we have a little bit of the global macro scene and the backdrop behind these 2 stocks. But other than that, yeah, wireless is strong, and it's, you know, it's holding up today despite tech because it is kind of an old faithful.
Look, T-Mobile too, by the way. I mean, I don't want to leave them out, Jeff, and you could bring in any others that you want too. That's a great chart. Ran up from $158 up to $248, and really so many thought that T-Mobile was the leader. I mean, we think about broadband, you think about 5G, you think about fiber. There was a lot of look to T-Mobile. You know, now when you look at all of these names, do they all seem like they have a good footprint or clear leaders and others to worry about?
You know, we're falling into the trap of watching what's happening this year. We have to pull the camera back, and we have to take a look at this from a much longer-term historical perspective. This is the way the industry operates. There are leaders and there are followers, and they just juggle around. Who knows who's going to be leading a year from now, 5 years from now? We didn't know what was going to happen 5 years ago, and that took us all by surprise. So, you know, these things happen. I think what we need to do is we need to make sure that we look at the wireless industry and the telecom industry separately, two separate areas. One of them is going
plus
to be
means you're getting better than me.
wireless and telecom area, and the other is going to be from all these new technologies, the AI and the quantum and the IoT and all the rest of the stuff that's coming, because that's going to transform the business as well. So you've got the wireless and the communication side, and then you've got all this new technology side. Question is, who's going to be a leader when all that stuff starts coming into reality?
Yeah, and look, we're seeing a lot of selling overall today, Francis. You know, I don't know if you're a buyer of telecom stocks and or a market like a NASDAQ that's selling off in a big way. Final thought, Francis?
Final thoughts?
My final thought is mostly, you know, I utilize the technicals. I don't really have a deep dive into any particular sector. I'm mostly a top-down person, but these 2 particular stocks, in the face of everything that's going on in the short term, but also in the long term, you know, just technically, AT&T just holding that 2188 is going to keep it in an upward trajectory. And then Verizon holding that 3906 is going to keep it in an upward trajectory. And then I agree with Jeff on the long term, man, it remains to be seen.
And also, thank you for that, Francis. And Jeff, you know, the final thought on what's to come, because you keep telling me and you get me, you know, hopped up about all, you know, the next thing since 5G. And you talk about Internet of Things and quantum computing and AI and so on and so forth. You know, what could we see that may be life-changing or very important?
You know, this industry, I'm an advisor. I've been working at this for 40 years. I have.
You said that last time.
Telephone companies, cable television companies, wireless companies, all these companies, they're all wondering, that the CEOs and leadership are all wondering where the industry is going to be 5 years from now, because they need to start preparing now. They need to prepare in advance. When they come out with a new product and service, it actually started 5 years ago. It's not brand new. So they have to know where we're going. I don't have a magic ball. All I know is that this new technology, especially AI, which takes on new characteristics on its own, and quantum, which lets us go to all these different levels and get answers to problems that would take us forever in minutes. So this is going to change. I don't know exactly what the marketplace is going to be will look like in a few years, but I can tell you it's going to be very different from what it is today.
Thank you. Jeff Kagan, Francis Newton, Stacy, thank you both so much for joining us here on Trading 360. I'm Nicole Petalides. Thanks for being with me. Download our free Schwab Network app. It's available in the Apple App Store. I'll see you at 2 o'clock. Fast Market is next.
Schwab Bank Investor Checking, the checking account built for
IWM's got a snake.
And client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking
Go, baby.
account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
I'm thinking it's going to happen soon, but
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Well. Dallas Fed Manufacturing Index 14.1 over versus 4.5. What the heck?
Good afternoon, traders, and welcome to Fast Market here on Schwab Network. I'm Diane King.
That's a big number.
Kevin Hinks will join me shortly.
Doge and Shiba dropped 10% as Bitcoin falls 100 grand.
Is causing deep pressure on the tech sector. Among them, Broadcom taking a hit
I think it's coming.
The AI focus will bring you an example trade. Plus, NVIDIA moving lower on worries about the threat from DeepSeek. The team at Folio will join us with some of their data.
Every time they say deep seed, I'm thinking deep state.
And it's not just all about tech. It's the worst behind Boeing. The stock is slightly higher year to date despite recent revelations of heavy red ink. Let's widen out though and get a check of the broader market just after noon Eastern time. We are still continuing to see some pressure, but we're not at the lows of the session. You're looking at the S&P 500 off by triple digits down 8% right now. Blue chips have been fluctuating around the flat line. You see that
We've held that support level 3 different times. And we got to, I don't know, kind of thinking we'd see the bottom of that megaphone, but
small caps under some pressure still. Russell 2000 down about 8.
I got a real good price on these right now, so it's got to see if it breaks out.
We've got you covered from exchange to exchange. I'm here at the New York Stock Exchange.
I got a little bit of money in it.
Over at the SIBO. Kevin, I know you and I have talked off and on throughout today, but what we're seeing in terms of today's market action is it seems like, I don't know, it feels a little bit like an overreaction, but I don't want to underestimate the impact from what we're hearing about this new AI venture in China.
Yeah, good to see you, Diane. Yeah, first thing, as if we needed another catalyst this week to cause any volatility. We're going to have a lot of data, we're going to have a lot of earnings, and then we start the week with this. How many people closed their computer last Friday or shut down their platform and didn't know what a DeepSeek was? How many times today is that name going to be mispronounced for deep everything before they get it right? So what everyone's trying to do, Diane, is figure out, is this a real threat? Remember, they're not a competitor of NVIDIA, they're a customer of NVIDIA, but it comes down to cost. Can they really do it as cheap as some of the reports say they can do it? Can they use less chips? Can they do it for that $6 million?
I'm about almost even.
Which frankly would be a game changer. But there's big risks that, number one, all these things are happening, Diane, but remember, it's a Chinese company. How many U.S. companies are going to let a Chinese company do their AI? I wouldn't. So it's really interesting how this is going to play out over time. But the initial story, Diane, caused uncertainty and doubt. And that is what's hurting a lot of these names. Everything tied to AI is down today. NVIDIA, Broadcom, 2 names we're going to talk about. Maybe the biggest hit, the largest hit. I've got NVIDIA down almost 15% now, Diane. Incredible movement today.
Yeah, certainly some incredible movement, especially when you think about all the bullish sentiment we had around. It started resuming the halo effect around these stocks last week. But I think it's a good time to bring in Alex Coffey, joining us today, senior equity contributor and co-host of Next Gen Investing. Alex, when you think about what we're seeing in the markets, let's start out with kind of your views on equity price action. What strikes you the most?
Yeah, thanks for having me, guys. Good afternoon. When I look at this, I just see this as a deflationary shock to a market that was worried about inflation. So it goes to show that the kind of side of the boat can get a little bit
Oh, what was that?
and there was so much fears about
That's a big volume spike on something there.
fear about a stronger dollar. Well, news like this is actually quite the opposite. This was something that was deflationary to the market. You can see that reaction within the treasury market. You can see that reaction within things like the dollar, and all of this, of course, putting a little bit of
What the fuck was it?
perhaps to that AI, bubble, if we want to, kind of clarify or classify some of the price action over the last few years as that. These names don't have a lot of room for
SPY had a big volume spike here.
less demand or the same demand but at lower costs. That's not a recipe for strength in a name like NVIDIA, which has, of course, a lot of kind of concentration risk at the moment for this market.
Yeah, it does seem that that's one of the risks that we've been, kind of moderating. But Kevin, I want to ask you, when you think about the reaction to this news about DeepSeek, where we don't even know a lot, and you just pointed out it's a customer of NVIDIA, I've seen that as well. Is this reaction just overblown?
Yes.
I'm not an analyst, so I don't know the valuations, but I've been listening to news reports similar to what a lot of investors are doing. And when you start talking a forward PE of NVIDIA getting...
You're not an analyst?
20s, and still, remember, all the news we
What the heck are you then?
about CapEx spending from Microsoft, $80 billion, then Stargate, $500 billion, and then just Friday,
Mr. Hickey.
Meta Platform, $65 billion. Think about this. Did Meta know about this when they announced such a big upgrade in spending? Did they know this was coming? If not, what is it going to do to CapEx spending? Because they upped it from the mid to low 50s to 60 to 65 billion dollars. So I just see this as it's got to play out over time. I don't think that NVIDIA can even comment on this. I think they're in a quiet period now. It's very possible, but I'm waiting for some answers to this. Right now, just a lot of speculation, a lot of unknowns about what this is turning into. But wow, a lot of people, when you saw NVIDIA, breaking 150, moving towards a high of 153, didn't think they were ever going to get NVIDIA close to $120, but it was actually lower than that for a while today, Diane. So I think this is a pretty interesting, some analysts are already calling it a buying opportunity. We'll see. The VIX was 21.5, now it's 18.5. So, some of the volatility has eased out, some of the tensions have eased, but boy, this, as like I said, Diane, as if we needed more catalysts to trade this week, this is just another big one, as you know.
Yeah, indeed. And Alex, you made the point about the pendulum swinging to this idea of deflation, but I mean, it's almost like we forgot the potential impact of presidential policies on inflation. Like, to me, it feels like that's kind of, I don't know if it's just like a one-day backseat thought process now for the markets. But Alex, what do you make of that? I mean, it doesn't seem like that is gone as something to be taken into consideration.
Yeah, I don't think I meant to be dismissive of that. I don't think that I think that trade policies and, cost of commodities and things like that really have much to do with this. I think this is an isolated piece of the market that has pretty steep valuation, a lot of growth priced into it.
You got to trade smart, that's for sure, in this market right now.
It highlights just how much downside was potentially there. I mean, it's not to say that you're going to have, significant more downside in these names, but this was just risks that was, I think, highlighted. Whenever you're piling on to these uptrending kind of momentum-driven names, it doesn't take much to change that story. And so, not to say what goes up very quickly comes down very quickly.
Yes,
in some ways,
that's what I just said.
That's what I'm saying when you're looking at some of these names, particularly a name like NVIDIA. Now, it's still a huge winner for many of its investors, and it will probably continue to be when you look at its performance and position in the marketplace. But these are risks that are real and exist in concentrated marketplaces with a lot of news priced in that hasn't happened yet.
The tide is high.
And Alex, one of the things that we heard about this year was to expect the unexpected and to expect more volatility. Now, volatility did spike earlier, but we've seen the VIX come down from the higher level that we saw earlier, where it was about either just above 21 or right around 21. And I talked earlier with KG about this. He said that this is kind of normal for this time of year, but what do you make of what we're seeing in terms of the VIX?
I think it reflects today's action, no doubt. I mean, it's a huge move in volatility today, but we have a big move in market. You can look at the VXN as well, which is the Nasdaq's volatility. You're seeing even, of course, a greater jump. It's up 20% today. When you look at the VXN, it's back over 21, but near 22, which of course is a premium to the 18.5 that you see for the VIX. So again, I think all of this is just a piece of the story, which highlights that while today is an isolated kind of shock to a particular subset of the market, it's the most important part of the rally of the last 2 years, which has been these hardware plays tied to AI and the story around it. So when you have a shock to that particular place, you're going to see it reflected in equity prices. You're going to see it reflected in kind of risk premium that's priced in, which is really what volatility is measuring.
And Kevin, Alex was just talking about things we're highlighting this week. And before we kind of talk a little bit more about the road ahead this week in terms of the earnings calendar, it's not like we have an empty economic calendar this week. We've got the Fed's decision on interest rates coming. But Kevin, how much do you think that will matter this week?
Well, the Fed is not expected to move on interest rates, but I think Jerome Powell's comments in the press conference after
AMD's back down to a double bottom.
The first one post Donald Trump's inauguration in the Trump administration and all the different parts of this economy that are moving. So
We're actually in a good scalping spot.
You get a lot of questions on things like that. So yeah, I think Wednesday afternoon that press conference will be significant. That's for sure. So we'll see how it plays out up till there, but we've got economic data that will focus on inflation. We've got first look at fourth quarter GDP on Thursday. There's durable goods orders. There's a lot, not to mention
earnings.
Tech and all the names were coming out with earnings. So just from
exactly.
a data perspective, Diane,
it's a big
busy
week.
So yeah, there's, like I said, as if we needed something more, we're getting it. So it's going to be a great week to be trading the markets, that's for sure.
Front, what's the data point that you think is going to matter the most this week?
Yeah, I think the combination of both the data early in the week with some of the inflation picture that we'll get, but also combining that with the Fed and the message and the reaction too. If you had to choose one, I think anytime we hear from Jerome Powell in an official capacity, it tends to have big moves for the market. You recall back to December, that's really what spiraled the market then. So this will be the first time we have an official, meeting from the Fed since then. We'll see if they walk back any of that message, which was kind of notably more
spies under the VWAP.
We're going to get.
And then, Kevin, you were just talking about the earnings that we have on tap. I mean, it's a huge week in terms of the Mag 7. We've got the Microsoft, Meta, Tesla, Apple. What are you anticipating? I mean, you said when we started out this show, it's not like we didn't have any catalysts set for this week. How critical is it for them to perform or even outperform in terms of their numbers, Kevin?
Sure, well, Apple, let's just start with Apple. A stock that went from $260 to $220 really quickly. Now it's actually up today, up to $228, but still $30-some below its all-time highs ahead of their earnings event. So that is a catalyst. Boeing is a catalyst tomorrow morning. I think that's going to be interesting. Ryan Ayers, CFO, came out. We're going to talk about Boeing later in the show, but there's been some positive news there. That was up most of the morning. Now it's only down, less than, right around $0.50. So it's having a pretty strong day after they pre-released their earnings. But then Meta Platforms, so many conversations are going to focus around CapEx spending on all the, you've got, just think on Wednesday afternoon, Tesla, Meta Platforms, Microsoft, IBM, Lam Research, at least 3 of those are going to talk about CapEx spending and how much they're spending on AI. And does this story change that?
Spies back at resistance.
For them? And then, it's technical things like, remember the 200-day moving average in NVIDIA that hasn't touched forever is $121.77 on the Thinkorswim platform. It hit that today. It's now trading below that. So there's even significant, even if you're a technical
Slid 2-3.
There's significance there.
I'm gonna put on a jacket.
There's so many stories, Diane. It's almost like you have to pick the one that means the most to you and trade off that.
And yeah, that's a great question about picking the one that means the most to you. But Alex, when you think about the setup for this week, what one means the most, or is it as a basket when you think about the mega cap tech stocks? Are they the most critical in terms of performance for market sentiment? And then I imagine, we're going to hear on these earnings calls, we're going to hear analysts asking them about DeepSeek and what they're doing about it. I mean, we've already heard reports that Meta's got war rooms that they're establishing about this. But what are you bracing for, Alex?
Yeah, I think today complicates it just a little bit, and I'll explain why. But first, the answer is, those 4 names matter the most. And whether it's a basket, especially if they start going in the same direction. You can see what that risk looks like in the market today when you start stacking big down moves or big up moves among some of these companies. I think Tesla coming into this week, I thought would have been the one that made the most sense from a sentiment standpoint. Where it went might have kind of given us an idea of what the momentum sentiment was on that front. But Microsoft, Apple, from a consumer and just general size standpoint are really important. But after today, I think Meta has vaulted to the top of the list for me. I'm really fascinated what Zuckerberg and team have to say.
Yes, same. It's so interesting. That's the one that I am very curious about, especially with their development. I mean, on two fronts, with the investments in Llama, how much they'll talk about DeepSeek on their earnings call, and even, what they're doing with regard to the road ahead when it comes to TikTok. I know that won't be as, a large part of the conversation, but I think that will be interesting. All right, thanks a ton, Alex. Coming up, we'll dive deeper into the tech stock sell-off. This is tied to DeepSeek, and we've got to focus on Broadcom next. Shares down more than 10% on the news. Alex Crosby will be back with us, bringing an example trade on the other side of the screen.
No.
Every morning, every trade, always live.
Always.
Earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free.
Really see a few key questions that I hope you can shed some light on. Number one, did it really train the model for $6 million? And I think there's a fair amount of skepticism from those that I've been speaking with, and you, I'm sure, have been speaking with more people than me. Did it really, this model, outperform the benchmark? Did it really outperform OpenAI? Is it really the breakthrough that some are suggesting and the stocks are reacting to today? Can you really do that with less computing power? Do they have more NVIDIA GPUs than they're letting on? Those are the types of questions that I am getting from people that I talk to, so I throw it to you.
So let me break this down, Scott. There's unanswerable questions and there's answerable questions. Let me start with the unanswerable. We don't know if they trained this model for $6 million. The research paper says that they used NVIDIA H800s, which are essentially dumbed down H100s, to do this, but it is possible. DeepSeek was born out of a hedge fund, a quant hedge fund in China that had access to GPUs and a whole lot of PhDs. Now, what we do know, yes, it is as remarkable as you hear. We've been covering this since that Christmas Day drop, which has really just shocked Silicon Valley. I mean, developers, VCs, founders alike, there is absolutely no dispute here. This is a remarkable model. How do we know this? Because it's open source. Everything, most things are published and transparent. That's the beauty of an open source model. So people are quite thrilled. I just got off a conversation with Perplexity CEO Arvind Srinivas, and we were talking about this sell-off and the implications of all of this. And he was saying that, you know, it doesn't mean that NVIDIA is not going to be okay, or the major American AI players are going to be able to recover from this and continue to have breakthroughs, but what it does mean is that the race has really been leveled. So there's things we don't know, there's things we do know, but you cannot dispute, you know, how impressive this model is. And let's say we take, you know, what Alexander Wang, the
CEO of Scale AI, said in Davos last week. He said that DeepSeek had access to 50,000 H100 GPUs. If that's true, they still created this for many times less. It was less expensive for them to create these incredibly impressive models. So this really does open up a new front. And I would also argue that
can you imagine that?
Down 15%. We're seeing a lot of the impact on this in the market, but this isn't just DeepSeek. We've been talking
6 million to build this thing. Can you imagine the billions, the hundreds of billions that these people have been putting in AI? I mean, that would be a trip. That would really, it's kind of funny in a way, but I mean, it's not. Because this market's all it's done is run on this AI idea. I mean, if this is a, you know, true, this could really tumble we could have a real good sell-off. I mean, a real good one. Because you've been hearing me say, man, this is up 300%, this is up 500%, this is up 1,000%, this is up 2,000%.
And we won't know that maybe for some time.
And it's just weird. I've been saying it for the longest period of time. I said, I've not seen any market run like this before in my trading career. It's just so unusual. And Randy brought up the .com era. Same thing happened back then. Stocks were up thousands of %. And only a couple of them survived. And they're cheap right now. And it didn't take long for them to tank.
Microsoft, I mean, to me,
I mean, if and all that government money that was spent, all them trillions, that it'd be wasted. I've always said, you know, the government doesn't spend the money wisely at all. I think they just spend it to get their, you know, everybody rich and they're, you know, vote on these bills and then they get out and we're stuck with paying the taxes on it. But you can't convince that to a liberal.
Of this actually being the beginning of the end for an NVIDIA, because these are like the smartest some of the smartest people in the world. And so yes, the LLMs are going to be commoditized faster, and that can be existential, and it will be existential for certain companies, especially a lot of these private firms. But I think though that the CapEx allows people like Satya and Sundar, Andy Jassy, to now think through, can we be smarter about our CapEx, which to me, Steve hit on it earlier, can be a potentially huge positive for these companies going forward if this open source model is actually replicable to the actually applications that these companies are building.
Yeah. Let me give you one example of how ridiculous some of the reactions of some stocks. Take Taiwan Semi. Right? Taiwan Semi does not have enough capacity. They won't have enough capacity despite the fab they're building in the U.S., the fabs. Does anybody think that this is going to mean less production and less need for capacity at Taiwan Semi, or more? Of course more, because if chips are cheaper. So if I were to buy one today,
Yeah, I got out of them.
That would be it, because the future, which is extremely bright, just got
About even.
You are getting lit up on social media.
I was down pretty much on about $900 and it ran back up, so I got out. I'm thinking about getting back in, but I don't know. We got back to $3, $3.10, and I sold them. I'm bullish, but I'm also starting to think, man, maybe if this is true about DeepSeek, then I can see China saying, we ain't telling you shit. We ain't telling you nothing. You tried to take away our AI and we laughed at you. We come up with something that's 60 times cheaper, 100 times cheaper. I mean, 6 million compared to a couple hundred billion or more than that. And then we were talking about quantum was going to be the big runner this week, and all of a sudden this DeepSeek comes out. Deep shit. And it could be just a false prophecy. I typed in DeepSeek on one of my charts. That's funny. Here, I got DeepSeek in my mind. It just tells you about all them fundamental traders that got stuck. And I've seen resistance on the video at 150. I called it out in the video last week. I was out of it, but they're probably still stuck in it. Okay, here we go. Again, I didn't jump into this time. This is the 5th try with the 4th dip. We get 6007. So here's where I got out before, right here, 310. The 60-20s. What time is it? 11:28. I've spent almost $4,000 on that trade that I was in. But I had to. I even walked away and took a nap. I'm not worried about it. That was kind of strange. And then a phone woke me up. I was right in my deep sleep at the time, thinking about DeepSeek. I don't know how long I was out. Probably 10, 15 minutes. I didn't see what time it was before I went and took that small snap, which is a nap. See, now we're back down again. You got to get what you can. Right before I got out of that trade, I was saying, you know, it's one of them kind of markets. If you don't take profit, I think it wants to break, though, don't you, Randy? To 600634. If it comes back and retests this top resistance and holds, I think it will. $640. Oh my God. It'd be the top of the megaphone. We're having technical difficulties. We're experiencing technical difficulties. Energy stocks hit by AI sell-off following launch of DeepSeek's efficient AI model. China getting ready to have a big move. That damn thing keeps lowering. The 200 is going to come to it before it gets a chance to break out. What's the SPY doing? SPY did break the VWAP. I think we are going to move up. We got divergence. We got bullish divergence. But this is in a minute time frame, so you know it could fool you. Patrick Lamb, Janus Pro LM released by DeepSeek. Christopher's a pretty good trader. Christopher Jones. I like how you talk. What'd you get, Rob? 620s? $625s? Volume slowed down quite a bit here, so it's getting ready to do something. 625s I got in at 2. We just hit the 200 SMA. Through the branches of my dang Jim. Through the branches of the tree out past Window Cemetery. Sitting here watching the streetcars go by. Moon in the night as the light starts to die. Pour my friends a beer. I'm so glad you're here. The ghost of the soldiers lay down their heads, earth for the pillow on wallflower beds, dreaming of Hollywood, dreaming tonight. Let's stand together and have us a bite. Hold my friends a beer. I'm so glad you're here. I did look to see if Mike was here. I know not to sing when Mike is around. There's something about me that he cannot stand the sound. I do my best, I try to sing in tune, but he always leaves before I'm finished my poem. Oh Mike, why don't you like when I sing? I'm trying to bring joy to your heart no one else can bring. So we're retesting. I got a frog in my throat, just can't take it. I got a frog in my throat. We're squeezing again. We need a bounce in the market. Let's break that 200 SMA. I think we'll do it sometime today. It's giving us a little hard time. I'm trying to rhyme. Let's break that 200 today. I went to church last Sunday. I looked at the Lord and said, I'd love to win the lottery tonight. He looked down at me and winked his eye. The preacher come to my surprise and said, Jim, we're not here to make you rich. We're here to take your money. I told him I'd make him a millionaire if he'd let me win the lottery. The preacher looked down at me and said, into my surprise, how would you like to be baptized? I said I was. When I was 13, I became a Mormon and a Christian and an atheist. I'm here today. Get out of my way and win that lottery. Live, Washboardjim. Man, I saw that dip right there and I was playing that stupid guitar. Christopher says on YouTube, he says, bro, you're a natural treasure. I'm laughing my ass off. So glad I found this channel. That kind of made me blush. Well, we're looking at the SPX right now, and we're trying to consolidate. We broke out of a snake, for heaven's sake. We had a little fallen wedge, kinda. And I'm thinking about jumping back in this trade right now. We're back to the VWAP on the SPY, so this would be the place to take it and run it back up. Damn it, give me it. 190. If I can take it here. We're right at the VWAP right now. See if we can hold the VWAP. Hold, yeah. I got some at 175, the 60/20s. Damn it. That didn't go well. Yeah. Baba double topped. The 60/20s are now at 120. Shit. If we don't hold here, we're going to drop more.
All right, Kevin, how would you structure an example trade for Boeing, knowing what we know now? I mean, we basically have all the information about their fourth quarter, and we know that they're putting in this four-pronged plan. We know how much the stock has suffered over the past several years, but how would you go about playing it now in terms of an example trade?
Yeah, Dan, I think you have to be really cognizant of everything that's going on. Like, already today,
Cognitive.
over $178. You've got about a $7 expected move, just under that. So what I've tried to do there, and for the week, you've got about an $8.50 move expected. So if this is what we were talking about, and you got all the bad news out, now you get to deliver your official earnings and then give a positive view of the future. I don't know if that's the case, but if that's what you see as a scenario, then very similar to the trade I did in NVIDIA. Going out to the February 14th, I kept this one a little tighter though, 1 week less. Went out to the February 14th expiration, only 18 days, bought the 175 call, and then based on the expected move, based on the move today, I went out and sold this week's 185 call. Again, dispersion in implied volatility, yes. About a 56 implied vol in the front and about a 38 implied vol out to February 14th. So that, I think we put it in around 560. It's trading about 545 now. So it's traded a little bit softer in Boeing. But Boeing was up for a lot part of the morning today. So I want to watch how it finishes the day. And then this is the call diagonal, the calendar spread family with an embedded vertical spread.
Necessary and third quarter impact on Boeing's production delays in 2025 outlook.
That is long about 35 deltas, collecting about $12, $13 a day in theoretical theta, Diane.
Are you, with this example trade, if it starts to move against you, are you able to adjust it in terms of timing the duration here, Kevin?
Yeah, you can do one of two things. You can roll the strikes down. Remember, your risk defined to the debit paid. But if it were moved towards 170, you could make an adjustment, roll the date of the longs out and down to 170, and you can correspondingly roll the dates of the short down as well. Yes, there's always opportunities, most of the time, there's opportunities to move strikes around if the market allows you to do that. But when the market's open, yes, you can be adjusting strikes as the stock moves, for sure.
All right, well, that was an example trade for Boeing. Shares under a little bit of pressure today, but again, there's overall pressure in the market. But Boeing certainly has been staging in advance so far this year. That's going to do it for us today on Fast Market. I'm Diane King Hall here at the New York Stock Exchange, but we've got you covered from exchange to exchange. I'm here alongside Kevin Hinks over at the CBOE. Stay with us. Download the Schwab Network app. It's available in the
Apple
Apple App Store.
330.
Tune in 24/7 on schwabnetwork.com. Next Gen Investing is coming up.
Yeah. How'd I get that wrong?
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe.
Mara's taking another dive.
Investor checking account is linked to your Schwab One brokerage account. You can manage your checking and investing in one convenient location.
I got that wrong.
Between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Join me, Oliver Rennick, alongside Schwab Network options experts as we explore the second derivative Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel.
Straight sell-off on IWM.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Oliver.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award.
Are still 330 of these names are trading higher.
Yeah, it's well said. Only problem is
NASDAQ ain't done nothing.
a lot of days with
It's
like
still red.
125 S&P 500 names.
Dow Jones is green.
So the way we got here exposed the market to these type of risks. Now, I don't know that this is the beginning of something greater, or if this is just a giant overreaction that is quickly repriced like so many of the dips in recent
This one
years.
seems a little bit different.
Over time, but seemingly, if you use enough of the time frame, all dips have been, as the market was just at all-time highs. How many days ago? 3? So you look at it that way, it could be a healthy pullback. That said, some of these moves are quite big. I mean, 17% in NVIDIA, 18.5% in Broadcom, 7% in AMD. You go down the list, and to me, this is less about the particular DeepSeek platform and what it brings to the table, but more of, wait, is it possible to do this a little bit cheaper? Is it possible that all this demand has been overestimated, that this story can't continue on the path it's been forever? I think that that's a real question that many have been raising for a while. This may be one piece of evidence that finally gave that camp a little bit of something to point to. And then you just look at the market. I describe it oftentimes when you're talking sentiment, you're talking about market prices and valuations and volatility levels as kind of pieces of the puzzle. But in this case, it's one that kind of illustrates a forest that is, let's call it a little bit dried out, let's say. And it doesn't mean that there's going to be a fire, but a little bit of a spark can cause one. And so, said another way, if everything's at all-time highs, everyone's bullish, all this options trading that's happening, low volatility, it doesn't take much to turn things around if there's a little bit of a worry, and today, a deflationary shock out of China.
No, absolutely, and I agree with that.
Jenny looks rough today.
To be so much the focus on this one particular type of AI, because I was making the argument it's very niche. I don't think this spells the overall demand for so many of these names, but I do think that it does set up an interesting narrative now of like the ability to price what AI means, and especially you're seeing that in no industry more so than a lot of these energy names that have really gotten a nice boost on the back of AI. So all things considered, lots to look at today, and lots to like, lots to dislike. We'll break down a lot of these market winners and market losers today throughout our show. We'll kick things off with upvote and downvote. We'll be charting and trading those upvoted names, and for FOMO, looking at one of the most substantial sell-offs, which is that of Broadcom. I feel like NVIDIA has gotten enough of the coverage today, but Broadcom with a near 17% move to the downside. We'll also be looking at so far.
I'm gonna go make a cup of coffee and I'll be right back.
As a result of
I'm still in this, but I don't
I
know.
also think though the overall market is contributing there. And last but not least, we'll talk one of those nuclear winners that is now seeing a substantial right now repricing, down 27% today, is Oklo.
Yeah, no doubt. We talked about it a few times recently, actually with Kevin Green, so it'll be nice to get his kind of most recent update with that. Not surprising that if there's some of this puncture of the AI bubble, that some of these names that are tied to it could have movement like that, so that'll be a fun combo. Looking forward to the Broadcom conversation. We talked about that a lot during Fast Market when I was on there about an hour ago. But let's do upvote, downvote, not endorsements, not recommendations. Starting here with one that is bucking the trend, and that is Apple. Now, one could say, Jenny, that it has sort of bucked the trend recently as well with its recent sell-off, but it's sticking out on my watch list today. It's one of the few names of these big tech players that's bright green on the session.
Yeah, and that was my focus for the top of the show, is I wanted to find names that are still doing well, because my point was, of course, there's still 330 names in the S&P that are higher. I know, to your point, we've also been really carried by those few winners, but today, gotta talk Apple, because Apple is, of course, still higher on the session, actually pretty firmly so, having a pretty decent day. It's one of the 4 names of the Mag 7 that are reporting today on the session, or this week, excuse me. So Apple comes Thursday after the closing bell. We do hear from Tesla, Meta, Microsoft on Wednesday. So a busy week still for tech earnings, and Apple will be no exception. And I think that today, on a bad day for the U.S. tech sector, Apple being this notable performer, is a reminder that even though it's been criticized for its relatively low spend on AI, it might actually make it more defensive in the nature of, right now, fears of an AI bubble or AI spending bubbles. They're right now continuing to stand out for its relatively muted capex and its lack of large data center announcements, which again has been a point of criticism, but I can now understand why maybe that's necessarily acting like a more moat type nature for today. Apple has right now faced a lot of criticism regarding its iPhone 16 and what now the full sales cycle will look like. But so far, iPhones have been able to run various models with right now essentially a low parameter to give that AI lift. But right now, the more AI computing that can be done on their iPhones, I think is going to be seen as a win. So actually, I read the DeepSeek story as maybe a positive for Apple, because it's simplifying a lot of the AI structure and AI cost, which then I think only bodes well for like the ability for iPhones and Apple, frankly, to continue to build on AI without like expanding their iPhone system.
Yeah, I think that all makes a lot of sense to me. I guess I look at it even just simpler than that. The stock's down like 10% for the year already coming into the day. This actually already had some of the selling. So it, to me, allowed for the market to find it as a place of safety today because of its giant cash pile, because of these reasons you're talking about, because it's down 10% over the last month, where these other names aren't necessarily down 10% over the last month. And so it's one to watch. It's got earnings this week, so I think that makes these earnings just that much more exciting now. And, you know, one of its peers in the space, I know it's not a name we're talking about today, and Meta is also higher. And so it's a name that spends a ton on AI, and I think it just makes it all that much more interesting now that we have this DeepSeek stuff going on. Let's talk AT&T, because I'm sure they do things with AI in some ways for an efficiency standpoint, but I don't know what they are. So what's going on with AT&T?
So they had some decent earnings, actually better than expected earnings that were out this morning, as a number of customers who signed up for their plans in the final quarter of 2024 actually led them to outperform. They did see adjusted profits better than expected, also flat from a year ago on sales that slightly topped, and they touted this solid momentum in their gaining profitable 5G and fiber subscribers as far as their earnings were concerned. They did also add 482,000 net postpaid phone customers and 307,000 net fiber customers in the fourth quarter. Both figures coming in ahead of expectations. Mobile services revenue also climbed 3% year over year. Customer broadband revenue was also up almost 8%. I mean, a growth story that you definitely like to see, especially considering that these results come after Verizon on Friday had a pretty nice move to the upside following its quarterly update. So now, seeing telecom names, I mean, no surprise with some upside today, as they're typically, again, more defensive, but definitely defying the broader market slump today, which is a victory in itself.
Yeah, and they also sometimes have a positive correlation to bond prices, and the reason being is these names typically carry heavy dividend yields, and so if interest rates are going lower, sometimes makes them attractive from an income standpoint, as those yields on the dividend tend to be a little bit more stable, so perhaps that could be part of the situation here. But let's talk a little bit on Twilio. This was a big winner for us last week, if I recall, and it was a FOMO name that we talked about. So catching up on it here today, what's going on with Twilio?
Yeah, so Twilio has been a standout. And so if you're looking for a name that is still thriving in the face of tech uncertainty, it's also today Twilio, up another 1.8% roughly, now up
she's hard to listen to sometimes.
Or 29% for the month. And Goldman stayed with an upgrade to buy from neutral. Price target was raised to 185 from 77 following their analyst day. And they said that after multiple years of growth compression and several strategic actions, Twilio is now hitting an inflection point, both in terms of narrative and fundamentals. And they believe the company can observe a potential
Twilio turnaround story is underway. Turns bullish and boosts price forecast
moving higher after we saw a pretty nice
to 188 from 77 bucks.
Friday, where we saw further increases as far as revenue growth, and approximately 11% now revenue growth, well above expectations, on also GAAP profitability that's expected to come sooner than has been.
This thing ain't gonna do it for me.
So a lot to like Friday, and continuing to have a really nice month of January quietly, or maybe not so quietly now, but a name that I don't think has gotten the same degree of attention as so many other winners of tech, but it continuing to propel to the upside.
Yeah, no doubt. It's been a big winner, and it's, again, one of those names to monitor here today. Let's talk this last one, though. Vital Farms. Now, I saw the stock ticker, I saw the name of the company, and I was like, I have never heard of this. And then I was like, but maybe. I looked it up on Google.
Chicken?
And I looked at images, and I saw the container. I get these eggs on a regular basis.
So when this stuff went public, that was exactly what we all did in the newsroom. We were like, what is this company, this fancy egg company? It's frankly expensive. I will say it's definitely serving a more high-income consumer who probably isn't reeling from inflationary pressures that change your grocery sizes or grocery costs substantially, but that hasn't really seemed to matter to this company, as now it's up 192% over the last 12 months. So really amazing in its own right. And it's considered a next-generation food company, which of course is why we had to talk about it on Next Generation Investing today. But it's disrupting the traditional food ecosystem and has successfully differentiated its brand and products, according to analysts at Telsey. So they did initiate coverage with an outperform rating, price target of $52, and said that the demand for eggs is likely to continue to rise given their affordability.
Yes, I was right. Chicken.
Within this category, they expect there likely to be outsized growth, and they did also say that in terms of pasture-raised eggs, consumers are increasingly shifting their habits to more natural, healthy, and ethically sourced products.
Well, hell, they're expensive.
Pasture-raised eggs and farm-to-table digital.
I think we got a plant here in Springfield.
Increased focus on like farm-to-table type initiatives at the grocery store. But again, it's expensive. I will say I'm allergic to eggs. I haven't bought eggs in 20 years, but I do know these eggs are not cheap.
Yeah, well, they're also sold at Whole Foods, and Whole Foods itself is not cheap. But yeah, this is, I mean, I echo everything that they say about it. I mean, for those who value kind of trying to be more healthy, maybe more optimal with their nutrition, this is a brand that I think many will be familiar with. Now, I know that there's stuff going on with, what is it, I don't even know which whatever, bird flu that's going on, and shortages for eggs and things like that. So perhaps that's going to be some sort of a risk to monitor in this space going forward if there are shortages or kind of demand imbalances. But you look at that chart, and it's kind of fun to see.
Can't believe I got in that
doing
trade.
Something as, in many
Really
ways,
thought we were gonna do it.
old-fashioned as just raising eggs and selling them to grocery stores perform the way this one has.
You're absolutely right. And right now, okay, so the H5N1 virus has infected or killed 136 million birds so far since we've seen this, new strand of influenza come and hit the bird market. So egg prices are apparently high, expected to get higher. This analyst doesn't seem to necessarily maybe say it impacts a name like Vital Farm. So an interesting stock. Definitely taught me something this morning, but we'll be looking more at our perhaps tech-focused names today to dive into our upvotes and downvotes. We'll be looking at Twilio as well as Apple for some example trades as well. Stick around, Next Gen Investing. We'll be right back.
It's now 1:13 Eastern Time.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
See for tomorrow? I'd be careful.
Welcome back to Next Gen Investing. It's now time for our Chart Master segment, and so joining me as always is our Chart Master today, Rick Ducat. Walk us through these charts here. We'll start off with Apple, which is, I think, an important PSA.
Own it,
Apple's
don't
up
trade it.
3.5% in spite of the overall market unraveling. So there are still names in the Mag 7 trade that are higher, and substantially at that.
Yeah, certainly a different mover here against the general theme of the market so far, especially for these big tech names. But you're right, a big move, and it actually seems even more noteworthy because you could draw this trend line starting at those highs near 260. Apple is breaking out of this this boundary that we've established during the past couple of months here. Still far short of our relevant moving averages and notable areas of resistance here, but an encouraging
Horrible camera work.
nonetheless. As I said, especially on such a difficult day here. Notice as well that we did bottom out right around the same point of our previous lows that we established there from the fall months, late October or so, near about 220. Held the line there, bounced, filled the gap that we created there, and on pace for a push above that trend line there. Not really any heavy volume or any big spikes or anything like that so far here, but keep an eye out to see if we can close above that trend line and get some noteworthy volume coming in as well, Jenny.
So, okay, when we also look at RSI, are we seeing any divergence, any concern here, or some further upside as far as momentum is concerned?
Yeah, I mean, there was a little bit of divergence, you know, as we were making this ascension into those highs. You can see that RSI did not really follow suit with the price action here. It was more complicated, though, because RSI was in the overbought area at the same time as it was forming this divergence. So sort of mixed signals here. Nevertheless, it did play out to the downside here. And as we look at our more recent price action, you could see this red trend line sloping downward across our recent peaks here, and not quite bullish divergence here, but we can see that we did make a very, very slightly higher level on the RSI during the corresponding price low. RSI did not go into the oversold area, and we did not make a lower close. So a very, very modest bullish signal could be interpreted there, Jenny.
And so, okay, last but not least, we do have earnings out Thursday after the close, but based on the way this month has been, that's going to be about 3 weeks away. At this point, I feel like that Thursday is going to be so far from even now. It's just as far as like trading sessions and volatility is concerned, but still, we have that to look forward to. But as far as the levels we're watching, support and resistance, what are you seeing?
So the area that we're crossing above right now is a heavy volume area, according to our volume profile study, centered roughly around 228 or so. So it's a good sign for the bulls that we're starting to make our way out of this heavy trading area. But there's a resistance level that many traders likely will be having their eye on around this general area, right about here. So we had these old highs here. We had our most recent relative high right there. Those are our two red lines. We've also got
this could get real nasty.
Yellow 21-day, orange 63-day. So between like 235 to 239, there's quite a bit of resistance. We've also got our old
Glad I got out of that one even.
Trend line that was broken, a longer term trend line to consider as well. So that could be an upside area to watch. Then around 247 is a peak during that rally, as well as a kind of very moderate little heavy trading spike in the volume profile there. And to the downside, green line right here, 220, and then we've got another node in our purple 252-day EMA near 216. Finally, quick look at a 5-year chart here. We can see that this is a standout volume area right about where we are now. Seems like just a pullback to this area of importance here, and it's also the site of our 5-year linear regression line, our idea of fair value. So a retreat back to an area that is not really super shocking so far.
Yeah, absolutely, and I think that this is one of the most encouraging ways to look at Apple. I know we've pulled back substantially from those highs, but all things considered, it's still an uptrend. You have to have these healthy, I'd say, moves to the upside with some areas of pullback, which we've seen, of course, in Apple and a lot of tech today. But Apple's still remaining on one of our brightest spots in terms of heavyweight tech today, Alex. So leaning into perhaps more of the same, more of a neutral stance here.
Yeah, we got earnings this week as well, so volatility levels are going to be a little bit more elevated for this week's expiration. We looked at an earnings-related trade. Now, many investors would wait till a little bit closer to that event to perhaps put this on, but say you saw opportunity with the current volatility levels and the current prices to do it now, one might look at something like an iron condor. And you can structure this, of course, in a risk-defined way, but it's a strategy that doesn't require you to be bullish or require you to be bearish, but perhaps just look for the move to be relatively contained through the end of the week post-earnings. And so looking at the 240, 242.5 call in this Friday's expiration, call vertical, and the 215, 212.5 put vertical, combine that's an iron condor spread. We're selling this, so they're both credit spreads, done as a package of 4 for 75 cents. It's a $2.50 wide spread situation, so you have 175 bucks in risk, chance to make 75, break even 214.25 and 240.75. Notably, a little bit closer now on the upside, but you have those levels of resistance between 235 and 239 that Rick talked
January
about.
31st.
Slow price down if it does start to move higher.
Yeah, and we'll have to see, obviously, where volatility settles today, but for now, having a pretty nice session. And our next name today is no exception to that. So we're looking at Twilio, a really, really standout move Friday, but encouraging to see a lot of that same activity transferred into this week, especially with the pullback in tech. I mean, we're up another 1.5% today. Nowhere close to Friday.
That's an iron condor right there.
Now retesting this new range.
Yeah, and you know, after a long period of languishing down here after this earnings event where we had a severe drop off on heavy volume, it may not look like that much because of the scale of the gains that we've seen since then, but that was a rough day on heavy volume. Bottomed out around 52.51, gradually made our way back up above that initial point that we established after our gap down, and then a big push to the upside on our last earnings event. However, the trend line moderated a little bit. From there, you had our blue and our horizontal trend lines. They're giving us this ascending triangle type shape, and we did get a big break to the upside. Today, a bullish engulfing candle is forming. Today's bigger green candle completely swallowing up the previous day's smaller red candle as we make these highs. So all in all, you know, also notice as well, very heavy volume once again during our push up on Friday there. So a pretty interesting setup here, Jenny.
Okay, then I'm curious if RSI is pointing to anything other than more of this strength and more of this really bullish price activity we've seen as of late.
Yeah, you know, you could have drawn maybe a couple different interpretations of a trend line on RSI, but I think both of them would have started from this high point here. You could have gone with the line of best fit, which would be our darker red line going across the peaks here and here and here, and then we had some chop, and then we broke out to the upside. You could also do it from the highs, so from here to here, and either way,
God, that's a huge breakout.
Which way you chose to draw it, neither of them is wrong necessarily. It's just kind of a different way of looking at things. But RSI back in the overbought area after breaking out of both of these possible trend lines that most people maybe would have drawn there. So an encouraging day once again from a momentum standpoint as well.
Okay, so last but not least here, as far as some levels we're watching, we do still have earnings February 13th. So reminder that last week's move was really just a pre-earnings announcement. We actually get the numbers now in a few weeks. So walk us through some levels you're watching as far as, again, some support and resistance.
Yeah, so the first thing to point out here is, remember I talked about we had this very long period of low price levels here. The volume profile point of control, the area of very heavy trading on this chart. I mean, this is where all the trading is, near this level from 57 to about 62 or so, which suggests that this could mean that the bottom was in. This is kind of the way that this would typically be interpreted here, was heavy buying at lows, and then we've had a big rally to the upside. Not really a lot of notable volume to use to make sense of here. Maybe this area, if we were to retreat all the way back and fill this gap near about 114, 113 or so. But for now, we've got our low point that we had after our gap up near 133.51. We've got our +2 standard deviation channel, this orange line near about 136.77. Then our red line, +3 standard deviation channel currently near 156.67. These are some potential guidelines to watch. Remember, these are moving targets. These will change as time goes on here. This is just kind of a snapshot of the current situation here. And, you know, when we look at this longer term chart as well here, a big fall from grace, so to speak, but also a notable resurgence here. We are at the +1 standard deviation channel on a weekly basis, so this could be some shorter term resistance. Beyond that, 173, a low point and then a high point. That's the nearest area of interest.
Okay, so a lot to consider here. And this is a 5-year chart that actually looks quite different than Apple, but I think shows the extent of which we're trying to recover here. So hopefully more of this similar upside in Twilio, which has been a fun one to watch given its outperformance. Appreciate it though, Rick Ducat, our chart master. And now when we trade this name, Alex, obviously a totally different beast in terms of its size, its volatility. At least it's higher today though, which is our theme for the top. So walk us through our thinking for an example trade.
Yeah, you mentioned that sort of dynamic between that pre-release and then the actual earnings event, which is the week of Valentine's Day's expiration. I elected to stay ahead of that, just added uncertainty that a trader may not want to deal with, although I do think with that pre-release, it does take a little bit of the sting out of it. That last chart really highlighted to me that when this stock gets moving in a direction, it can do so for quite some time in both ways. And so if you think this momentum is building for more upside, call calendar spread 150, selling this Friday, buying next. Looking for more upside here, a little bit under 10% to get to that strike. If it happens, potential for profits. If not, $80 in risk on the 80-cent debit. So risk defined. Yeah, you're jumping on the train maybe a little bit late, but if it's moving full speed, you can cover some distance pretty quickly.
That's a good analogy, and there's nothing wrong with hopping on the train too late. I guess it depends on where we go tomorrow and the remaining days, but we do at least have earnings still ahead in Twilio shares. We will leave it there, though, for our example trade, of course, and our charts and trades. We're now diving into FOMO. Coming up next, we will look at some of the unfortunate, most significant losers of the DeepSeek momentum today, as we are seeing selling in Broadcom, Nvidia, Marvell. We'll go through some of these massive moves to the downside coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm.
Not a good day.
Or customized to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're having technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights. I'm Tom White. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time for FOMO, and joining us, as always, to discuss more on some of the, unfortunately, DeepSeek demise of these massive tech players is Caroline Woods, Senior Markets Correspondent for the network. So, Caroline, we were focused on Broadcom, but really it's a lot of these semiconductor names that have seen any degree of, upside over the last several months. I mean, it's Nvidia, it's Marvell, it's ANET, it's all these names that have been such strong beneficiaries of the AI hype, or what was expected to be that. So walk us through the story.
Hey there, Jenny. Yes, a new name, a new word has entered the chat, and that's DeepSeek. I feel like I've said it so many times today and wasn't in my vocabulary until this weekend. So yes, this Chinese startup and its large language model called R1 certainly wreaking havoc on the overall market, especially the tech sector, and really rattling some tech stocks more than others, with the chip space really getting hit hard. You mentioned a few of the names, but Broadcom, one of the worst performers today, down about 20%. Marvell down 19%.
Broadcom.
The topic of a lot of conversation among analysts, down more than 17% right now. But basically on my entire AI watch list, the only two names that are higher are Texas Instruments
Apple
and Adobe right now. So it's certainly taking a hit. Now, DeepSeek claimed to have trained its models on older NVIDIA chips for just $5.6 million. So that less than $6 million price tag compares to $100 million plus that it cost to train the latest model behind OpenAI's ChatGPT. Now, some on X, including
The worst day is, they said, at the 200.
If they're actually using old NVIDIA chips rather than new ones, and others are questioning if that $5.6 million price tag is actually accurate. So there's still a lot of uncertainty around DeepSeek right now, but there's clearly some concern about what impact it could have. We don't necessarily know if chip demand is actually at risk, but investors seem to be a little bit concerned, at least based on what we're seeing in terms of the overall sell-off. I do think that it's important to take a look at what the analyst community is saying as well, and they're much more bullish. They're sticking with their bullish stance, especially as it relates to some of the bigger names. NVIDIA is the name that's called out the most, but Dan Ives over at Wedbush was busy tweeting on X this morning saying the bears are basically trying to scare investors that this is a black swan moment. It's actually the opposite. If inference training accelerates, it speeds up the AI revolution, he says, and then that's bullish for hyperscalers, NVIDIA, and use cases, saying DeepSeek impressive LLM, it ends there. He also points out that according to, in his opinion, that no global, U.S. Global 2000 is going to use a Chinese startup to launch their AI infrastructure and use cases. So it says at the end of the day, there is only one chip company in the world launching autonomous, robotics, and broader AI use cases, and that's NVIDIA. So saying that this is a golden buying opportunity, kept his outperform rating and $175 price target. Meanwhile, TD Cowen, in a note titled "Less is More, DeepSeek Moment, Not the Negative Market is Assuming," the analyst there says, "We understand the concerns, but this could be the entry point in AI stocks, NVIDIA in particular, many have been waiting for." And their reasoning is that they see little reason that this specific model should be seen as a negative for hardware spending in either the near or the long term, saying let's not forget that just last week entities that have been at the forefront of AI advancement announced Stargate and Meta once again raised capex to power their AI ambitions. So just in terms of some other analyst commentary that we've been seeing, Citi questions whether DeepSeek is actually using those old NVIDIA chips and not the more advanced ones. So they kept a buy rating on NVIDIA and $175 price target. They said that the recent AI spending announcements like Stargate are a nod for the need for advanced chips. And Cantor Fitzgerald actually said DeepSeek is actually very bullish for chip names like NVIDIA, saying despite great angst around the impact for compute demand and fears of peak spending on GPUs, they believe that advances mean Gen AI is closer, and that work will continue on pre-training, post-training.
We're getting back to resistance again.
Future investments in large-scale clusters that will accelerate, and that will
On
only be
SPX.
for AI. So they kept a buy rating and said buy potential weakness from some of the big names like NVIDIA. So certainly seeing that weakness.
SPY broke the VWAP, but it's stuck between the 200.
For some of the names that we've mentioned.
So if it breaks the 200, we'll have a little run, but if not,
almost 17%.
you're definitely at a
right now.
resistance.
Broadcom down about 20%. So a tough day in the chip space, but it's certainly an interesting, new development in the AI story that I'm sure we'll be continuing to watch and continuing to talk about.
What's the feeling there on the floor? Is there uneasiness amongst traders? I mean, I can hear all these analysts spin this as a good thing, but when you're looking at some of the biggest companies in the world down 15, 16, 17%, I have to imagine there's some money being lost today.
I'll tell you, the true sentiment on the floor is Shake Shack was here ringing the opening bell, and they were giving free burgers and fries outside. So it's a hungry and upbeat sentiment because of the free burgers. But in all seriousness, it really depends on the traders that you speak to. Several are still very bullish on the overall big tech story. So it can very much be looked at as a buying opportunity. Some still say it's too expensive for me to actually get in at these levels, so would welcome an even further pullback. So it's not like all of a sudden it's this huge thing that all of a sudden is taking the floor by storm. I just think it's really an important reminder that there are still unknowns out there that can rattle the market, and we're seeing that play out today. And you don't really think about it until it happens, right? So, but if you take a look to bring it back to the analyst community, I mean, we haven't seen any re-ratings or any even price target adjustments based on some of these big names. So still 90% of analysts rate NVIDIA as a buy. The median price target implies almost 50% upside now because of today's sell-off at $175 a share. Broadcom 90% buy, a median price target $250, so 25% upside from current levels. So Wall Street certainly, looking at this as a buying opportunity. I think it just depends on, what will you can't time the market, but how much lower could they go? We'll have to wait and see.
Yeah, and I mean, seemingly, like, NVIDIA still has a over $3 trillion market cap. We have erased, now like $300 billion on the session, but all things considered, it's still such a massive company that I feel like you have to kind of zoom out and say, like, this kind of thing does happen. It's not completely unprecedented, not to say that a move as brutal as today has been is not felt by those that are losing, but I just feel like sometimes with these valuations, maybe we were due for a bit of a pullback there. But I appreciate the breakdown as always, and appreciate the insight, Caroline Woods, senior markets correspondent for the network. And so now when we
real quick, I think it's important. That number is closer to 600 billion in real time. It's about 573.
So I think it's picking up from
it's a big number. I mean, all of this could be true. We were actually talking about this, I think, at the beginning of the show, but also off air before the beginning of the show. This might be a big nothing, and it might be an awesome opportunity. But when you see a move like this, it also should elicit that feeling of like maybe it's not.
Well, right, and I do think that, like, to my just like brief, 24 hours of understanding of DeepSeek a bit more, I agree. It's either going to be the event that maybe sort of did pop the AI bubble, if you're a believer of that narrative, or it's going to be a non-event, and we really can't gauge what will happen tomorrow or the coming days.
They say fortune favors the brave. It might take a little bit of bravery on a day like this to step into some of these names, but one thing that I think is important also is we kind of transition here to looking at the example trade, and we talk Broadcom, which actually is making a bigger move to the downside, Jenny. Broadcom down 19.5%, is pacing the way for these names, is that you don't necessarily need to be as brave if you use a strategy that controls your risk at order entry. And so with that in mind, I looked at a call diagonal spread in Broadcom.
Hold back.
It is looking for a bounce back. So it's looking for that narrative that, maybe this is an overreaction. Maybe these names were right for a bit of a pullback, but there is still a ton of optimism in the system, and perhaps this is a giant overreaction. If that's the case, and you see a snapback rally over the next few weeks, perhaps this is a really nice buying opportunity. But in the event that it's not, a risk-defined call diagonal spread, selling the February 7th 230 call, buying the February 14th Valentine's Day 220 call. So you're going to need some help from the market. At this point now, Broadcom in real time is below $200 a share. It's 197. So just to get to the long strike, we haven't even talked about the debit yet, you're going to need a near $25 rally at this point. So the selling is intensifying, but it's a $3 debit, so your risk is limited to $300. If that's something that you'd be interested in risking for a chance for some upside if the stock does turn around and snap back over the next few weeks, then this could be a strategy that makes sense. On fast market, for those who caught that, we looked at something that would benefit from either scenario. Maybe more downside, maybe more upside. So there's a lot of ways to look at things right now. But for FOMO in the AI world, Jenny, I thought it was right for us to look at a bullish strategy.
Especially, yes, because given the fact that, Broadcom has been one of those that's been actually pretty resilient in spite of, like, NVIDIA's pullback, obviously, even prior to today. But I do feel like a lot of these names that have been seen as the biggest winners are now taking the biggest losses. Just depending on your conviction, you could figure out the best way to play it. And to Alex's point earlier that NVIDIA's lost now almost 600, I think it's a bit north actually of 600 billion, which does, why this is so significant is previously the biggest market cap loss on the session had been NVIDIA at 280 billion. So today's move, if we closed right now, would be almost double even its worst day. Yeah, record setting, and by a lot. Like, so that speaks to...
And we love to do this. So what's in real time? I love to use Starbucks as my example for this. What is Starbucks in real time? It usually is around 125 billion. Starbucks in real time, market cap, if my screen will load, is $113 billion. So it's losing like 5 Starbuckses in one session, maybe more than that.
That in itself is ridiculous. Yeah, from $3.5 trillion to now, actually
not Starbucks locations, Starbucks Corporation.
Starbucks in its entirety as a company. That's such good context though, because when you see it from $3.5 trillion, it's like you get greedy at these levels. Now we pull back to $2.9 trillion, which to me still seems astronomical, but you're losing, like you said, $600 billion in one single session. We'll see where we close.
Can't afford those Vital Farms eggs anymore.
No kidding. We have to rethink our entire diversification strategy here, but we'll leave it there for our conversation regarding DeepSeek, although we're moving into other areas of this market that are also feeling some impact today. SoFi slipping after its earnings, maybe some disappointment as far as their forward-looking guide, but also one that's reeling in spite of overall tech moving lower today.
trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Trump hit my support level. Dadgummit.
Welcome to Next Gen Investing. Now we'd like to discuss SoFi, which is a Next Gen favorite. Usually we're talking about this for under 30.
We'll come close to it.
Has been too much on the flux, although today with some pressure. I will say, since I've been looking at this name all day long and I've been looking at the chart of SoFi with now such scrutiny, we're down about 11.7%. Now trading at around $15.83. So yes, we are now below our key under 30 mark, but I guess we've sort of been below there. But regardless, what I do find to be so interesting about this move is they just said they had their best year ever. And they had nothing but positive commentary. I mean, I know as far as this guidance, I've poured over these numbers, Alex, and I've seen a slight right now reduction in forecast for their full year and now upcoming quarter earnings. But as far as revenue is concerned, I mean, guidance was still pretty strong. So it's confusing what the street didn't like. I have to attribute it to the overall market.
I was going to say, I think sometimes you're just unlucky, right? And in the case of SoFi and SoFi investors,
VWAP.
this conference
I mean, SPY at over that 200.
Time it could have possibly been. As the market was unraveling pre-market with some of this deep-seek news, SoFi somewhat, tangentially has, some of these inner workings within its financial services offering, I guess, in sort of this future age of, next-gen finance. But they could have said anything, and it's going to be hard to, offset the fact that this de-risking that's happening in the NASDAQ and growth stocks today. The growth aspect of the S&P 500 is down almost 4%. Value stocks are actually up by about 2/3 of 1% today. So it's just in the wrong cohort of things. And sometimes, like one of the terms that Diane used earlier when I was on Fast Market with her and Kevin, was she was talking about, hey, there's a lot of babies being thrown out with the bathwater. SoFi might have just been in the wrong bucket today.
Yeah, because that to me, I think makes more sense, especially because, I mean, you have, again, their CEO deeming that 2024 was the fintech's best year ever. We also did see an initial, 15% drop on the back of these results. So I think that showing the fact that the move today is overshadowing any strength of the company for the first quarter. They're forecasting net revenue between 725 to 745 million, while the street had penciled in around 668 million. So you can see clear beat there. Also, as far as earnings, were expected around 3 cents versus now the prior 5 cent expected. Not a huge miss by any means, and that number is relatively such a small margin of miss, if you want to call it that. The financial outlook for the first quarter came a bit short of expectations, but again, adjusted earnings were really where we saw that, not as far as net revenue. Total deposits, though, grew to $26 billion, and they did add around 785,000 new customers, with more than 10.1 million customers in total. So I think that when you look at the lender that's refocused on really refinancing debt, figuring out new ways to apply to a younger, maybe more next generation type consumer, they've been able to do that. They highlighted net revenue that was up 40% from a year ago. So look at today's move. I think make of it what you will, because of course I think there's not a lot of ways to interpret this market right now. These earnings were strong, and I will stand by that this is right now being, unfortunately, is dictated by the overall market.
Yeah, Herman Chan, who's a senior analyst at Bloomberg that covers banks, basically said SoFi's one-stop shop is winning the young affluent. So this is doing something.
Well, we're going to have an end-of-the-day run on this SPX.
Finding young,
Magnificent. I'm asking you.
With money, getting them in the door early. So as their nest eggs grow and grow and grow, they're already positioned to win key demographics, and they're doing so with sort of this mobile first, kind of digital first element that it has going on. It's, you know, one of those situations where if you think everything you heard from the company,
think we
is a good-
retest
a good
6,000?
story, the price action largely
Double top?
doesn't reflect it. These are those divergences that can be opportunities.
We're gonna
Now,
find
the
out
stock has had a
here
really nice
shortly
run going into this.
if it wants to
Basically
break
rallied
out,
from,
but
just from this year alone, $13 or so on its lows to 18.5 coming into this.
No, it will come back
may
down
have
to
been time for a
59.80.
pullback. But also, I think more importantly, going back 2 earnings ago, it was $6. It went 3x. Not a lot of stocks go 3x without some pullback. So sometimes it's natural.
We got
it's
fullback
healthy,
Wednesday.
Put on there some market volatility. It may have made what could have been
FOMAC.
maybe a 5%, 8% decline look more like 11 or 12%.
Yeah, and I will say, I'm not discounting a 11.5% move to the downside, because obviously if you're in this position, that could be painful. But it actually doesn't look too bad as far as like a yearly chart, because we're still up 108% on a 12-month basis, and still actually higher this year, which not many names can say. They're shedding nearly 12% in one single session, while still actually remaining up for the month and the year. So all things considered, we're still up 160 now, 4% from lows. I know that it's been a volatile name and a volatile chase to this upside, but I think that the financials are ones I'm focusing on here because they actually look pretty strong.
One thing to add to, just for some context, volume weighted average price, known as VWAP, if you just did it for 2025 in SoFi, 1589. We're at 1585. It's basically saying this is the average based off all the trades that have happened. This is the average price so far.
I don't know if there's going to be a retest. I just don't feel it. But
that's
we'll
a
see.
great point, actually. It also, I think, puts into context some of the mass pressure we're seeing today, but we'll leave it there for breaking down SoFi. Now, coming up next, time to talk one of the hardest hit areas of the market today that's reeling from the AI fallout regarding DeepSeek, and that is all the nuclear stocks, names that were expected to help power AI here in the U.S. Oklo, just a few, Constellation down, Vistra, all names that are down almost 30% on the session.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose
This
from
AI
over
stuff's pretty serious.
25 stocks identified by our unique algorithm.
Do 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 do. Apples keeps going up. Dick, got my head them. That'd be nice. The 235s are now at 390. I got out at 228. And that's the Pelosi trade's only doing good today. Da-da-da-da. Oh, I don't have my face up here. Ta-da! Well, we're down here to Head and Shoulders. Again. There's 1, 2, 3, 4, 5 times we couldn't break it. If we break the 200, I think we'll go higher, but and the watch list, I already did that one. That one's my earnings one. It's hard to look at right now. But on earnings, AT&T and Apple and UPS. Now I think UPS will probably pull back now. And Levi this week. What MasterCard is up big. Price target to what? 614 from 584. That's by Raymond James. Came out today. Maintains outperform rating. Credit cards are making a killing because of the high interest rates. Hope they get rid of this Fed. It's killing the poor right now. Just too much. This AI thing's a big deal. At least it shows it today. Dun, 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 dun. Uh-oh, Mr.
You know, big sell-off in tech. Meanwhile, you're seeing some areas showing strength, but really disconcerting because some of the moves are huge. I mean, you're seeing 10 and 20% moves.
Yeah, hey Nicole. Yeah, the percentage moves are big for only 7 of the 11 sectors in the S&P 500 or lower, but it's a who's who on the sell-off, right? Nvidia down 17%. Broadcom, last time I looked, it was down actually more than Nvidia. So, these are the leaders. It used to be, Nicole, anything connected to AI would rally. But now when Nvidia goes up, now Nvidia is going down, and anything connected to AI is now under pressure. That doesn't mean this necessarily has a bad ending. It just means there's uncertainty all over this sector of the U.S. economy right now.
Well, we're at it again, the 200.
Leads to lower numbers in terms of stock prices. So I look at this as...
I got 60, 15, 37 to break.
This means for DeepSeek to come out and change it, and is it accurate? And how many U.S. companies can deal with a Chinese company when it pertains to their AI? There's so many...
Good question.
Questions, Nicole. That said, we have to trade the market that's in front of us, and right now you've got the S&P down 1.8%, the Nasdaq down 3.3%. So a big down day in the market with uncertainty all over the AI sector.
By the way, Josh Pantoni, CEO at Boosted AI, spoke with him earlier today, and because I said, how much of it is true? Are they really able to do this? And he felt that, in fact, that it may in fact be true, and that the market was reacting in the wrong way. For example, look, if you found a cheaper way to do this, right, and you have 60 billion put aside, these tech stocks should be going up because now the 60 billion can be used even further. You know what I mean? Your dollar's going to go a longer way. I thought it was interesting, his take. In the meantime, though, since I spoke with him, at that time, NVIDIA was down 16%, now it's down 17%. You know, Taiwan Semi, my point is we're drifting lower on some of these things than from my last show. So they're not biting. They're not biting. And we have tech earnings coming up, a slew of them this week.
Yeah. Remember, not long ago, Microsoft announced $80 billion CapEx. Just on Friday, Nicole, Mark Zuckerberg, Meta, announced a $65 billion CapEx spend. What did Mark Zuckerberg know? Did he know on Friday what was coming over the weekend? And would that have changed what he was going to talk about or spend? Remember, a lot of the tech earnings that are coming up on the horizon, they're already been established and CapEx levels have already been made. So guidance is now going to be extremely important when it comes to these firms coming out with earnings, and then everyone's going to want to know, is this a game changer? Can you deal with this company? Remember, they are a Chinese-owned company that has unlimited restrictions on this company for what they can disseminate, what they can put out. So I just think the main problem the market has right now, Nicole, is uncertainty. When things become more certain, it still could be negative for these names, but it also could be positive. I just think we have a lot more to learn in the next days and weeks about exactly what this is, this DeepSeek name, what it means for the AI sector.
The conference calls. You know, I just was thinking now, you have some big names. I mean, Microsoft, Meta, Apple, Tesla in the next few days, and there are going to be conference calls that follow those earnings, and the analysts are going to be asking. So while the earnings may be great, the conference calls and the language could be volatile. I don't know. We'll have to wait and see, but I just thought of that right now. Like, we're going to hear from these CEOs afterwards. All right, so we'll have to deal with that when we get that bridge. We'll cross it. Okay, Kevin Hanks, good to see you. Thank you. Now let's take a look at the bigger picture. Timothy Chubb is with us, CIO at Gerard, a division of Univest Wealth. Thank you so much for being with us. Is this going to be one of the great buying opportunities when you see NVIDIA down 17%, Broadcom 19%, Taiwan Semi 15%, and Marvell 19%? Is today going to be one of those days that you say, oh, I should have bought then?
It very well could be, and thanks for having me. I think there's a lot of panic out there, as Kevin was just referencing. There's panic around sort of this fundamental misunderstanding of, did it really cost $5 million for China to duplicate the efforts being made by OpenAI? And the answer to that is no. I also think there's some deep understanding related to some of the actual pricing that was reported, but our team's tested it so far today, and ultimately has been able to achieve quite a bit of similar performances to a lot of the other models. But I think this goes back to some of the comments you were just sharing. This is a good news for ultimately the AI cycle here. Ultimately there's inferencing and there's training, and training has been very expensive. It's why all these hyperscalers have been gobbling up all these chips. But the inferencing side of things really is going to be, I think, a powerful profit driver for many companies that are the incumbents, like the hyperscalers who have been investing so much money. And so you think about ultimately the $65 billion that Mark Zuckerberg had come out with last week. How does lower cost of inferencing ultimately really enable those outcomes that they've been trying to monetize with the AI investments, everywhere from sponsored search results within conversations to the AI agents? And so all of this, I think, is a bit overdone, and means that ultimately the AI cycle is about to get more efficient.
Okay, so look, this may be the biggest buying opportunity. We don't know, as you said. Putting that aside, we do have the Fed. We do have a slew of earnings coming out. What are you advising to clients now based on your economic outlook, your outlook for the markets? You have a new president in office. Are you playing it a little more, were you playing it a little more go get 'em or a little more cautious?
A little bit more cautious. There's so much that drove the market higher last year, and a lot of it we have yet to see materialize. I mean, earnings growth for this year is expected to be much better. We're expecting to see
Amazon had a good recovery,
especially in the back half of this year. I think all of those things are pointing towards more diversification away from the Magnificent Seven. But that's not to say that we don't like most of the Magnificent Seven. there's only one company that we don't currently own within it.
Tesla.
But they ultimately think that's
I bet you
really
that's
beneficial for the rest of the market, the other 493 plus, who will likely see earnings continue to broaden out and accelerate into the back half of this year. So
Tesla held my support
as others has been, with
in the triangle.
has been U.S. exceptionalism. I think that remains the case and gets even further entrenched this year. Issues in China, debt demographics in Europe, they're well understood. And I think tariffs and some of the trade-related policies that have been proposed by the new administration just cloud that outlook even more. And so we're overweight U.S. and ultimately think that this AI ultimately will charge the bull market going through the rest of the year. But it may not be without market volatility.
Damn,
We saw a
AVGO.
lot of multiple expansion last year. Earnings growth from NVIDIA, which is why we saw the stock perform as the way it did. But we need to see earnings follow, and so certainly there's risks with tariffs. Concern about just the timing of them and ultimately the size. But when the rubber hits the road, the economy's in good shape. And although we've kind of joked internally about having an expiration date to our outlook this year as sort of the midpoint of the year, I think the economy, at least for the first 6 months, is really on strong ground, and we'll likely see a lot of this earnings breadth materialize this coming quarter.
So look, you barbell, you have, some of the Magnificent Seven, you have some other names that you brought to us today that I definitely want folks to write down, have the opportunity. I mean, one that people know is Uber, and I do want to get to that. But you also have Synopsys, EMCOR, and IDEX Labs. Tell me about these four names, maybe a quick sentence on each, and then we can go into more. If we
just really quickly on Synopsys and EMCOR, a lot of that is being driven by what we've kind of started to see materialize in the last 48 hours with ultimately the news on the AI front. But we're still in the very early innings of the AI story and build out. And so on the infrastructure side, EMCOR, on the design side, Synopsys, very much like Avago, or excuse me, Broadcom as well. But IDEX is really a story very similar to Uber, where earnings are normalizing, and IDEX is a animal health diagnostics company that's really starting to layer in switching costs related to their software that they're providing animal hospitals, which ultimately enables better pricing power for them and certainly a stickier customer base. But like you said, this kind of start, the name we're most excited about is Uber. Uber, throughout the pandemic and before, was really competing heavily, which ultimately impacted earnings quite significantly with Lyft. And so they were trying to get drivers and riders to ultimately stay on the platform. That is no longer nearly as much of an expensive proposition as it once was. They've been able to pull back spending there, similarly to Airbnb as well. Ultimately, a very capital-light business, and one that we think has really the ecosystem to benefit from a lot of the investments that they'll be making in AI to enable new insights and data, routing, and really don't get too concerned whatsoever about Tesla's ambitions on autonomous driving, being that they've got wonderful partnerships with many of the AV names out there, including Waymo, who's significantly outnumbered the amount of miles that have been logged in, say, the state of California, for example, for driverless. Zero Tesla, 3.8 million with Waymo in the last reportable period. And I think ultimately that means Uber's a beneficiary of what will likely come to pass in the better half of this decade as relates to autonomous driving.
Yeah, I mean, look, it went from 87 not that long ago, right, in October, November time, and now it's at 68. I mean, it could go back to the highs, do you think, Uber?
Yeah, I mean, gosh, we're a bit longer term than that. I think earnings will certainly be able to compound in that's 30% range for the foreseeable future, and that means it's top line as well as the operating leverage coming from the bottom line as well. And so definitely a name that we like quite a bit, and name that we got into toward the back half last year after this sell-off. I think got investors confused about, will they be a beneficiary of autonomous driving? And the answer is yes, and it doesn't matter who wins, Uber will.
We think about power and what we need to power those data centers, right? I mean, it used to be, will we have enough, electricity for EVs, right? We were worried about charging the EVs. Forget that. Right now, we got exponentially need so much more power for AI and the data centers and such. And now I just saw Market Talk as you were talking, it went by, and it said that short-term demand for power is still going to be needed, regardless of what goes on with DeepSeek. And
most definitely.
while you may, and also don't forget DeepSeek runs with some NVIDIA chips, from what I understand, and also was trained using some NVIDIA chips. That's what one of my guests told me earlier today. So maybe that's good for NVIDIA, but that you will still need power. So maybe selling off nuclear power and things like that is too knee-jerk?
Yeah, and those nuclear projects, are 8 to 10 years away anyway. So, one of the favorites that we've long liked in the portfolio has been NextEra Energy down in the Sun Belt. Lots of solar and wind, which certainly will have some challenges from the new administration, but we need power now, and it's readily available from those sources. Nuclear is exciting for a longer term build out here in the U.S., but it's going to take some time. And like you said, there's definitely still going to be power needed, even though these DeepSeek models are going to be a bit more efficient. So ultimately, I think news like today is exciting for the AI cycle, and ultimately really exciting for companies that are already using it within their business that can unlock operating leverage profits, because of their ability to inference at a lower cost on the compute side.
The word must be out because the stock's flat now. It is not, it's no longer down. We're talking about it like it's brand new, but I guess over the last few hours, because, this went down to $70 or so, and now it's back to 72 and change. So Timothy Chubb, a great conversation, CIO, Gerard Division of Univest. Well, thanks so much. Good to see you. Coming up, Options Corner, Rick Ducat is standing by. He will join us to highlight unusual options activity from the day and how investors are looking to trade on recent news from Triple Qs, Micron, Intel. He has real trades for us. Ooh, look at Micron down 14%. We'll be right back.
Micron. Oh. I forgot how to.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Is it MRCN? I don't have Micron on here. No, it's not MICN.
Trading the trending names every day. I'm Tom White, host of Fast
Fuck, I
Market.
can't remember Micron's ticker.
Ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. It's time for Options Corner. We analyze unusual options trades that we're seeing throughout the day. Rick Ducat, lead market.
What's Micron's ticker? I can't remember. Oh, MU? What's that other one? MicroStrategy.
A sizable sell-off today that we've been seeing. We could start with the Triple Qs. Take
Not
a look
Mr.
there, and the chart, and also the trade you found.
It's a rough day, Nicole, but hope springs eternal, because I found 3 pretty big bullish trades in this.
I can't remember what that other one is. MI something, MICR, MICRN,
the broader tech sector, the
MRCN.
ETF here. The trade is a back ratio type of trade. This trader bought 10,000 March 21st. 545 calls, and 20,000, they sold 20,000 March 21st, 560 calls at a 92-cent net debit or so. So that comes out to about a $920,000 debit in terms of the dollar amount. It can be hard to tell if these are opening trades all the time. It looks like this is all opening trades here doing this back ratio. That's the way we're going to approach it for the purposes of presentation here. And this would be a bullish trade. So days to expiration 53, so a little less than 2 months here. And when we look at the risk profile for this type of trade, you'll see it's got this kind of peak in the middle of it.
That one that was up
strike there near 560. That would be the area
2,000% and dropped down to 30.
Downside, not even reaching.
Had that split. I want to look at it. I can't remember the ticker's name. Well, we're at a double top again. See if we break this resistance. We're close to it. $6,001.31. No voice. It's now 1:24, 2:24 Eastern Time. I'm getting that feeling again. There we go. Go, baby. Got out at 195, and I got a couple left. $270. I want 60, 15, 37 is what I want. I'm at 15, 60, 15. Resistance for SPX. What is that thought on the EMA? You talking to me? We got to hold 6,001.37. I don't understand your question. Did I say EMA something? If we hold 600131, we'll go up higher. Not, I think I should sell these. Because we can come back easily and hit this 200 too. Be back down here before you know it. I guess what I was saying is that the 6015 on your chart, I got that from the double top, today's high. Top of that megaphone. Now, if this doesn't hold, we got to get out. I'm going to get out. So I'm still up a little bit of money on these here. I should have sold them up there. Damn it. There. Oh. So YouTubers, this is called a Darvis box, and we've definitely been bearish most of the day. This here is called a Head and Shoulders. You take and run a trend line from that. Y'all probably already know this, but so this was, I was calling 60-15 to kind of hit this triple top up here. 1, 2, and then come up and hit it again. But now I'm going to readjust that resistance to this right here, to that right shoulder line. So if it comes up and hits the right shoulder line, it could fail again. If not, it'll be an easy shot to that 60-15. And this was a megaphone pattern. And then we held that support line at 59.83 and dipped down below it a couple of times. SPX is the only stock I'll trade on the same day. Unless I'm early morning on the SPY. But I won't sit around and trade the SPY after the first hour and a half. Because I don't have luck. Maybe others can, but I don't. I'm just glad to get out of that trade. I was down on it. Kind of depressing. I got it right here and held on to that sucker all the way down and added on, bought the dip. And then she ripped. She went down to 35 cents. I didn't know if it was going to make it or not. The savings account doesn't have to be in the bank. We could just put it in a cookie jar somewhere and hide it. She dropped fast. We're back to the 200 I might take it from the 200. And we got a trend line right here, so we want to draw a trend line. This is called, I call it 1, 2, 3, almost a 1, 2, 3, 4, but so I'll take and draw a trend line from the body of that candle to the body of that one, the next one up, and we could stop right there, and that'd be 1, 2. We didn't touch there, come awful close. And then bam, and we could get another soldier down here, another crow. The crow is a big red candle. And if you get 3 black crows, we had one right here, but that's a spinning top. So I think it could come down and hit that. And I'd set an alert off the body of them candles right there. Now to catch my attention, you might just stop right there. That's called a double bottom right there. That's 3 black crows. Now 60/20s are at a buck. Okay, here it comes. So my alert was triggered. Now I know that this is the next alert. That was the first, second, and then third. That doesn't hold. So the 60 10s or the 60/20s. We're getting close to the end of the day, and I like to be as close as I can be to the money. So I'm going to go for the 60/10s here at 250, 240, 235, 225. Right about now, 230. We'll just see how this works. I got the 60/10s at 230, just one. Well, it didn't work. And lowest possible supports that. I got out of the 20s. Okay, here we go. I mean, it's hard. It's a hard day today. It's not easy. I can usually just go in and out, boom, 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 but these breakouts, they're not holding up very well. That was like a gift there. So this is the 200 SMA on the 1 minute. I trade off this a lot. In case you're not used to, like I said, chart patterns, moving averages, and being in the now. So right about now, I'll add on here. And if it doesn't work, I'll just get out. $155. Now I got 3 of them. Average is 180. $200 SMA. How many ovals do I got? Ugh. Beers. And 5977. Well, that's still quite a ways down. Is that the bottom of that megaphone? We'll go get some water. Fuck. I'm gonna walk out with another day of being barely green. Back down to that support line. Oh, I see what you might be looking at. I got 79, 78, 59, 79. I need 180. I should have bought more right there, 3 more, and it'd been 6, and I could have brought it down to 140, and I'd be out by now.
likely to happen because we'll probably have a variety, we'll probably have some digital reserves. We want to tie some of this to the U.S. dollar to make the U.S. dollar strong too.
Yeah, these are all great points. So as they say, good for the gander, good for the goose. So if Bitcoin's doing well and things are sort of, the path has been cleared for it, as David mentioned, it's good for the whole industry. Bitcoin's about $2 trillion, the whole industry is about 10. Those Bitcoin moves, the whole industry moves. Right, so let's start it there.
Well, you think so?
I think that the latest executive order from President Trump is quite promising. One thing it mentions is the potential creation, the assessment of potential creation of a digital asset stockpile. And the thing about Bitcoin that's very beautiful is that it's a fixed supply asset. So if you have the U.S. publicly establishing a national stockpile of Bitcoin, it would be sort of the first major country to publicly do so. I mean, other countries like El Salvador, Bhutan have done this, but by the U.S. sort of planting the flag, they're signaling to the entire G20 that this asset class is here to stay. It has, as David mentioned, a very healthy asymmetric risk profile for sort of asset diversification or portfolio diversification. So it makes a lot of sense. And what that does is it puts the U.S. in pole position as far as sort of the big G20 countries for crypto innovation. So, this starts with Bitcoin, but as this asset class matures, and as you have things like stable coins come online, which does, 10 to, I think yesterday did $200 billion in daily volume of stablecoin transactions, as the US dollar becomes dominant in stablecoin formally via stablecoin legislation, which Cynthia Lummis has put forward, others have put forward, that will sort of really, really pave the path for this whole ecosystem beyond Bitcoin to really open up. And we're very excited about that.
And look, Coinbase's co-founder and CEO Brian Armstrong really making the case for Bitcoin, in fact saying that it's a better form of money and that it should be included in government reserves. Really trying to normalize it even more so. David, what do you make of that? I mean, do you see Bitcoin at 150,000?
Yeah, I mean, I think, look, Ray Dalio has published a lot of stuff recently. He's putting a book out again. And as he talks about it, gold and Bitcoin are non-debt money, meaning there's no counterparty risk. We all learned those lessons from 2008, or we should have learned those lessons from Lehman Brothers and that. When you give money to a bank, they can rehypothecate it and do things with your deposits and lend it out, perhaps in a bad way. And I think that in the case of Bitcoin and gold, it's non-counterparty money. It's your money just because of their scarcity, their durability, the fact that it's yours and you don't have to rely on someone else's well-being. I think that over time in this debt-driven world, you're going to see more and more Bitcoin and gold trading that way. I think you're going to see more assets coming into the space. Right now, gold and Bitcoin are only less than 1% of global financial assets. In 1980, gold and silver, which were the sound money stores of value then, those were 8% of financial assets. So while you see a day like today, gold and Bitcoin are down, trust me, if we get into a recessionary cycle or a debt problem, you'll see these asset classes go. And to answer your question, yeah, I think over time, I think Bitcoin's going to compound at 25 to 35% per year, average compounded annual growth rate. And so, yeah, it's hard for me to make a prediction on price or a date or a time.
Right.
Over 5 years, this will be a heck of a lot higher.
Yeah. Well, Trump's team, they've been working on a Bitcoin stockpile and other changes for crypto, but certainly trying to get something here in the U.S. even more so. Good to see you both, David Foley, Joe Dahl. Thank you. I'm Nicole Petalides. Thanks for being with me every day here, 11 a.m.
Oh, no problem, darling.
Network. Get the app in the Apple App Store. Do it.
Everybody knows in my room that I have a crush on you.
Oliver Rennick next.
In our room.
Schwab Bank Investor Checking. The checking
Blanket.
account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account. Plus, cash management solutions. All
Give me another
designed for
couple
investors
$100
like
bucks.
you, with unlimited ATM
Now,
fees,
see, we're back at that
cash
200.
withdrawals worldwide. No overdraft.
Once you break down below it, it becomes a new resistance. So everything that was support that I called up here now are new resistance levels. We could add another one right here for confirmation, but that one there would probably be the hard one right there. So I could get out even here in a few minutes if it has a little bitty bounce, or I hold on and see if we can get up here. I think I'm going to hold it. This is called a symmetrical flag out of a snake. You got that big knife. This is a symmetrical flag. And that 200 again becomes, see, you can tell, and this is an inverted hammer, so that's kind of bearish. Damn it, I should have got out. 165. I could have saved a lot of money there. Oh well. There we go. Use a ticker, yeah, but I was trying to think of that other one. MICR, MIC something. MC. Might have it on another watch list somewhere. MICR, it's remember it ran up all the way up to 1,000 and I said we were going to pull back, and it pulled back to like 400 and then had a split. I thought I had it on this watch list. It's not here. Micron. see. Damn, I can't remember. It's bad. Maybe it's, oh, I know where I can look. Is it on my AMD? No. SMCI. SMCI. Super microcomputer. We went down below the pivot point today. I had 29.90. I was looking for that. But this AI also. So we could probably go deep down farther now. But this one ran all the way up from like $30 all the way to $1,000. Might even been cheaper than that. Well, after the split, 341 all the way up to 127. That's a huge increase. And I laughed. I thought it was funny. I mean, went from like $30 all the way up to 1,000. How did I pull that out of my hat? Well, I had it saved over on a chart. I'm glad I had it on this chart right here. So this needs to change to a, away from a Tesla into a, I'm going to put in the video on MU on here. I don't got MU up. Yeah, these runs ain't holding very well. Come on, baby. I need 180. This is my target. $66,001.31. It's hard to get that even probably today. I like that big fat candle though. Break it. Jeez. We've got, it's 211, 311 right now. Hello, Zona.
week on earnings.
And we get those before Apple, which I think also makes it even more interesting.
Because I think they were one of the ones that just kept spending money, money. And if it turns out you can do all this for cheap, then suddenly it does kind of look like wasteful money. So, all right, it's not over today. The fact we have earnings this week, we'll get an answer. I think
yes,
how
we
the market
do.
thinks about the stuff. Thanks, Jenny. Good perspective. Appreciate the updates on the story throughout the day. Of course, don't miss Next Gen Investing coming up. Martin Norton joins me as we look forward this week too, because we got Jerome Powell on deck. We got inflation at the end of the week. We got a lot beyond a little AI freak out.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Market on Close. Stocks trying to firm up with the Dow leading the way. Russell, though, back to the lower by about 1.5%. We've got a lot on the plate this week beyond this AI competition. Martin Norton joins me from Empower, Chief Investment Strategist. Martin, great to see you.
Good to see you.
We got a ton this week.
Ton.
This feels like a fun beginning because I feel like a lot of people are looking at this. The stock bulls have been very much a controller going, beautiful opportunity. But then they're not coming for a few of the key names. So that's the first part that I'm kind of scratching my head on. The second part is like you got bonds down ahead of a week that could easily send bonds the other way.
It's true.
So how are you thinking about it?
Well, you know, I think a lot of what we're looking at, whether we're thinking about the economy and inflation and labor, or whether we're thinking about AI, a lot of it still has its roots in valuation. We've seen the market, the equity market, get bid up and up and up, 2 back-to-back years of 20% plus gains.
Yeah.
A lot of that led by NVIDIA and by the Magnificent Seven, with really no questioning around the AI narrative. So that's one theme. And on the other hand, we have real concerns that investors have voiced around inflation, around the labor markets, and that's really bolstered and pushed yields higher. So really there's this opportunity to kind of be protective on the equity side and also take advantage of some of those higher yields on the fixed income side. All of that has its home in valuation.
How much of this is a message today of beware heavily concentrated indexed, and that this is not, especially when I think when you're talking with people who are thinking retirement wise, longer term, where they don't want to have to mess with stuff every day. If you have a highly concentrated index position, you kind of are forced to try and tinker with things because it becomes more of an active trade.
That's exactly right. I mean, we point back to over and over again, more than 30 cents of every dollar in the S&P 500 going to these same Mag 7 names. And they're incredibly healthy names, even when you account for the capital intensity that they have with AI. The revenues are very strong, balance sheets are very strong, and yet they're all hinging off this AI growth story. Now, there is some dispersion within that, and I know that you've chatted about that. Nevertheless, there is a real connection to AI, and that means that a typical investor's portfolio that has passive exposure as its bedrock is seeing a lot of concentration risk, and I don't think there's necessarily awareness for that. And that's why we're calling for balance. We're suggesting that, you know, even if you do it on the margin, adding some small cap exposure to a portfolio just allows you to be a little bit more even.
That's kind of what I'm thinking about is structurally, how do you tweak the portfolio then? Is it, you think about All right,
Break
exposure
it.
to different market caps, to smaller caps, exposure to different strategies, or is it like some of these ETFs that'll take
This
the
is
general
1, 2,
S&P
3.
index and do something with it,
Right.
collect income, or do something fancy. There's a lot of different funds out there right now.
There's a lot of different ways that you can, with passive exposure, adjust your portfolio. You can do the small cap route. You can also think about the sectors. Now, as we break down the sectors, I don't know if there's screaming opportunity anywhere in the U.S., but if there is, it's probably more on the defensive side.
Still
of
got
things,
time.
Which isn't a bad offset to something like the tech-heavy names that have been selling off. You can also think about something as pedantic as an evenly weighted S&P 500
Sure.
or market cap index.
RSP's doing great today.
Absolutely. That just kind of, allows you to have a different sort of horse in the race.
RSP right now, equal weight, only down 0.25%.
That's right.
So that works pretty well. Okay, so I think that the last point on equities, we've got earnings this week too. To your point, in these concentrated stocks, where the revenues are coming from, where the earnings and the products are coming from, but how then do we kind of answer their CapEx line? Because there was a long period here the last year and a half, and the market was like, give us more CapEx, give us more CapEx, and that's not really traditionally kind of how it works. They're like buybacks, like dividends, like, there's other ways to do it.
It's so interesting how the narrative has changed. I mean, if we roll the clock back to pre-pandemic, the story for big tech was that these are low capital intensive industries, and
Boing.
that's why they're doing so well. They don't
Break
have to
it.
spend the same amount that an energy company needs to spend to be successful.
Better I sell it
and
now.
we go, post AI, and it's the more you spend, the more successful you will be. And I don't know if history really bears out the fruit of high capital intensive industries.
It's a little too far out of the
Now,
money.
Again, it's not like
I won't sell it.
Meta is now turning into Exxon or anything
Sure.
like that. Still from a...
That's kind of to your point, though. Microsoft is going to have energy exposure. Look at all the money they spent reserving their nuclear power that hasn't even started yet.
That's right. That's right. So there is that angle to it that maybe is changing the business model in its entirety. Still, at this point in the game,
145. Jeez. That's right.
is going to loom especially large because this news is out there. They're going to be responding in real time on a forward-looking basis to how they're going to behave if you have this competitive threat. That, I mean, I was seeing language even as recent as it was a week ago that was saying there is no second player to AI in the global markets outside of the U.S. This is throwing that into question. So I think those guidance comments are going to be incredibly important. The questions that come up. I mean, I think the focus is all going to be here.
It's a huge point. I mean, like we had phrases like insane demand, insatiable, endless.
Yes.
So I guess we really test that now.
Yes. And I guess one other point that I would make is that we're talking about kind of this AI theme coming into question, but that's all in the spend. The use case of AI hasn't been called into question, and that would be more devastating both to these companies and to the economy overall. We're all keying off this idea that productivity is going to improve with AI. So in many ways, while this is bad for the suppliers, this is great for the end users, a cheaper AI, and we don't even know if that's the case.
Totally.
But the very idea of it is positive for the broad market.
I'm so glad you mentioned that. Jenny brought up the same thing. We're just talking about that because the end user is like, all right, we know somebody's stealing our data somewhere. So is it Chinese or the U.S.? One doesn't return results for there was a period there where like Google was bearing results for some pretty serious political stuff on the campaign. And now it's like, all right, China wants to bury the other stuff. It's like, all right, I guess I'm just going to go with whichever one's cheaper.
That's right.
Let's talk the macro stuff then. We got Jerome Powell. We got inflation.
Yeah.
Should we be taking this advantage to sell bonds? Right now they're rallying up 60 bips.
You know, I look at 2025 as a coupon clipping year. I'm not necessarily calling for a real shift in yields one way or the other. I do think it's a net positive that we have yields where they are, and we're seeing that today. We're seeing that nice offset finally come back into play with fixed income. But I think more broadly, what
is remarkable to me is even all these years into this inflation cycle, we still have a focus print by print. Every new CPI print, every new jobs market, it changes the narrative again. And I think the bigger picture that investors need to focus on is the labor market is resilient. That was something no one believed 6 months ago. And inflation still, if you look at the underlying drivers of it, its direction is south. Whether it's as south as we'd like it to get, and how long it takes, those are in question. But when we think about housing costs coming down, when we think about a more subdued labor market, that should be net positive for inflation.
Okay. Last point is Jerome Powell. Does he need to try and give us some more balance than what we heard from last week?
I mean, I don't envy the
Chris
position
Waller.
that he's in. He's going to have to really be thoughtful about what he says. The conclusion is somewhat expected at this point with no move, but what he says around how the Fed is looking at inflation and labor markets, I think that's a market mover. So it'll be interesting to watch how that plays out.
Good stuff, Martha. Great to have you today.
Good to be here.
Appreciate it very much.
There we go.
Chief Investment
I'm out again.
At Empower. All right, ending it on the economic data and continuing and picking up where we left off. After a short break, we're going to come back to talk with the bank CEO after a real solid start to earnings season from financials. We're going to take a look at whether or not any of the tech story will apply to the improved economic and rate situation from a year ago.
Didn't make much money on that one, no.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
I'm done for the day. This has been too hard on me.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my...
Why don't you go ahead and shoot on up? Got 35 minutes left. I made $30 on that trade. 30? That all you made? I was down like 240. There's 195 where I got out. Damn it. $2, 205, 215. There's my 61, $6,001.31. I could have got probably 210. I know I could have got 210 if I held it. And that'd have been $105. If it goes above that, it's free. You're lucky. You got to be a fast scalper. I could have done this one right here for 40 cents. This knife on that one candle. Tweezer bottom on two engulfing crows.
You guys hit revenue growth double digits, as you mentioned, and that was the first time the top line, just the straight sales, had grown in the past year. So it seems like somewhat of an inflection point, and that's from the expansion of the business, or is that for are your customers that you already had depositing more or spending more in any way with you?
Yeah, we're absolutely seeing our customers deepen their engagement with us, and again, I think it comes back to that position of leaning in and really being there to support our customers, which is resonating. So not only are we acquiring customers at a really good rate, but certainly deepening our relationships with them. A great indicator for that for us is what the trends are in our value-added services businesses, particularly our payments, our wealth and capital markets business, all of them growing in high single-digit to low double-digit revenue growth in a really sustainable way. And so just an indication, continue to deepen our relationship with the customers and provide them new services that they hadn't had before from us.
Hey, Zach, you know, I like to think about bond yield curves. I've kind of poked your brain on them before. Just curious, when you have a steepening of 10s to 2s from June through to basically a couple weeks ago, I'm guessing that's the preferred shape of the curve than some of the flattening that we got before and after that?
It absolutely is. You know, if you think about the last 2 years, where the yield curve was inverted, however, you know, it was the longest period of inverted yield curve for 60 years. And that's just inherently very challenging for any financial institution to really, you know, power their economic model. Most of the industry did okay, and certainly hunting did quite well during that time, notwithstanding that challenging environment. But as the curve has begun to get back to a more normal shape, a more upward shape, it's very conducive to bank margins expanding. And so I think, you know, that's a major part to why you've seen the bank stocks rally so much over the last 3 months in particular, ever since the Fed started cutting rates, was the prospect of more and more getting back to a more normal upward sloping yield curve.
Understood. Thanks for the insight, and thanks for the update on the business. Appreciate it, Zach.
Good to see you.
Zach Wasserman, CFO at Huntington Bank, HBAN, up a clean 30% in the last 52 weeks, and financials green throughout most of the session today. Let's take a look at some options, flows, and technicals. Mr. Kenyon Green is on deck. We'll be right back.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab Investing Themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Back at the 200.
Stocks are trying to make some kind of move here in the last half an hour. Bitcoin 2. Mr. Kevin Green joins us for a look here at the session. Crypto is trying to warm up a little bit more than stocks, KG, but the NASDAQ hit a low and then tried to
NVIDIA hasn't.
back. So are we going to get flattened into the close here, or what do you see?
Obviously, we do have some pen risk here at 6,000. So if we kind of go to the intraday chart, we can kind of lay out exactly what's happening here.
Okay.
If you're looking at the upside right now, the positive gamma area, just looking at volume for today, the estimation right now is sitting at around that 6,000 level, which would also then put us at a little bit of pen risk here. If we have a breakdown, 5980 is going to be your area that you would want to be able to hold here. Any breakdown below that, you can start looking at the 5960, 5950 area. You do not want to go, obviously, in that direction.
He didn't put a line on the head and shoulders.
We have a little bit of squeeze potential here to 60-20, or maybe even higher than that. And the reason why I kind of bring that up, yes, we have a lot of put positioning here today, but if we do have a covering event that goes into the close, that could also then create these dealers to buy back or buy into the futures contracts that they're short right now, and that's where you can have a little bit of a melt up to the upside here. Also kind of looking at the market just as a whole here, we do have a interesting kind of cup and handle pattern that's taking place. For the most part, it's a challenging pattern, but for the most part could be bullish, where we have this kind of cup, we come back down, we consolidate a little bit, and then we break out to the upside here. Now that is something that is setting up on that 5-minute chart. So
we have a head and shoulders.
Isn't that great, but you would also have to kind of think to yourself, a lot of aggressive selling when it comes to NVIDIA. Around 88% of the volume was on down ticks today for NVIDIA. So that market on close order probably should skew to the buy side a little bit more than to the sell side, you would think, just because of the aggressive selling, the aggressive put buying activity that's kind of taking place. So I'm kind of looking more for a short covering rally going into the close, hopefully, and not a further breakdown to the downside.
Okay. All right. Noted.
All right.
NVIDIA 118, so brutal. How very little buying action there's been. So, yeah, to your point, maybe one last chance before the close. But boy, they've been absent. The cup and handle, KG. The handle there is. Tell me how that pattern works again one more time.
Yeah, definitely. So you have a push
Yeah,
to the upside
cushioning.
like we had earlier this morning. We come down, we basically consolidate or create a base. We go back up to try to retest the highs that we had on the intraday investment. Yeah, kind of. Yeah, it's not going to be perfect. None of them are perfect. And then
Yeah, that's right. It's not perfect.
Right hand side. That's your handle.
It's a bad idea.
And now we're trying to break back out to the upside. So you're going to test that 60-10 potentially going into the close. And if you do kind of get a break above that in 60-17, you kind of hit that 60-20. So I don't see anything above that 60-20 to give me confidence. But once again, I'm just kind of going on the fact that we had aggressive selling in one of the biggest stocks, obviously, in the market here. And how much more selling can we have today? We could have more. But usually we kind of see these, aggressive buy orders going into the close. That's similar to what we had, I believe it was like Tuesday of last week, if I'm not mistaken, Tuesday or Wednesday, where we had that rally. Remember that 18 or 20-point rally into the close? That's the type of situation I'm kind of looking at for today's close right now.
I do like to watch Bitcoin for faster twitch risk-on indications than stocks, and BTC does say that there might be a little bit of a ramp. Is in terms of downside levels, we zoom out a little bit, Kevin, where does the pain start? Where does the forced selling and or buying start if you look at the big market makers, positions, etc.?
5,900 would be kind of your line in the sand. That would be the last gap that we have on that daily chart. That's where it would get very, very interesting, because we get back into that channel line, and that's where we could actually have further breakdown. And unfortunately, you have a couple of mega cap name stocks that are breaking down in a bearish formation. Obviously, NVIDIA today kind of even losing the 200-day moving average, which is not good. Microsoft kind of testing the 200-day average, which is not good. So the broadening out of this rally that we've had, or this kind of
And you see it? You don't see the broadening out there, buddy?
We did not have the broadening out or other sectors participating. It would be very ugly today. and probably would not have seen, you know, new all-time highs last week. So as long as we continue to have a rotation, I think it still gives you a little bit of an edge to the bulls right now, you know, barring any type of news coming out. But 5,900 is kind of that next area that I'm looking at, where if we do have a breakdown to the downside, unfortunately, then you start talking about potentially making new lows. And completely reversing this counter trend that we have. You can kind of go back and say, though, Oliver, you know, from a technical standpoint, we have 3 waves on the way down. Maybe we're just making that first wave on the way up, which made that new all-time high. Now we're having that counter trend. And that counter trend, you want to basically bounce off right around here. 59.50 kind of gives you that counter trend safety net, if you will, where we could continue to move higher, and that's where we would make new all-time highs and then kind of come back and then push higher if you believe in waves for the market, which I am a believer of. So I'm not too concerned about the market yet. I think we will still have some elevated vol, and what's actually interesting about the vol complex, there's not even that much of a backwardation taking place, knowing that we had a 5% sell-off overnight and NVIDIA dropping over 17%. That kind of tells me either the market is a little bit more complacent than what we expect, or they do not believe that this is going to last for too long. Given the events that we have on the calendar here, it seems like they're saying that it's not going to last for too long here. So that's something that once we do see that backwardation getting worse and worse, or larger and larger, that would probably give you another signal that we have a move to the downside. And tomorrow, we'll see on the E-mini S&P futures the open interest change. If this was a short covering or a short event, we could see that in the open interest change, and we'll also kind of see more ETF fund flows and see exactly what kind of happened today, and if a lot of money actually moved out of the market into cash, into treasuries, or once again, if we just saw a massive rotation take place here.
Okay. Pretty good rally in bonds. Seems like we have to figure out if we believe in waves. I like that. I believe in gravity in the market, so I guess that means I have to believe in waves. Appreciate it, KG. Thank you, sir. All right, coming up, we're going to take a look at Bitcoin, take a look at gold. Both hit today, one harder than the other. A frustrating sell-off for gold, no less, especially on a somewhat geopolitical of an event. Arguably, gold found no love in the day.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds.
Hey, I did hit my number.
Easy. Cash moved to your brokerage account is available in seconds.
Real close to it.
Stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Market on Close. Joining me, Mr. Joe T. Gay, the portfolio manager of the Rational Equity Armor Fund. Joe, we've been catching a little bit of a bid here in the last 25 minutes. Is that going to spoil the true close for us, or do you think we're going to ramp this puppy up?
We'll see. This is just such a phenomenal event. I think we'll remember this for some time, seeing NVIDIA down 70%, one of the largest companies in the market. This just has to be, if we recognize this, something is changing here. It's something that we need to just carry forward for the next few months as we kind of have this all shake out. Now, a lot of it doesn't make sense to me, but if the big picture, if we want to say, hey, these companies have really high valuations, maybe we should take them down after several years of massive gains, I think that's reasonable to me. The fact to say that this whole AI story has gone too far or is over, I think is way, way overblown.
Okay. Hey, the stuff that worked today, and very fair point on that, Joe, the stuff that worked today was pretty limited. Bonds worked pretty well. Dollar grinded its way back. Even though it still is kind of in this downtrend off the highs. What do you like to hedge stocks? If I told you we're going to do this all week, what would you want to be hedged in?
Yeah, well, it was great for me last week to have some VIX futures on. That's always my go-to. Timing is critical, of course, with VIX futures. Takes really good know-how, of course, to get in and out. And then got the signal mid last week, got in on some VIX futures, and for some clients that worked out very well. And now that the VIX has come up, it's time to just kind of wait and see, and just have a portfolio that's going to be able to weather some of these rotations, because there's actually a big rotation happening under the winds today. We're seeing some move into value, some de-risking, so it's very interesting to see this all play out. In a vacuum, you got rates down big, you got oil down big. This should be really good for stocks. Of course, this is not a vacuum.
Yeah, true. What did you learn today about gold and crypto? Anything new?
The same story is holding place now. This kind of is maybe like an anti-inflationary narrative, and so you're seeing gold down and crypto down, so that kind of makes sense. Also, it's kind of a de-risking environment. You're seeing Bitcoin down, and that's normal to see that happen. People are taking some risk off the table, absolutely. But for me, I'm not really seeing a huge, massive sell-off that's saying, hey, there is a big risk or some sort of contagion happening in the market. So it's just kind of business as usual. There's a little bit of waiting, a little consolidation as we're seeing what happens next.
The fact that gold didn't catch a bid, what do you make of that? I mean, kind of a geopolitical element going on here today. Yields went down. Bitcoin got crushed. How come gold kind of got smoked here? I mean, down 1.5% at the lows today.
Yeah, I would say yields going down on the back end are just kind of saying, hey, growth maybe not as high as we previously thought. Inflation's not going to be as big an issue as we previously thought. I think that's a narrative also for gold too. So yeah, I don't think that's that troubling for me. That makes sense to me. And it's still, for me, I do like gold for the long haul, and I do think it's a great inflationary protection. But when you're seeing these prices come down, maybe it is some deflation. I mean, this is kind of the story we've seen for the past 30 years. China coming in with some technology. We're exporting a lot of labor maybe to China previously and getting things back cheaper. But I think another product coming back maybe a little bit cheaper coming from China, I think that's a way big oversimplification, but prices should be a little bit cheaper. Things should be coming down as part of this narrative.
Okay. All right, good analysis. Thank you, Mr. T. Gay. Appreciate that.
Thank you for having me.
Good look at some of the other movers in today's session. Gold got hit, didn't quite work. Bitcoin got hit harder though, so it looks like bonds a 1 for the day. When we come back, we'll close out the market session talking a big picture discussion internationally with Michelle Gibley. Don't miss it. Obviously, an international story began the situation today. We'll be right back.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
I will. 10 more minutes left.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
AMD had some new lows down to 112.80 after it broke down the triple bottom. Nvidia's at the 200.
Today, the shaking markets is the idea of DeepSeek. China's competition to what we've got here at home on LLMs will change the landscape. Joining us, Michelle Gibley is Director of International Research at Charles Schwab. Michelle, great to have you here this afternoon.
Thanks for having me, Oliver.
Hey, in our last conversation, I was kind of teasing this notion I'm working on that in some ways this DeepSeek thing is a little bit of a geopolitical situation. How are you viewing it from your lens on the international analysis perspective?
Yeah, I think that for China, and this is true for anybody, they decided that necessity is the mother of invention, right? It's an old time thing. And without having access to the latest and most advanced chips, they were able to create a new model much more efficiently. And they also used open source, which is really a key factor, I think. And that could be the case for not just China, but anywhere. But, you know, it is definitely a win for China and maybe a wake-up call for, you know, other countries. Whether or not other countries are going to want to have open source large language models is really a question. But, you know, I think it's really just a
open source. I don't even know what that means.
Performance today of the S&P 500. How much reliant the S&P 500 is on AI. And
open source is a model of developing software that
stocks, a lot of the outperformance since October 2022 has really been due to NVIDIA. If you take out NVIDIA, international stocks have outperformed the S&P 500. And really, we still have so much pessimism about Europe in general.
That's where it gets pretty interesting, because it seems like for a lot of end users of this tech, they're going to have more choices. Do you think that there was a motivation timing-wise with the U.S. announcing hundreds of $billions in spending and China going, hey, guess what? We've got a whole bunch of supply
like
coming to the market of
IPs.
our own.
Yeah, that's unclear to me. I think that, you know, if we talk about tariffs in general, I think that's probably where some of this is going to. And some of the surprise may be in how quickly tariffs come and go. And we saw that over the weekend with Colombia. You know, Trump threatened 25% tariff on imports, and Colombia backed down, allowing flights of returning migrants to land. And this is the same thing we saw in May of 2019 with Mexico. Trump announced a 5% tariff to go up in place in 10 days and go up by 25% in 5 months. And it never happened because Mexico agreed to measures to stem the tide of migration. So, you know, right now we're not really hearing a lot about China, and I think It's really just a matter of figuring out where the negotiating points are. And for investors, it would be very difficult to try to trade every short-term announcement rather than trying to take maybe a longer-term perspective.
Yeah. It's a good point on the way so many of these indexes basically have been concentrated, but another case, I guess, for maybe some of the international trade, you don't get that deep concentration, even though there's going to be exposure to it. So we were talking earlier about ways to kind of hedge it. I guess that's one way to hedge it, right? Is like a more international kind of focused index.
Yeah, not only is the sector concentration different, but the valuation is also different. So if we look at the MSCI EMU index, that's the European Monetary Union, the Eurozone, it's trading at 13 times earnings. That's a 40% discount to the S&P 500. And then the three biggest sectors are financials, healthcare, and industrials. That's over 50% of the index, and those sectors are outperforming so far this year. And one other thing I would note is that the dollar is also could be turning from a headwind to a tailwind. Dollar is down year to date, and this is very similar to what happened during Trump's first term. We hear these America First policies, but during Trump's first term, the dollar peaked in January 2019, and so it'll be interesting to see if we see the same thing happen this time.
I like that context. Michelle, tell me about the rest of this week. From your perch, what matters? Because here we've got the Fed, we've got inflation. Internationally, central banks pretty busy too. Economic data, take me through what's on your calendar.
Yeah, one thing I didn't mention is that not only are European stocks outperforming, but European banks are hitting 15-year highs, and European luxury names are breaking out to the upside. And tonight we'll get LVMH earnings, so that'll be key to watch. And then later this week we've got the Central Bank of Canada and also European Central Bank, both expected to raise rates by 25 basis points. And so those will definitely, be interesting to watch for international investors.
Great stuff. Thank you very much, Michelle. Appreciate the perspective.
Thank you.
Michelle Gibley, Director of International Research at Charles Schwab. All right, coming up, we got the bell. 3 minutes away. Be right back.
Got 2 more minutes.
It's your number one broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical
difficulties.
Carl.
Schwab, a modern approach to wealth management.
A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat.
There's the SPX, right at the end of the day.
With Schwab.
Not much of a run.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Higgs. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Alrighty. Well, I'm going to take a break. It's been a long, hard day. We'll catch you all later. We'll see you tomorrow.